Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense force.
I'm not happy with Israel. You know, when I say, okay, now you have 12 hours, you don't go out in the first hour and just drop everything you have on them. So I'm not happy with them. I'm not happy with Iran either. But I'm really unhappy if Israel's going out this morning because of one rocket that didn't land, that was shot, perhaps by mistake, that didn't land. I'm not happy about that. You know what? We basically have two countries that have been fighting so long and so hard that they don't know what the they're doing. Do you understand that?
Well, that last line pretty much sums up what's happening in the world right now.
What did he say? I have no idea. I've never heard the word before.
It was bleep.
I've never heard the word before.
So far, we were completely, kosher on that. It was bleep. But yeah, that's what the world is looking like. Trump goes to bed thinking he's, managed a ceasefire, wakes up and the kids aren't behaving themselves.
Yeah, you can see the frustration. You can see the frustration. Yes, indeed. But, if markets are believed to be the deep insiders, the oil markets are clearly showing that the markets for now believe that the ceasefire is in full effect, or at least a major retaliation from Iran is out of the way. So that is one. But guys, the other thing that happened, it was amusing to an extent yesterday with all this chatter around MSCI inclusion of or reclassification of Korea, and it will bring $4 or $5 billion of inflows, etc. And the mind takes me back. So one, what has happened effectively, and I know we're going to talk about it, but MSCI has not done any reclassification of Korea. Fake news. But the interesting piece was JP Morgan in their note yesterday mentions very clearly, which was widely circulated, and despite that this rumor came about, that MSCI in this year's review is not going to classify any emerging market or developed market. There is no review slated only. So somehow somebody's figment of imagination led to this. JP Morgan had said it is not going to be the case,
Yeah.
So
all I can say is look out for the NDTV Profit handle. That's where you'll get the right news. And this is on a serious note. These are dangerous times.
Yes.
People are trying to propagate things on social media for their own agenda. So you have to be careful as well. Nevertheless, our agenda is to make sure you're prepared for the morning trade. So let's start with what's happening with US markets. Jumped in trade after the Iran-Israel ceasefire. Of course, oil took a dip as well. So you saw a smart closing for all top US indices in trade yesterday. So you saw the Dow up about 500 points, the S&P 500 also up about 1%, and the Nasdaq also about 1.5%. So you've seen a good run in the US markets yesterday. Bond yields have softened despite Jerome Powell's comments on inflation, the 10-year at 4.29%. So this was the other big thing that the markets were tracking, right? The Federal Reserve Chairman was to speak in a Senate hearing, and he makes it clear that the Fed is in no hurry to cut rates. He says, and I quote, "The FOMC's obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem." So clearly eye on the ball when it comes to inflation. In fact, let's hear what he says while testifying before the House.
Near-term measures of inflation expectations have moved up over recent months, as reflected in both market and survey-based measures. Respondents to surveys of consumers, businesses, and professional forecasters point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that would depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored.
All right, crude prices have also tumbled further after Trump says China can keep buying Iranian oil. Brent was around the $67 mark. So, you're seeing a soft kind of actually $76 mark. Sorry, this got mixed up. But, here's what the trend is. China can now continue to purchase oil from Iran. Hopefully, they will be purchasing plenty from the US. Also, it was my great honor to make this happen, says Donald Trump in a Truth Social post. So that's what's kept oil prices in check. Just want to quickly pull up the Asian indices before we move ahead and get Peter Maguire on to talk about what he's looking at in terms of crude. Asian indices look like they're opening in the green. Most importantly, the India implied is looking very, very strong right now, 108 points up. All right, Peter Maguire with us this morning. Peter, very good morning to you. I think once the tension has settled, the age-old problem is back, isn't it? That oil demand is not as much as the supply.
Absolutely, and good morning, Tamana. Greetings from Sydney. Yes, exactly right. I mean, what we've seen over the last week or so has been incredible volatility, huge sell-off as we've seen, and then where we're looking as far as rolling into Q3 and Q4, as far as plenty of supply and the overall theme, one would think, is going to be softer prices as long as geopolitics is stripped out of it.
So therefore, a lot of people, Peter, hi, morning. A lot of people talking about $10, which was a risk premium, which has evaporated pretty quickly. The question is, directionally, does it stay range bound if nothing else occurs below that $70 per barrel mark?
Well, Alex, good to see you. I think it will. I think it's going to be more drawn to the downside as far as price. The overall picture is we've got plenty of supply, OPEC Plus, and of course President Trump being very, I think, anchored on the point of where he sees production in the US. So there's going to be no shortage out there. If you strip out any, geopolitics, if everything comes to some form of order, and he scolded what he said to Israel and to Iran, he's not going to take a back seat. He's told them what he expects to happen from a ceasefire perspective. So I think that war premium and everything is going to be stripped right out. And I think there's going to be further softness, certainly for the rest of this week and then leading into Q3 next week.
Peter, good morning or good afternoon, depending on the time out there in Sydney. But I have the counter question on the upside, right, which is this, that all through these conflicts that we've seen the last 3 years, oil prices largely have hit the top of 85 and come back. I mean, 80, 85, that's the range. Are we to assume that no matter how stressful the conflict is right now, the markets in their wisdom believe that the upside levels of 3 digits for oil prices are history?
Well, Narajan, good afternoon. It is good afternoon in Sydney. Yes, I do feel as though that, $100 is going to be very, very difficult to achieve. You've seen what happens with geopolitics. This is one of the biggest issues that we've seen in the last matter of years as far as over the last matter of days. So I'm not sure that anything really, unless it was dramatically geopolitics and weather outages and, it was a combination of many different factors. But the world we've got awash with crude. There's no shortage. MBS, Crown Prince from Saudi, is very engaged in the whole OPEC process. The UAE, the big producers are there. And I can't see really any point of getting above that $85 handle. And I feel as though with the increase in production, and that's all coming online, it's going to be softer prices, cheaper inflation, and in turn better for the consumers, and certainly for all the men and women on the street that rely on that in India.
I do want to go to the US, and this is a completely different story, Peter, and I'm asking in the context of Treasury yields and in the context of the dollar, and this has to do with the big beautiful bill. Seemingly, the way that it's being constructed would require a significant amount of debt which gets pushed down the road if that gets passed. I'm just wondering about the implications, because global investors aren't going to take that for very long, right? So very quickly, a view on treasuries. Will there be an outflow? And what happens to the dollar directionally? Does it continue to weaken?
I would think the dollar will weaken, and it will considerably. It's back under 98 now, Alex, and we've had a big washout over the last couple of sessions. As far as bond yields sitting at 4.3 for the 10-year, that'll probably come under pressure, depending upon how aggressive Fed Chair Powell's going to be, and of course how aggressive President Trump wants to be. He's now saying that he wants in excess of 100 basis points of cuts. So that's where it sits. So there's really an argument here between the two men and who's going to be the first to blink. Now, there are some Fed members that are saying they want to see cheaper rates by July, and Fed Chair Powell saying he'll probably be pushing it back. So I think that sometime in Q3 we could have some form of launch. But if it doesn't happen, I think Q4 is where you're going to see cuts, September and October.
Thanks so much for joining us this morning, Peter. Always a pleasure speaking with you.
Thank you.
All right, let's talk about what happened in trade yesterday. And you saw quite the big gyration. But before that, let's talk about the flows data. Foreign institutional investors selling to the extent of about 5,270 crore rupees. That was pretty much matched by domestic institutions. That has been a bit of a trend. Anytime that there is selling, it's been matched, or in fact more than matched by domestic institutions. They bought to the extent of 5,209 crore rupees. And take a look at the data for the month as a whole. We're on the 25th, and so for the month as a whole, you have the FIIs that have now moved into negative territory to 3,661 crore rupees on a net basis. Let's talk about what happened in the session yesterday, and pull up the Nifty 50 intraday chart if you can, because that will give you a sense of what I'm talking about, that gyration. You had gains, quite considerable gains at the start, went to the high point of the day and dropped very precipitously after. This, of course, was the rally post that ceasefire announcement in that West Asia region. The fall from the high, the Nifty 50 dropped as much as 1.1%, the mid-cap index dropped as much as 0.5%, and the small-cap index by about 0.4%. The Nifty 50 managed to stay in the green with gains of about 0.33%, but it failed to break out of the range that it has been in. Since mid-May, interestingly, the Nifty 50 has largely stayed in that 700-point range with 25,200 on the upside, and that is where it has been capped. As many as 9 Nifty 50 stocks fell over 2% intraday from the high point of the day. There were calls, and we'll talk about this in more detail, but if you look at the options distribution, you will see that there were calls that were unwound at that 25,000 mark, and they moved. There was writing seen at 25,200, which reinforces that level as a resistance level going forward as well. Broader markets have underperformed, or rather outperformed in trade today, with the breadth encouraging. The market breadth, in fact, favored the advances in a 9:4 ratio. Most sectors ended in the green, led by PSU banks and metals. Defense stocks on the other end of the spectrum dropped quite precipitously and ended down by about 2.4% for the index. Profit taking very visible.
Yeah, but when I think of how the trade setup should be, and I think my mind takes me back to the chart checks that Lawrence Balanco or Gautam Shah, etc., had all said before this whole skirmish started, and they were saying that oil being lower. And other things being constant, in markets are set up for some upsides. And I think oil collapse, therefore, you could argue is the strongest tailwind for the Indian markets. So frankly, you don't need to look beyond that. Just this thing coming as a windfall for Indian markets is arguably the key part of any kind of trade setup, and no doubt in the Indian scene as well. I think the other very interesting thing was the last 2 days, while the large caps may have been iffy, may have been gyrating quite a bit, the pick up and the performance of the mid cap and the small cap indices has been very, very strong. And the very strong pullback in trade yesterday as well for the mid cap and the small cap indices is pretty strong. 0.7% kind of an uptick in the broader markets, which augurs well for bottom up stock picking for sure in trade. And today I thought, we were to talk about the UBS note on MCX quite a bit, but NSE getting the clearance and now currently trading at 2,500 in the private markets. BSE not correcting quite significantly. UBS has this note. Bernstein has a note on IEX today, which we are putting out as well. So exchange stocks are getting a fair degree of attention. I wonder if until the run up to the NSE IPO, this remains a pocket to watch out for. And it might well be the chicken and the egg. Do these stocks rallying mean that NSE in the private market says, okay, hey, in the run to the IPO, NSE should go up? Or will people look at NSE, the North Star, and say, if NSE is valued here, would the others start getting valued? So which way the cookie crumbles, I don't know, but exchange stocks certainly remain in focus now until the NSE IPO.
Just on the NSE's pre-IPO prices that we're seeing, fair warning of what we saw with HDB, where the pre-IPO price and the actual price band was a mismatch. The actual price band was much lower. So you feel for those who went out and bought over there. So just a word of caution. Most certainly. But 100% agree that exchanges will be in focus. Yeah. But
I'm glad you pointed that out, Tamna, because it's a clear and present danger, and I think people should be mindful of that.
And it's not of course, HDB is the most recent case, but you've had several instances, even for Swiggy, for example, where people got in pre-IPO, and the sad part is that people get locked in also for a period of time. So if the stock underperforms in the months after, then you have no opportunity to exit. You will continue to see capital losses.
Thankfully, though, just one point out. Unlike a Swiggy, which might have some cyclicality, I think both HDB Financial and NSE
strong
might actually have fairly linear growth.
It's just not the right price discovery in the private market. That's the problem. Yeah. But talking about HDB, that's definitely one of my factors to watch, because when you have a giant coming in wanting to raise 12,500 crore rupees, and just this entire week, the kind of IPO primary market action you have two IPOs actually opening today for subscription, that can cause a bit of a liquidity squeeze. So we'll have to continue to see whether we see low volumes in the cash market. That'll lead to a bit of range bound trade. We saw that pressure coming in yesterday. You had a huge knockdown after markets crossed 25,300. Now, another thing to watch, and I found this HSBC note quite interesting, is agri-focused stocks. The fact is we've lost sight that you have a monsoon going on steady, and this could be one pocket to watch out for. So HSBC on agri input says early sowing trends are encouraging. It's up 10% year on year, and the trend is set to continue, supported by a pickup in monsoon in the second half of June. Underlying fundamentals are looking positive and set the tone for a good show in H1 FY26, absent any disappointment on rainfall. And they've mentioned stocks that they like. They've talked about UPL, they're maintaining a buy. Dhanuka Agri also maintaining a buy, so and so forth for Bayer. Bayer is of course a hold with a target price of 5,500. Rallis though, they've maintained a reduce with a target price of 210. So I think that's one more pocket that you could watch out for. Talking about the Nifty, look at the intraday volatility we saw yesterday. Strong in the morning, new high of 25,317 before just most of those gains pretty much evaporating. The index is showing you that there is selling pressure at higher levels. It's suggesting a false breakout and consolidation could likely continue as a result today. The general consensus is pointing towards consolidation within 24,800 to 25,300 range. Short-term moving averages remain supportive. RSI also showing sideways movement. So key resistance at 25,240, support at 25,000. Strong, decisive and sustained breakout above 25,300 now with volumes can then push you towards an upward move, maybe up to 25,600. For the Bank Nifty, look for a decisive break above 56,850 and especially 57,050 for potential long entries towards 57,500 to 58,000. Crucial resistance 57,000, support at 56,000. So as though your implied is looking good, Puneet, does the derivative Q stack up to show you that we're going to have a good day?
Definitely, we've seen traders actually move away from the June contract going into July. They've continued to maintain their long positions, but the FIIs have continued to maintain their short position as well, adding some as well. So you mentioned levels both for the Nifty and the Bank Nifty. So let's quickly go to the FII positions now. We've seen them maintain shorts in both index option as well as Nifty options. And that has been one of the key aspects to watch out for, because that's also dragged the long-short ratio, which we can go to the next graph and show as well, because it's hovering between 23 and 24%. It's again gone below the 23% mark, and it's been one of the key aspects for FIs, maintaining roughly 77% of the positions in short in the market. Let's quickly look at the open interest for both calls and puts, because for calls we've largely seen 25,000 as being one of the key levels, and that's also a key support level for the Nifty, at least in the near term, while 24,800 continues to remain one of the biggest support levels for the Nifty in the long term as well. On the other side, we will need to have resistance as well. So that's 25,200, but we'll need a decisive move above that. So going into July, that will be one of the key monitorables, but we're starting off at a very decent level, at least for the Nifty as well as for the Bank Nifty, and the implied open indicating the same as well.
Okay, let's talk about some stocks that are on our radar today. I'm going to start off with Hindalco. So pretty decent news on Hindalco. The news itself, of course, a thumbs up. They will be acquiring US-based company called Aluchem. It's a 100% stake that Hindalco is acquiring at an enterprise value of $125 million. It's a prominent manufacturer of specialty alumina. The company supplies ultra-low soda calcined and tabular alumina. It caters to mechanical components and energy-intensive refractories. So it's quite a strategic move by the company to expand its downstream portfolio. It's also a first of its kind entry by an Indian company into a low soda tabular alumina, and expands access to precision engineered material, introducing premium alumina grades to the product portfolio. So watch out for Hindalco today. Also watch out for Aurobindo. The arm has received marketing authorization from UK's Medicine and Healthcare Products Regulatory Agency for a drug called Diarupeg. So this is a drug which reduces the side effects of chemotherapy. It's a decent sized thumbs up for Aurobindo Pharma, because now they have the permissions to market this drug as well. Titan is the other one, and this Macquarie note is the reason that I'm picking up Titan on the watch list this morning. They've maintained an outperform with a target price of 4,150. Say there's a healthy demand which will aid Q1 jewelry growth. They believe jewelry EBIT margins have bottomed out in FY25, and they expect a 20% plus growth in jewelry sales EBIT in Q1. So I think Titan could shine today.
I've got a couple of, I've got JB Chemicals on top of my list. And this is on the back of a US FDA approval to make the generic version of amitriptyline. Okay, I'm going to say that only once, hydrochloride tablets. Basically, the drug is a tricyclic antidepressant, and it is used to alleviate symptoms of depression. That approval is for multiple dosages that go from 10 mg all the way up to 150 mg. Now, normally you get a sense of the size of the market. Unfortunately, it's not very clear with regard to this one, but this is in a space that gets a decent amount of consumption. We'll have to wait for what the company itself says or analysts have to say about JME Chemicals, but it is a positive. PTC Industries, and this is an interesting one. Of course, another one that lacks very key details, but the arm has signed an MOU with France's Safran Aircraft Engines, and that MOU aims to, in their words, develop cooperation on manufacturing of components and materials for military aircraft engines. Ostensibly, on the surface, this provides access to some technology, which is what a lot of Indian manufacturers are trying to do, and that should boost indigenization as well. It bodes well for the company. Remember, and we were talking about this yesterday, any update in the defense space is lapped up usually, but parse this and see what this actually means. The stock is obviously moved up along with the pack in the last 1 month or so. And finally, another promoter stake sale. This is for the Timex Group, not the largest company, just over 2,000 crore of market capitalization. The promoter Timex Group Luxury Watches BV is set to sell 15% stake via an offer for sale that will be conducted today and tomorrow. The floor price for that is set at 175 rupees per share, and that's a discount of 35% to the current market price. The promoter shareholding as of the 31st of March was close to 75%. I don't know what it is about promoter selling.
Yeah, maybe a lot.
Smart. Markets are on a high.
Yeah,
Good time to take some of that froth out.
Possibly, yeah. But nothing to sulk about, maybe. Okay, very quickly, 3 stocks before we get to our next guest. NTPC, delivery-based turnover was at 4,520 crores yesterday because FPI sold about 1.4% stake in the giant, and which is why the stock had started off ugly, ended fairly flat. I would reckon that it's been taken in the stride. Keep an eye out for this one. Asian Paints and all marketing companies, I dare say, keep an eye out for them. Yesterday, we saw the first signs of the shift out of refineries into OMCs. Asian Paints had a small uptick. Maybe with crude oil prices down another 5-6% today, you would probably see a fillip. I would suspect that we should see a fillip, so keep an eye out for that. And one of the key brokerage notes, there are 6 or 7 brokerage notes today, by the way, guys. But I'm choosing one which we might highlight later on. UBS note on MCX. They've maintained the buy. They've hiked the target price to 10,000 from 7,000 that they have currently. They believe key commodities price volatility may drive volume growth. The Q1 ADV futures are up 50% quarter on quarter, and option premium is up 30% quarter on quarter. So QOQ MCX could see a sharp uptick in earnings. They are improving the pace and visibility of new product launches. Keep an eye out for this one. We'll talk about this in greater detail, of course, but this is a stock to watch out for. Okay, let's get on to our first guest of the show. In fact, the second guest of the show, but first on the Indian markets and a specific topic, the much anticipated 12,500 crore IPO of HDB Financial Services opens for subscription today. Let's get in. Remember, it's a leading diversified retail NBFC with the loan book exceeding 90,000 crore rupees. Is it worth subscribing? Let's get Shweta Daptardar, Vice President BFSI Elara Securities, to tell us that. Shweta, good having you. Thanks for joining in. Well, the pricing has come in a lot more reasonable than what the private markets were anticipating. But at these prices, is HDB Financial an IPO that you will tell your clients to subscribe to?
Yes, morning. Definitely at the upper price band of 740 rupees, HDB Financial Services would be trading at less than 3x FY26 estimates. So, which is definitely at a very steep discount to larger players like Bajaj Finance or Cholamandalam Finance in the space. So, at this current price brand, the fresh investors would definitely make some good sum of money. So, yes, it's a subscribe on listing.
But when you compare it with its peers, and you saw, and it's not necessarily a like-to-like comparison, but if you look at a Bajaj Housing, for example, that came out last, and of a similar size of book, 1 lakh crore or thereabouts when it went to IPO, just below that, how do you compare with NBFCs of a similar size?
Yeah, right. So look, HDB Financial Services is a well-balanced, diversified product franchise wherein they have focus on MSME lending with 39% of their book is dedicated towards enterprise lending. Then you have another 38% towards asset finance or vehicle loans and 24 odd percent towards consumer credit or consumer finance. So it's a well-diversified franchise, and in fact, in current market scenario, the way NBFCs have navigated peculiar challenges for FY25 that we saw, diversified business plays are the sort of players where we are placing bets on. So HDB Financial Services, as you rightly mentioned, with a book size of over 1 lakh odd crores, compares and is favorably positioned in the current market scenario in the entire NBFC space. And the valuations from the forward multiple perspective definitely again puts them in a sort of in a competitive edge positioning.
So Shweta, just very simply put, this is a buy from your point of view?
It's a definite buy, and if you look at the numbers quickly, so it's a 14-15% ROE business model as on today, but definitely poised to sort of expand over 16 to 17%, and that would position him strongly as against that likes of Chola and Bajaj, who are around 19 to 20% kind of ROEs.
Okay.
HTP definitely had certain hiccups on asset quality front, but I think larger part of those worries, COVID-related worries, are behind. So definitely, almost 18 to 20% AUM CAGR is imminent for next 2 to 3 years.
What is the kind of listing premium you're expecting, and what do people who may not get, I mean, it's a large IPO, so maybe better chances of getting allocation or allotment, but if you don't, then what should be the strategy? So 2 questions there.
Yes, so you're right. It's highly likely to list at a higher premium, given the fact that it comes with a strong pedigree, also a high AAA rated credit rated agency, credit rated NBFC. So definitely, we are expecting a sort of robust listing. For the investors who might miss the bus, I think valuations anything about 3.5x or closer to 4x would be slightly expensive. I mean, that's where I believe it could sort of climb towards the once it gets listed. So if you compare still with Bajaj Finance, which is trading around 5x forward multiple, and even Chola, which is closer to 4.8, 4.9, then I think still HDB Financial Services, which is currently at inflection point as well, from the business and financials perspective, definitely comes as a strong bet, and we would still maintain a buy.
Got it. Okay, so you would still maintain a buy. I'm just wondering whether you anticipate, a very quick answer here, whether you anticipate that the loan growth, which has been a bit of a question mark for the industry as a whole, do you think that's going to be the immediate challenge? What, according to you, should investors or prospective investors of HDB look out for as potential challenges?
Yeah, so last 5 years, you're right. The AUM CAGR has been around 15 odd percent. Apparently, they had a certain decline in FY22 thanks to the COVID-led challenges. Going forward, like I mentioned, given the fact that the loan book or the product franchise stands pretty diversified across key portfolios, so be it MSME, be it consumer finance credit, with regulator also coming out and saying the unsecured portfolios have definitely seen better customer behavior in the recent periods, and vehicle loans, which is also sort of a cyclical product.
Right.
So I think this kind of product franchise also will enable HDB Financial Services to tackle even cyclical challenges.
Got it.
From the low growth perspective, better placed.
Better place. All right. Thank you so much for joining us this morning and for giving us a perspective. Of course, that IPO is something you should watch out for. But moving to Tata Motors, it's a stock that we've been looking at very closely. And among other things that investors are paying attention to, it's the plan to demerge the commercial vehicle and passenger vehicle business. That's something that's on the cards. At the annual press meet of Tata Motors, my colleague Puneet caught up with Shailesh Chandra, who's the managing director of the company, to talk about the strategy going forward. Listen in.
Growth of the cars in India. Now, last year was a very subdued year, just 2 to 3% growth that we've seen. And it was a tough year for the industry as a whole, as well as for Tata Motors in terms of sales performance. Before I get into specifics, what is the kind of expectations that you have for FY26? Because it will be a year of multiple new launches. So is the expectation largely around similar to, I think the outlook was 3 to 5% last year. Any kind of estimate and guidance that you can give us in terms of sales performance for this year?
So see, post-COVID, there was a significant growth that the industry had witnessed. We must realize that FY20 to FY25, the industry has grown from 2.7 million to 4.3 million. That's a steep growth. It is only in the last 2 financial years that we have seen moderation. In FY24, it was about 8% growth, and as you said, in FY25, it was 2 to 3. This year, the good news is that it has sustained at that level. So I'm seeing the brighter side of it. And this year also, basis whatever we have been triangulating based on, different agencies, what they have been talking within SIAM, what is the triangulated view, it is coming to us a 5% kind of a growth rate. So therefore, within this 2 to less than 5% growth, there will be certain segment which will do better, right? For example, SUVs, CNG, EVs, all these segments should do good because of more action here. Greater positivity around SUVs and CNG has been there for last multiple years. EV, there are a lot of launch action. Many players are now participating in this category. So it should see a boost also, is the way I see. For us, the last year was more challenging than the industry because primarily of the hatches segment, because in SUVs we grew better than the industry. Even in CNG, we did much better than the industry. But in hatches, the 2 products that we had aged, and therefore it declined more than the industry decline in hatches. This year we have refreshed those 2 products, so we should be in a better position. In SUVs, we are adding a new nameplate, which is Sierra. In EVs, we are going to add Harrier EV and Sierra EV to the mix, and there are certain interventions in the current products also that we are doing. So it's a strong product cycle year for us, and therefore for ourselves, we are slightly more optimistic as compared to the industry.
Just continuing with the point of new nameplates, because we've seen, as you mentioned, a lot of new nameplates for you as well, but that is also expected for the industry. So how should we look at in terms of both the growth for the industry if you're expecting sub 5%? Will it be that market share will be taken from other players for Tata Motors?
Why I'm saying that, because hatches was the place where we declined the most, and therefore our base is very low. From the high base of FY24, we actually went down by 60,000 in terms of number of units. As soon as we launched Tiago Refresh, we got a 20% jump. And similar is the case for Altroz, where we are seeing very strong bookings coming. So because we have a low base, I think we'll have a strong growth in hatches as compared to industry, which might further see decline. And as far as SUVs are concerned, I think we grew better than the industry. So with a new nameplate and very strong performance of Nexon Punch, which has been ongoing for multiple years, it has been among the top selling SUVs. We are optimistic on the SUV side also. So that's the reason why I'm saying that we should definitely aspire to have an industry beating growth.
And one of the key aspects that we've been speaking to a lot of auto ER&D companies as well, and they've given the challenge, especially of course in the export market, but also in the domestic market, of having conversions being very slow. In your estimate and in the companies that you work with, What could be one of the key challenges for this? Is this because of industry performance, or have you also changed a few things within Tata Motors in terms of showing that? Because we have a few listed companies as well which have called out, starting numbers as well as projections for this year to be very limited. So what could be one of the key reasons for that?
You are saying conversion rate.
Yeah, in terms of converting it to clients and then eventually to orders, that has slowed down dramatically for the auto ER&D companies.
Frankly, I can't talk about the other companies, but you have seen our investment numbers. It has only been growing over a period of time. And we are very optimistic about the future, especially the India growth story. And we already declared that we are going to invest 33,000 crore to 35,000 crore. That is not the investment that we made in the last 5 years. So therefore, I can only speak about ourselves that we are going to invest. We see the India growth story going up to 6 million from 4.3 million in the next 5 years. If there are significant trajectory change than what we are projecting, of course we will look at it. But I think as far as India is concerned, the OEMs are making strong investments. In other geographies, we'll have to really look at. I can't comment much on that.
One of the biggest aspects for Tata Motors this year will be the demerger. Do you think that the commercial vehicle division, with its robust financial performance, will be one of the biggest beneficiaries coming out of the demerger? Because you're already at almost 12% EBITDA margins, and and that's considerably higher compared to the cars business. But looking forward, what are some of the key aspects that you see for the commercial vehicle division? And as I mentioned, do you see that as one of the biggest beneficiaries with the focus coming on the business by the end of this fiscal year?
That's right. I think, we are very keenly looking forward to this demerger. And as you rightly said, in addition to robust margins, I think we've been also delivering very robust free cash flows and very high return on capital employed. In fact, it is amongst the global top 2 in the commercial vehicle industry. So I think the business on standalone basis has been doing pretty well. As a strategy, actually within the commercial vehicle business, we have divided ourselves into 8 sub-businesses, 4 of which are product businesses, which are more linked to the total industry volume of that year and therefore are a bit cyclical. And then we are looking at 4 other businesses which are linked more to the park size, right? And therefore they are not cyclical. So apart from robust financials, what we've also therefore done is increase the focus on this non-cyclical businesses, which would mean that we should be able to deliver more resilient margins through the cycle and therefore reduce the impact of cyclicality onto the margin. So I think that is what we are aiming at. And in addition to that, since we are delivering robust free cash flows, we'll have cash on the balance sheet. I think that also gives us opportunity to grow within the segment.
And specifically, we have seen that, the infrastructure spending was largely, used to boost the commercial vehicle sales. You spoke about the non-cyclicality of the business as well, in terms of macro conditions. How much of that, at least in the near term, do you see? Because we've already seen some spending from the government start, about 2.5 lakh crores is what they've spent in March of 2025. How much do you think that will translate to sales for you specifically in the near term as well?
So the infrastructure spend is very, very important for the commercial vehicle industry. And in addition to that, I would say, I think the growth that is projected for some of the key sectors like mining, steel, cement, e-commerce, and also for that matter, consumption, I think these are very important drivers for commercial vehicle industry volume. As of now, apart from the GDP and the infrastructure spend that you said, all these factors seem to be doing well. And therefore, we are quite optimistic about the volumes of the commercial vehicle industry going ahead. Yes, there will be some events which will be happening, whether it is a geopolitical event or what we are going through now currently, and whether it will have an impact on fuel prices, etc., is something that to be watched for. But otherwise, I think on a 5-year basis, we are quite optimistic on the volumes that the commercial vehicle industry can achieve.
Okay, so the perspective that you just got was with regard to Tata Motors' standalone business. This is the business that primarily operates here in India. In the recent past, though, the travails that Tata Motors has had to face have had to do with Jaguar Land Rover because of everything that's happening globally. For now, let's switch to another entity that has had to face its share of travails, and I'm talking about IndusInd Bank. And the latest development here is that sources are telling my colleague Vishwanath Nair that its microfinanced arm is seeing high-profile exits or exits in key positions, and officials have been appointed by the bank are stepping aside. In fact, Vishwanath Nair joining me now to tell you about that key development. Vishy, what are you picking up?
Right, Alex. So there have been two high-profile exits. Both of these officials were appointed by the bank, by IndusInd Bank at Bharat Financial. Bharat Financial Inclusion is the microfinance arm of IndusInd Bank. Who are these two officials? First is Vikas Mattu. He's Chief Operating Officer at Bharat Financial Inclusion, as well as Anujit Varadkar, who's a joint COO. Now, Vikas Mattu and Anujit Varadkar both have only very recently joined Bharat Financial. Mattu joined back in March of 2024, and then Anujit Varadkar, March of 2023, and Anujit Varadkar joined around May of 2024. Both these officials were running the affairs at Bharat Financial. Remember, just last month, we've had the executive vice chairman of the company, Jay Sridharan, quit. So with this, now 3 executives who were appointed by the bank at Bharat Financial Inclusion have quit. And this is coming in the context of the current scrutiny that is ongoing at Bharat Financial Inclusion. Remember that while announcing the March quarter results, the bank had said that they had discovered incorrect interest income of about 674 crore and about 173 crore of incorrect fee income in the microfinance business. Alongside that, they had also found accounts which were improperly classified, and therefore provisioning of an additional 2,000 crore had to be made in the March quarter. Because of this, of course, there was a huge financial hit on the bank. The scrutiny on microfinance loans is continuing. At this point in time, the internal audit team in conjunction with EY are looking into the issues. And as the scrutiny sort of picks pace, you are seeing people appointed by the bank exit the microfinance company. In fact, what has the company done to sort of counter this? Well, they've appointed Gopi Krishna A, who is a long-term Bharat Financial Inclusion loyalist, has been working with the company for 20 years. They've promoted him to head of member services. So it's clear that they're going back to the old staff to manage the affairs and not letting the bank now have a sort of a leading role in how the activities are conducted at this subsidiary of IndusInd Bank.
Yeah, and a lot of this will play out, of course, Vishy, over the course of the next few weeks and months. And I'm sure that we'll come back to you multiple times to get the latest updates. So that is with regard to a subsidiary, as Vishy pointed out, of IndusInd Bank, and key exits taking place there. So watch out for the stock in trade today. We're joined this morning by Somil Mehta, who's with Mirae Asset Share Khan, and Mayuresh Joshi, MarketSmith India. Gentlemen, thanks so much for joining us this morning, and pleasure having you. Somil, let me start with you first, just to give us a sense of what the picture is looking like at the start of trade today. Indications are for another positive start, but then we've remained range-bound since the middle of May, and that really hasn't broken. Despite the move above 25,200 yesterday, we failed to hold. So what are the triggers at the start today?
Good morning to everyone. It was very disappointing yesterday, going above 25,200 and then giving up most of the gains. That was a little surprising, but however, we are about 20 daily moving average, 40 daily moving average. We are trading above the averages. We have crossed the previous swing high. These are the positive points. The momentum indicator is still in the positive side for on the higher degree time frame as well. So overall, I think the short-term bias, medium-term bias, both remains positive. Buy on decline should be the strategy. On the downside, 24,800, 24,700 still remains very, very crucial support from here on in the very short term. Of course, 24,500 is a very crucial level in the medium-term outlook now. But in the very short term, 24,800, 24,700, that zone will remain a very crucial support now. However, now from here on, I think buy on decline should be the strategy. On the higher side, 25,500 would be the next target. but still, in the very short term, I think it will still remain very positive between 25,000 and 25,300. Bank Nifty, very similar setup for Bank Nifty as well, 57,000 levels and 55,500. That's a very broad range. However, that range, I think it will break out on the upside. However, for the next couple of trading sessions, I still think that it will be range bound. So buy on decline should be the strategy. Focus should be more on sector specific and stock specific action.
Samil, good morning. Tamanna here. What are you picking this morning?
I think metals are looking good. Buy on decline should be the strategy for defense as well. We've seen a little bit of correction in defense. So I'm picking metal and defense. I like the financials as well, the large caps. But at the moment, there's no clear indication of buying in the short term. But metals and defense are looking good. So I have Hindalco, a buy side, a good triangle breakout on the upside. Stop loss would be 645, target would be 720. I have HAL as well, sharp correction yesterday, but I think 40 daily moving average has a very crucial support here for HAL, and buy and decline should be the strategy here. Stop loss would be 4775 and target would be 5150.
Okay. Samil, stay on with us. We'll come to Mayuresh and Hindalco also in a minute, but it's that time of the morning where we tell you what we've heard on the street. Samil joining in. Be quiet.
Right. So firstly, the list, what we had is Poonawalla FinCorp, where the buzz on the street is that the earlier promoter, that is Mayank Poddar, will be looking to sell out, will look to sell out its complete stake. He has close to around 2.12% stake in the company, and he's looking to sell this completely and completely exit Poonawalla FinCorp. Then there was Ask Automotive, Hudco and IndiaMart Intermesh. Dealers are indicating that large HNIs are buying this counter from long-term perspective, and in fact today on IndiaMart Intermesh there has been a big upgrade that has come in from Nuvama, where they've upgraded the rating to buy from an earlier reduced rating and have also hiked the target price to 3,800. Cummins is also on the dealers list, given the fact that they are expecting a large order win announcement that could come in going forward. For CG Power, dealers are indicating that the company might soon announce fundraise via QIP. Now, earlier they had approved around 3,000 crore of fundraise. So most likely the QIP amount would also be around that limit. For Taj GVK, dealers are expecting that there could be a block deal soon. The seller of this deal is not known yet. For Yathartha Hospital, dealers are indicating that the promoter has been buying from open market. So keep an eye out for Yathartha Hospital as well. And lastly, JM Financial. Now that stock had perked up in trade. It was up around 10%. The buzz on the street is that the company might look to sell its non-core business, that is the lending business, and focus more on its core business, that is the fee-based income wealth management business, given the fact that it has been doing good for them. So that was the buzz, and hence the stock had perked up in trade.
People on the comments, people on the comments are asking what it is going to take to get Somit to smile.
Well, I'll tell you something. I'll tell you something. I don't know if it makes him smile or not, but today we saw that note on Titan, right?
Yeah.
There are a couple of people talking about how Titan might have a very strong Q1 because of blah, blah, blah. Now, if you rewind it back to yesterday or day before, didn't we highlight that on the...
Yes, we did highlight that on Friday and Monday as well, that Titan could have a good Q1 numbers.
You had spoken about Titan
and DMart.
And DMart, and but both of them could have very good numbers.
Yes.
We already seen brokerages talk about Titan. Now we hear about brokerage for...
DMart update would come in the next 1-2 weeks most likely. So let's see. Hope so. It would be a better.
See, it didn't get him his smile.
When a herd on the street comes true, that is exactly
But that
what
accuracy is pretty strong.
That smile is only for a few seconds before he's thinking about the
what to bring next.
Yeah, so Amit is all about the news and the business. We're here for the laughs. Okay. Thank you, Samit. Always great to have you on. All right, Mayuresh, couple of stocks that we should talk about, and a very good morning to you. Let's start with Hindalco and then we'll get to Titan. What the notes are saying on the Q1 updates looks exciting. But what about this acquisition that Hindalco has made?
Morning, Tamanna. Morning, Neeraj. Morning, Alex. I think a quick short joke for Somit to make him smile. So there's this joke which goes by, why did you leave your last job? And the employee says the company relocated and didn't tell me where. So So I think something to make him smile if he's hearing this. Okay, coming back to Hindalco, I think the entire acquisition that Hindalco has done, obviously, I think in terms of backward integration, when it comes to alumina operations back home in India, they are trying to consolidate that to a large extent. And therefore, I think in terms of operating performance, when you compare other aluminium makers, other aluminium smelters as well, I think the performance is relatively better. Obviously, with the new acquisition that is expected to come through, what really shapes up in terms of the overseas operations, the expected demand to come through. And therefore, I think what probably happens with the Novelis business, specifically when it comes to beverages, stroke cans, and obviously, I think the value-added products that it is getting into as far as various other sectors are concerned, including automobiles, including aviation. I think it's going to be an interesting proposition going forward in terms of the backward integration capacities. From a valuation perspective, reasonably placed. From an expectation perspective of how demand might come back, I think that's still circumspect. But the hope is that at some point of time in the second half, demand should start coming back, aiding numbers. And because of its backward integrated operations to a certain extent, it probably safeguards and ensures that margins prop up quite smartly as demand comes.
Okay, so that's a view on Hindalco. Somil, I just want to come to you on a few of these oil sensitives that moved quite dramatically yesterday. Of course, they ended off the high point of the day. I'm talking about the marketing companies, the likes of BPCL, HPCL propped up early in trade, and then they lost a little bit of momentum towards the end of the session. Any opportunities here that you see, because crude is still soft? It's around that $67 per barrel mark.
Talking about HPCL and BPCL, they've been consolidating for a little while. It's a broad range. I don't see an opportunity at this point of time. In the positional side, yes, I think overall the setup is very positive. In the very short term, I think it still will remain very range bound, a very broad range. Let's say for HPCL, the broad range is between 380 and on the upside 420. So any close above 422 would be a very good breakout for HPCL. It's a big head and shoulder pattern on the downside, and I think on the upside I'll be looking for at least 450 levels and above for HPCL. So positionally, yes, not in the very short term. BPCL, same scenario, broad range between 310 and 327, 330 levels. Any close above 330, 335 levels for BPCL, it will be a good buy at this point of time for a positional trade, not for a short-term trade. Short-term, I'm still expecting a range bound, a broad range to continue to be, consolidating.
Okay. I wanted to come back to Mayuresh on Titan, since we had picked that up earlier. And, I think from what we're hearing, Q1 might turn out to be much better than the trend in FY25. Is that something that you're finding interesting right now, Mayuresh?
Would be definitely interesting, because where gold prices are, Taman, at this point of time, and whatever we've been hearing on the street in terms of demand coming off. What has really happened is, when I speak to a few of these jewelry retailers, I think the absolute grammage which people were talking about earlier when gold prices were lower has now got turned into a fixed amount. So I think whatever that fixed amount is, looking at the price, whatever the grammage comes in, they are happy with that. And therefore, I think there will be some element of impact because of elevated gold prices in terms of the overall grammage sales, reflecting in terms of the total revenue as well for most gold retailers. And therefore, I think Q1 is going to be interesting in terms of how numbers will play out. Obviously, for Titan, the other two aspects of their business, when it comes to the watches business, that might actually hold up quite smartly. And the precision engineering part should also hold up. But then again, I think these two businesses are not significant contributors to the overall EBIT. In my opinion, I think gold business should be a little bit sluggish, but let's see how it plays out.
Okay. All right. Let's talk about the Pharma pack. And this is in sharp focus today. Varsha is tracking key movers from the sector. She's joining us to talk about the likes of Sun Pharma as well as Aurobindo Pharma and JB Chemicals, which we mentioned in brief earlier. Varsha, what are you picking up? Morning.
Good morning. So let me start with Sun Pharma, wherein their partner Philogen has voluntarily withdrew its marketing application for Nidlegy from EMA. Now Nidlegy is nothing but a cancer treatment therapy, skin cancer treatment therapy, which treats skin cancer. Now the withdrawal was due to delays in providing additional clinical data within the EMA's timeline. But do remember that over 450 patients with skin cancer has been received this drug till date. And why Sun Pharma is in focus? Because Sun Pharma partnered with Philogen to commercialize this therapy in Europe, Australia and New Zealand. Next on the list is Aurobindo Pharma, wherein their subsidiary has received marketing authorization for a drug in the UK. This marks a third biosimilar approval from the MHRA. Now the name of the drug is Duropeg, which reduces risk of infection in patients undergoing chemotherapy. Next on the list is JB Chemicals and Pharmaceuticals, wherein a company has received US FDA approval for a drug which treats or rather which is indicated for relief of symptoms of depression.
Okay. Thank you for that. So it's negative for Sun, actually a positive for Oro and JB Chem this morning. Pharma is going to see some action there. Is that a space that you're looking at, Mayuresh, right now, considering that market has sort of moved out of the defensive mindset and the whole pharma story of what will Trump do kind of has played out as well?
No, selectively, I think we remain optimistic within the sector and within pharma stroke healthcare. I think hospital as a space is something that we can remain extremely optimistic about. Our own sense is that even if you probably dissect the Q4 numbers, they have been relatively better compared to the rest of the pack. Going forward, the expectation largely is that with a lot of new emerging hospitals, that a lot of the hospitals have probably done over the last few quarters, as they start entering the maturity phase after a year or 2 years, of acquisition or brownfield expansion, as the case may be. The RPOPs start showing an uptick, the occupancy levels start showing an uptick. And therefore, I think the operating efficiencies start playing onto the balance sheet. Many hospitals where the matured hospitals are a significant portion, as new hospitals start adding to this component over the next few quarters, numbers should be relatively better over the next few years. And because of the asset-light nature of business expansion, leverage is not a key component, which means that return ratios should also be relatively better as we speak. So within the space, again, I think we remain very constructive in terms of Krishna Institute. We remain very, very constructive in terms of Fortis Healthcare.
Okay. Okay, we'll talk about pharma. I want to also talk to Mayuresh about HDB and how he's looking at the HDB IPO. That's the cracker this morning. But we'll slip into a very short break. As we go into that break, markets may be ready for liftoff, 114 points up. Not though the way we're going to skyrocket into the stratosphere. It's going to be a proud moment. All eyes are on the skies today as the Indian Air Force Group Captain Astronaut Shubhanshu Shukla is set to journey to the International Space Station on the Axiom. After multiple delays, the Axiom 4 mission is now scheduled to lift off at NASA's Kennedy Center at Florida about 12 noon our time. Shukla is serving as the mission's pilot and will embark on a 28-hour journey to the ISS, where he and his 3 crewmates will spend about 2 weeks conducting scientific experiments. This is, of course, historic. This is just so cool, Neeraj. It's India's return to human spaceflight after 4 decades, a giant leap. And Shubhanshu Shukla at the front of it, piloting it.
Yeah, I mean, and somehow, Tamanna, I mean, every moment is a momentous occasion, but we've made it now a habit of making one in the first time in the last 15 years, 20 years, 25 years. I mean, some of these things that ISRO has done as well. All of these are really proud moments for sure.
Yeah, and I think we had, those are the first shots of them before they embark on it. So those are actually exclusive pictures that you're seeing. I can just see a movie being made on this.
100%. Akshay Kumar starring?
On Captain Shukla. I don't know. Should it be Akshay Kumar or not? Maybe.
No, will it be?
Who would be best placed to play Shubhanshu Shukla in the movie version of this space flight? Tell us what you think in the comments. We'll be back after this break while you think about it.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down. Cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, our company
All right, back with India Market Open. And as we said, maybe the markets, let's, even if you don't call it as strong a term as lift off, we certainly present continues on the upside, if you will. And to talk about that as the pre-open rates start kicking in is Chandan Taparia, Head of Technical and Derivatives Research at Motilal Oswal Financial Services. He joins us on the show. Chandan, great having you. Thanks for joining in. As the pre-open rates are settling in, or starting to come in rather, not settling in, what is your approach to trade today, assuming that we start off about 100 points higher?
Good morning. Thanks for having me. I believe that this positive range-bound bias is going to start for a next leg of rally. In fact, we were expecting market to remain range-bound for most part of the June series and then rally towards the beginning of July. I believe the market is forming the higher base until it holds above 24,800. We are expecting it to head towards 25,250 on immediate basis and then 25,750 to 26,000 on positional point of view. So I believe that consolidation of last 30 days, which is forming the higher base on the daily frame, is going to start the next leg of rally. So in that scenario, it might see a restricted move for next 2 days because of his monthly expiry. But after that, market will see the next leg of rally. I believe 500 to 800 points rally in the market over the next 2 to 3 weeks from current level.
That's strong. And Chandan, do the banks lead this or would it be non-banks? And therefore, part two of my question would be, I'm assuming that if you expect 500 to 700 point rally, you'd be comfortable buying the Nifty on open today, I presume. Would you also do that to the bank Nifty?
So I believe that even most of the market will perform well in the month of July, and based on the seasonality and the heat map, I'm betting big on the Indian market. I believe that buying interest will be there across the board, and Bank Nifty, which has been consolidating from last 6 to 7 days, is forming the higher base. It took support at 55,555 and now forming the higher base at 56,000. So till it holds above 56,000, I believe Bank Nifty can attempt towards 57,500 to 58,000. Most of the BFSI, selective auto, few capital goods, and capital market theme is likely to burst during the market momentum.
Okay, so let's talk, Chandan, about your picks this morning. You have a couple of them, one in the financial space.
Yeah, so I'll focus on selective counter from insurance companies. So SBI Life is one of the strongest counter. Technically, it gave the breakout from its consolidating move last couple of days. In fact, it is at the verge of breakout from its rising bullish pole and flag pattern, which indicate the fresh leg of rally. So with support of 1805, SBI Life can be bought for an upside target towards 1910 marks.
Okay. Okay, so SBI Life and there's also TVS Motor, reiterate target of 2,970. Let's talk about a couple of these developments with regard to Tata Motors, and we spoke to the management earlier. Quick view here. Mayuresh, on Tata Motors, and yesterday, or the conversation was about the standalone business, about the demerger that is in the offing, and they're talking about down the line expecting that commercial vehicle sales will pick up heading into the next financial year or towards the end of this financial year. What is your own anticipation, and are you paying more attention to JLR than the standalone businesses at this point for Tata Motors?
Morning, Alex. Morning, Chandan. I think JLR still dominates the overall EBIT performance for Tata Motors, and therefore I think JLR's performance is going to be key in terms of overall earnings improvement for Tata Motors. Obviously, the demerger news is sentimentally positive, no two ways about it. The expectations of commercial vehicles actually starting to pick up as we head into the next few quarters seems to be the base case scenario and the most plausible scenario in terms of growth coming back. But again, I think there is hyper competition as far as the PV market is concerned in India. The expectations of a lot of their competitors also having a lot of launches, both in terms of EVs, both in terms of hybrids, as well as the core segment itself when it comes to internal combustion engines, is still going to give pricing related and volume related concerns for the industry as a whole in a scenario where demand has not fully come back. And JLR is still showing signs of weakness. Obviously, I think from the statements that have come from the presentation day, this year is still going to be tough. The EV market globally might just have a recovery by the end of this calendar year, and a very fragile one is at that. And therefore, I think my own sense is that sentimentally positive, but number improvement is going to take time. I think we largely have a neutral view on the stock business.
Okay, let's get in just a sec to the big brokerage call of the morning, and MCX is in focus. UBS has maintained a buy on MCX but has hiked the target price from 7,000 rupees to 10,000 rupees. So quite a mighty upside from where the stock price is right now. Pre-open buzz can also be seen to some extent. Hiral is joining in with more details.
Thank you, Tamanna, for that. It's a 43% upside UBS has given to a MCX when it stands at 10,000 odd crores in terms of the target price. Now, overall, if you go to see in terms of Tuesday's closing price, it's an upside of nearly 22%. What they've said is that this target is mainly based on the volume growth. If you have to look at all the analysts that are tracking the counter, you have 11 analysts who have coverage on MCX. 7 of them have a buy rating on the stock, while 3 analysts have a hold and 1 has a sell. In fact, UBS has the highest target in terms of MCX, which is then followed by HDFC Research, which has a target price of 9,040, and ICICI Securities, which is at around 8,800. The favorable market dynamics and new product launches is the major catalyst. They've cited improving pace and clear visibility on the launches as well. They've pointed to a strong first quarter. They're expecting the average daily volumes to increase by 50% on a sequential basis, and the option premiums by approximately 30% in the same period. In fact, they've gone ahead and raised their earnings estimates as well, and this is for period FY27 to FY28 by 13 to 17%. In terms of valuations, the stock is trading at 42 times, and what UBS believes is that the market is really not pricing in the new product growth potential, operating leverage benefits that the company could get as well from higher volumes. The launch of electricity derivatives, which is the recent development, that has a potential revenue contribution of around 3 to 12%. So they are baking in a 3% number right now, which is a very conservative number. And the new silver options, they're expecting good traction from there as well, taking into consideration what they saw with gold options. So strong commentary coming in on the back of volume growth and product launches, and these two will be the major catalysts that will be in favor of MCX. That is what is UBS alluding to.
So a mild uptick there. Frankly, in the pre-open session, you're not seeing any great euphoria. Even though the GIFT Nifty was implying that you'd see a very strong start, seems okie dokie. Can't see any major excitement coming in, but just focusing on what brokerages are saying. There's a JP Morgan note on Indian hotels out this morning. They've initiated an overweight with a target price of 890 rupees on IHCL. Indian hotels is what I'm talking about. Stock up 2% in the pre-open session. So the reasons they give is they say they're leading on performance, pipeline and premium, believe the market is being overcautious on growth expectations. Earnings beats in first half of FY26 could revive confidence. Expect mid-teens revenue CAGR over FY25 to 28 and 100 basis points per annum margin expansion to 36% by FY28. So quite a bullish call on IHCL this morning. Chandan, MCX and IHCL, both of our brokerage calls that we've talked about. Any comments there or anything that you liked on the charts?
Yeah, so I like MCX the most. In fact, we are recommending from last couple of months. In fact, I have a positive view on the entire capital market theme, and I think you mentioned the target beyond 10,000, and I believe positionally that is also possible as per the technical setup. But as of now, the stock has been making higher top, higher bottom on the weekly scale from last 11, 12 weeks. Until it holds above 8,000, it has potential to rally towards 8,550 to 8,600 on immediate basis.
Chandan, this immediate basis is what? The next couple of weeks?
I think 5 to 7 days.
5 to 7 days, you suspect MCX could do well. The other one which has done really well is IndiaMart Intermesh, because it's a double upgrade from Nuvama, from a reduce to a buy, right? And that's why I think IndiaMart Intermesh has this 4.5% uptake. They cite various reasons, of course, including the fact that some of the new products are starting to make their presence felt. They've changed some strategies, so on and so forth. So lots of things, right? New upcycle in place is what they're saying. Now, Mahesh Joshi, it's a Nuvama view. I don't know how you think about IndiaMart Intermesh, but if you track it, do you have any thoughts here?
Morning, Neeraj. So again, I think this stock probably in terms of numbers expectations has been very, very volatile. And obviously, I think how the entire aggregator business probably moves up the value chain is something to be seen. So in my opinion, again, I think I will wait and watch for numbers to come through in Q1. And assumably looking at commentary and how these new business segments are probably shaping up for them.
By the way, that target price which Nuvama has set on IndiaMart Intermesh is at 3,800, and that is from the earlier target of 2,100. Double upgrade, and how, based on what Neeraj is speaking about. I just want to check, Chandan, on the charts. Obviously, there's going to be a strong start for this counter, and 3,800 based on the fundamental view on the stock. But what do the charts indicate?
Yeah, so chart indicate the positive stance. In fact, the rounding formation is clearly visible on the weekly chart, and supports are gradually shifting higher. So I believe momentum could continue based on the pre-opening. I believe 2,500 could act as a support to extend this rally towards 2,750 to 2,800 marks.
Okay, so as Tamanna was pointing out, is not a lot of very large movers apart from IndiaMart Intermesh. From the broader markets, you have the likes of KC International, which is up about 2.4%. Indian Hotels reacting positively as well, gaining about 2% at the start of trade. Schneider Electric is up about 2%. On the losing end, though, not too much to speak of. You have Ather, which is, I'm talking about Ather Limited, which is losing about 1% or so. And not doing too much, and that's the worst loser on the 500. Century Ply just about 0.6% lower. BASF. So one positive that you can take is that the market breadth, at least in the early minutes, seems to be favoring the advances, and that bodes well. And it actually reinforces what you were saying, Neeraj, at the start, which is that the broader markets are looking sanguine at this stage.
So sanguine, and which is why I think some of these stocks are actually perking up quite significantly. You know, the other thing, Chandan, that really perked up in trade were the oil marketing companies yesterday, the move away from refiners to OMCs. Now, I would love to know, do you have any kind of a buy call on a BP, HP, IOC, or any of their gas names as well, MGL, etc., are active today?
Yeah, so positive on the gas or oil marketing companies both. So I'll focus on BPCL. In fact, yesterday it opened higher, then witnessed some decline, but I believe overall trend is positive and buying interest could emerge. So with support of 314, it can head towards 338 kind of level. MGL also could be in action. Consolidation breakout could be seen in the counter. Immediate hurdle is 1450, but that could be surpassed. So I believe with support of 1395, it can head towards 1470 kind of level.
Chandan, very quickly, Hindalco could well be the top nifty gainer. On the charts, Adani Port, Adani End looking like they might buzz today again after the run-up yesterday.
Yeah, so positive on the metal. In fact, Hindalco can head towards 685 kind of level. Most of the metal counter could be in focus, so one can definitely look at these names. Talking about Adani Ports, it has bottomed out after the lower top, lower bottom last few days. So now with support of 1370, it can head towards 1435 kind of marks.
Okay, a lot of calls here. And by the way, I think on MGL, even on Reliance, by the way, there is a tactical buy, but on MGL too, I think there is a tactical buy. So keep an eye out for them. Keep an eye out for all marketing companies, more importantly, because those are the ones that benefit directly proportional to crude price falls. And therefore, conversely, also keep an eye out for Chennai Petro and MRPL and seeing if there are further corrections there because of the crude price fall. Boy, has that commodity sunk like a rock in the ocean. But here come the first rates this morning, and it's a tick of green, all right, 110 points in the green, so not bad really. And banks are not leading it. Wonder if IT is or some other pockets might be doing that. Let's pull them up. IT 0.6%, marginally better. Mid caps and small caps very quickly as the banks flatten out completely. It's very interesting. Mid caps 1/3%, small caps 0.5%. Can we get the heat map? I want to see what's leading the charge here. Is it Reliance which is doing this? Yes, Reliance is. Reliance is up about 0.8%. So that one is doing well for itself. And I think lending that upward helping hand to the index. Titan. We pointed out in amongst the list of the first 9 stocks, 1.4%, the top gainer. Ultratech is not doing too badly. NTPC up about 1%. Some strength in HCL Tech and Trent. But it's spread over. I think, well, from a newsmaker perspective, the gaining side, it's Titan. And of course, Reliance, because of the tactical as well as a brokerage note, is also lending that helping hand. And then a few others. NTPC incidentally bounces back after that large FPI sale, 1.4% equity. Not very large, but 4,000 crores worth of delivery-based buying or selling yesterday. What's not doing well? Some banks, right? Kotak, ICICI, Axis. There is no reason necessarily, viewers, for this to happen. It's probably a bit of a pause before maybe a rally resumes upward. We should talk to Chandan Taparia if he uses this flat open in the bank nifty to add on positions or no. But Tamanna seems to be that it is Titan which is leading the charge, coupled with Ultratech and Trent.
A call on the watch list as well, and brokerage notes very, very positive on Titan. Q1 updates so far are looking positive for them. Markets also in a good mood, I would say, not half bad, less than 0.5% up on the Nifty. So no big roaring start of the day, but can't complain. Let's look at what the broader markets are doing and whether that momentum is staying up there. About 0.5% up, less than 0.5% honestly on the mid cap 150 as well. Small cap is doing a little better. Bank Nifty is where the pain point is relatively. And let's pull up a sectoral heat map so you get a clearer picture of what's happening there across sectors. Yeah, you have India Defence, second day in a row, cooling off after a tearaway rally, and banks which are middling right now. The whole BFSI space not really in focus. Consumer durables doing well. Nifty infra, oil and gas, some of these sectors is what's passing, but the highest growing sector is also 1%. We told you this morning in the setup that you are going to see range-bound, low-volume trade perhaps because huge IPOs hitting the market and vacuuming up liquidity. Maybe that's also what you're seeing playing out and you'll continue to see for the next few days. Let's get stock specific because that's where all the action is and in no particular order. Let's start with Vodafone. Vodafone has clarified overnight that news reports that they're getting 84,000 crores of benefit from the government. They have not heard anything about it. Well, less than 0.5% down, but on the downward trend today. It's a pharma day. So look at Aurobindo Pharma. They have an approval for a new drug which helps reduce infection for those undergoing chemotherapy, 1% up. Sun Pharma is withdrawing a marketing approval bid that is about 0.5% up, although the news is not very positive for them. JB Chemicals is the big one, perhaps. They have a US FDA approval. That's JB Chemicals, which has the US FDA approval. So let's see if we can pull that stock up. Sun Pharma actually is withdrawing a marketing approval bid. Let's pull up, meanwhile, KEC International, if we can. They have order wins worth 1,236 crores. So that's about 3.5% up. MCX was our big brokerage call of the morning. The target price has been hiked to 10,000 rupees by UBS, about nearly 3% up right now. IHCL is the other one that we're looking at. JP Morgan has initiated an overweight on IHCL. 2% up this morning. India Mart, I mean, it's all about brokerage notes, isn't it? Nuvama is giving it a double upgrade, 5% up on India Mart at the start of trade. Let's see if we can pull up the JB Chemicals that we were trying to. That would be nice to see what happens with it while we look at other stocks this morning. All right, they've got the US FDA approval, but 1.5% up this morning as well. But Alex, you have to pick those winners today. The general mood, though, definitely positive.
Certainly, and that's evident in the broader markets as well. A few of the stocks that are perking up this morning, and most stocks are gaining than losing. 395 constituents or thereabouts on the 500 gaining ground. What we haven't mentioned, we mentioned India Mart, of course, but KC International doing well. Gravita India, one of the stocks gaining close to 4% at this point. JP Power doing reasonably well. Not a stock that we look at very often, though. Wari Energies is a stock that is perking up about 3%. GIC is up as much as 3% as well. But I do want to talk about PTC Industries, and this is a stock that we spoke about at the start, and it's perking up. Is doing reasonably well. And of course, the development was that its arm has signed a memorandum of understanding with France's Safran aircraft engines in order to develop cooperation on manufacturing of components, materials for military aircraft engines. So I just want to get a view, Mayuresh, on this development. And of course, a lot of defense companies making such announcements. How deeply do you read into it?
I think there are positives because I think a lot of these companies are getting orders, and the expectation is that the export market, where the defense secretary himself has mentioned a few days back on your show, where defense exports at 25,000 crores, is actually expecting that to double over the next few years. So I think with the kind of products that a lot of these defense companies have, the markets probably open up not just at India, but a lot of export opportunities where margins are relatively higher as well. Obviously, I think for PTC Industries in general, I think the value add and the niche offering that it has in titanium products is something that is a niche area of offering. But I think from a valuation perspective, I think it's very, very expensive as we speak.
Okay. On the charts, though, I just want to point out that once again, you have the defense pack that seems to be sulking. So pull up the constituents on the Nifty Defense just to see if that is borne out. Yesterday, remember, it was a top loser. And so there you go. So data patterns losing ground. You have Paris Defense, you have Zentech that's losing, but you have a few gainers as well. Chandan, I know that I've been asking this practically every time you've come on the show in the recent past, but if you have gains in defense, do you finally call it? Do you finally draw that line in the sand and book?
I don't think so, because if you are a short-term trader, you can book. But I believe defense have their own way of moving now. They have gone to the different league of rally, and the trend is quite strong. And I believe such kind of momentum is going to continue because so many geopolitical concerns are happening. And in fact, the upcoming budget will be focused for the defense in most of the countries. So I think this trigger will continue going forward, and one has to stay long in such kind of a name in the market. But yes, if someone is looking for some diversification, then I think advice to book some profit and move towards the other name. But the concern is the sector which is performing is likely to perform well. So if you ask me 2 or 3 key highlights sector, I believe capital market. You may claim that MCX has rallied by more than 35% or 40% in last few months. But yes, this is the only stock which can rally. Or you can mention that BL has rallied well by more than let's say 50-60% in this year. But yes, the momentum could continue here. So I believe the theme of the market is the strength is going to add more fuel to the strength. And this is what we need to believe, and this is what we need to chase the momentum or ride the rally in the market.
Well, the momentum that we can see very clearly is with Titan this morning. Titan and Trent, actually, both Tata companies doing pretty decent. So is Tata Consumer. But talking about Titan, Chandan, are you seeing a further upside here?
Yeah, definitely. In fact, the gold is heading to one leg. However, we have seen a corrective move, but every decline is being bought in the precious metal. And I believe that could add momentum to the Titan as well. And this time, I believe Titan can see the next leg of rally. In fact, the stock has been consolidating from last 19 long months. And now a small follow-up beyond 3650 or 3700 could give the fresh breakout. So as of now, I'll look for first target was 3650 to 3700. Above that, next rally can be seen. So one can buy with support of 3510 for an upside target in Titan. In fact, the gems and jewelry counter could be in focus for the day.
Okay, another stock that has seen a lot of action this morning is India Mart. Opened about 4% up, just now inching upwards as well. The reason is upgrade from Nuvama to a buy rating. They've also hiked the target price to 3,800. Mahima is joining us with more details.
Right, so it's a double upgrade for IndiaMart Intermesh from Nuvama. They had earlier downgraded to hold in October 24, and before that they had downgraded to reduce in October 23. Post that, now they've upgraded the stock to a buy rating, so it's a double upgrade overall. Overall, the target price has been hiked from 2,100 to 3,800 rupees, which is a 45% upside from its overall yesterday's closing. What they're saying is that they believe that the business is entering a new demand upcycle, plus management's initiatives such as changes on platforms and investing in marketing as well as branding will attract buyers going ahead, and this will lead to higher unique business inquiries, followed by an overall rise in the net new subscriber addition as well. Plus, they have also increased the earnings estimates by around 9 to 10% for FY26 and 27, and this they're saying will be driven by higher revenue growth, while there might be lower profitability because of overall marketing and branding costs going up. Lastly, they've also said that overall target valuations also they've increased from 22 times to 35 times. And this 35 times was something that they had already ascribed to before they had downgraded the counter. So these are the reasons as to why Nuvama is bullish on IndiaMart Intermesh, and of course why we're seeing the up moves in the stock today.
Okay, well, 5% higher and counting. Really strong show, and that double upgrade for sure. We spoke to Mayuresh about this. There's been a sharp uptick there. I don't know if we spoke to Chandan about this or no. But Chandan, would you believe this uptick can sustain? Could there be higher levels for IndiaMart?
Yeah, in fact, I'm expecting really in the counter, which can probably take it towards 2,700 to 2,750 marks. The good part is it has been making higher top side bottom on the weekly chart, and even on the daily chart, holding well above its 50-day exponential moving average from last 50 trading sessions. So I believe the opening gains could be held and the momentum could extend here onwards.
Okay, so IndiaMart in for a double upgrade, excitement over there. Mayuresh, what are you seeing as a exciting trend just about 15 minutes after markets have opened, where you think that it's time to build positions? Would it be in BFSI, which is sulking today?
So that's one space where we remain extremely constructive, Taman. I think that's consensus call that most analysts on the street have. But our take is that BFSI generally should continue doing well. And in a periodicity where RBI has given enough levers through rate cuts, through liquidity measures as well, I think the kind of growth that can come through can be significant as we head into the second half. So yeah, I think BFSI as a space is something that we remain very, very constructive about, as well as certain discretionary consumption themes. So our own take is that consumption should make a very, very strong comeback in the second half, and that should probably surprise a lot of people who are still pegging that consumption growth might just lag. In our opinion, and the kind of trends that we are probably seeing, second half consumption should really start picking up, and then for a few of the discretionary consumption stocks, some leadership stocks from FMCG, some from the apparel space, in our opinion, can deliver very, very strong set of numbers.
I just want to point out, GIC was one of the stocks that was buzzing at the start of trade. It has moved up further, gaining about 5.6%, close to 6% at this point. Gravita India, another stock that is doing particularly well, up about 6% as we speak. These two stocks from the broader markets doing particularly well. Chandan, what is the view on these two? Would you enter these levels?
So to comment on Gravita, yes, the stock has bottomed out 3-4 days back and making high tops, high bottom. In fact, surpasses falling supply trend line. Witness a corrective move by surpassing its key retracement zone. So yes, some momentum could be there, but only concern is it already rallied by more than 6%. So yeah, I can buy a small dip with support of 1795. It can head towards 1900 kind of levels.
On the broader end of the spectrum, the top loser on the Nifty 500 is just down about 1.5%. So that tells you a story about how strong this and broad-based this move seems to be. Some other names include a Balaji Amines, which is up about 6%. MTNL has found some favor today, 7% higher. I reckon the volumes could be higher too there. Mukund has jumped to 148, 8% and counting. There's a talk, I mean, remember Mukund is forever in talk for the land piece sale. I wonder if that has happened, because that could probably be one reason why this stock is up in trade today. So 2 or 3 names which really stand out in the session. Some of these chemical names making a bit of a comeback. Mayuresh, Balaji Amines is a case in point today. There was some favorable ruling for amine companies a few days back where an alkyl amines had reacted too. Do you like them?
Positive, and again, I think the end user applications are also expected to see an uptick as we speak. Obviously, from a construct perspective, the kind of capex that both these stocks have undergone or are undergoing as we speak, both Alkyl as well as Balaji, in their respective chemistries, are expected to probably perk up capacity utilization levels, and therefore as demand starts coming back with input cost expected to remain relatively benign, I think numbers can be relatively better for the next 2 years. So yeah, I think amine stocks can actually make a good strong comeback.
Okay, thank you Mayuresh, thank you Chandan for speaking with us this morning. Not half bad, maybe waiting for a breakout. Focus on capital markets. We're talking to you about the IPOs that are opening this morning after a very short break. We're coming right back, stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
All right, quick look at the markets before we talk about Samhab Steel. HDB and Samhab Steel, those are the two big ones today. But markets, meanwhile, about 0.5% up. Improvement for the Nifty, close to its day's high right now. Nowhere close to the dizzying 25,300 that we saw yesterday. I mean, that seems to be a sort of a high that could not hold out at all. Just want to take a look at the mid cap as well before we move on to our piece on Samhab Steel, because what's happening in the broader markets also gets quite important, also about 0.5% high. So improvement there. All right, let's talk about another IPO which is set to open today, which is Samhab Steel. The company is looking to raise 540 crore rupees. Puneet is joining in with a SWOT analysis. What's the good, bad and the ugly?
Well, thank you for that. So it is a very interesting IPO in the sense that it's a new one in the steel pipe segment, but competition is quite rampant and the margins are low. So it is going to be a very interesting one to say the least in terms of participation from investors as well. But we put together a SWOT analysis for this. While the strengths include that it is one of the 2 players in India manufacturing ERW pipes, steel pipes specifically in India, it is also seeing some competition there. Now, the other strength is that it's the only player to manufacture a specific type of pipe, which is the narrow width HR coil with a lot of backward integration. So that could support margins going forward. But the weakness does include the high commoditized nature of steel pipes as well. Within opportunities, we have mentioned that the steel pipe segment is gaining a lot of traction and it's expected to grow at roughly 8 to 9% CAGR over the next few years. So that could be beneficial for the company as well. While the structural infrastructure and focus on the irrigation space is something which is another key opportunity. but within threads, and we spoke about this, the competition is very high because it competes with the likes of APL, Apollo Pipes, which has really high margins in this segment, the highest amongst the other peers, while something like a Hariom Pipe and GTL Industries are also legacy players they will be competing in. So currently capex is going down for the company, return on capital is expected to improve, but margins will be one of the key monitorables going forward for Samhab Pipes.
Okay, thanks a lot for that. Keep an eye out for this IPO. Of course, gets dwarfed in connection with HDB Financial, but certainly an important one to track. On more news and updates, in the latest update from the IndusInd saga, sources are telling us that the microfinance arm Bharat Financial Inclusion is seeing more exits as officials appointed by the bank step aside. Vishwanath Nair, who's tracking the story closely, joins in with more info. Vishi, what are you hearing?
Right, Neeraj. So what has happened is Vikas Mattu, who's the Chief Operating Officer of this microfinance unit, as well as the Head of Member Services, has resigned. Alongside him, his joint COO of the company, Anujit Varadkar, has also resigned from his position at Bharat Financial Inclusion. These were two officials who were very recently appointed by IndusInd Bank. As far as Mattu is concerned, he joined only in March of 2023, and Anujit Varadkar joined in May of 2024. Both these officials have now resigned, of course, and this is coming in the context of the enhanced scrutiny that is happening into the microfinance division. Remember that the bank had pointed out that in the microfinance business, they have seen incorrect interest income of about 674 odd crore and incorrect fee income of about 173 crore. Alongside that, due to poor provisioning policies at this microfinance unit, the bank had to make a 2,000 crore provisions against certain NPAs which were not classified as bad loans on the books. So this is there is an investigation that was initiated by the Internal Audit Department, which was then, of course, supplemented with findings by EY. So therefore, these exits hold more importance. Already a month ago, you saw the executive vice chairman of the company, J. Sridhar, and him also resigning. He was also appointed by IndusInd Bank. So what is exactly Bharat Financial doing to counter these things? Well, they've actually promoted one of their long-term loyalists, Gopi Krishna A., who has been with the company for nearly 20 years. He has been promoted now to Head of Member Services, and he becomes one of the highest ranking officials in the company. So it's clear that the people who are appointed by the bank are on their way out, while people who were always with Bharat Financial before IndusInd Bank acquired the company in 2019, they are now going to take charge, because obviously the situation at the microfinance unit is looking a little tough.
Okay. Vishwanath Nair, thank you for that. So more trouble coming in for IndusInd Bank this morning. We should pull up the stock price if you can very quickly on IndusInd Bank. There you have a bit of weakness this morning as well. All right, KEI Industries in focus today. The stock was up 5% yesterday, is seeing a buzz today as well. What is the news? What is buzzing with KEI? Before we get to the management, let me go across to Anushi for all the details.
Hi, morning Tamanna. So it's the outlook of KEI Industries, which is an interesting one that we should be watching out for. Now they are retaining a guidance of about 20% of a CAGR growth, and this is in terms of revenue that we can expect till FY30. Along with this, you know, what is interesting is the Sanand plant expansion. With this, they are expected to commence production in the first quarter of this financial year. If you talk about the margins, now FY26 margins expected to remain in a stable range, so not much of a change that we'll expect over FY25. However, FY28, this year 50 to 100 basis of an improvement here. This is along with a higher mix of exports that we are eyeing. So 17 to 18% is the mix expected from the current 13% of mix. Now, what is another concern rather of the business, or was a concern that we'd seen in the last few months, was how it will shape up against competitors with new entries in the cable and wire industry, which includes the likes of Birla as well as Adani. The company expects this will not materially disrupt their operations, and because of the long gestation periods along with in the institutional cable market, which will act as a natural buffer. If you talk about the FY25 performance in revenue, net profit and EBITDA, they have clocked in a 20% of a growth, while margins have more or less remained flat at 10.9%. So this is the overall picture that we are building in for KEI Industries. It's the plant expansion going forward, which would be interesting, and how they'll shape up against the competition is something that we should be watching out for.
Definitely, how they shape up against competition is one of the questions we'll definitely ask. Anil Gupta, CMD of KEI Industries, joining us now. Mr. Gupta, very good morning, and Great to have you on NDTV Profit as always. Let's just start with your FY25 outlook, because you clocked a decent, nearly 20% revenue growth. What is the outlook, or what are you penciling in terms of guidance for FY26 on revenue? Let's start there. And is Q1 looking like it's on track?
Good morning to you, Tamanna. As in my earlier interviews, I have guided that we are on the on the right track of our revenue guidance, which we have given this year. Because of our new production capacities coming up. So we expect that this year will be little, maybe we may grow by around 17 to 18% because of the new production capacities will be gradually commercialized in our Sanand plant. And as we are operating on almost full capacities in our existing plants, but still we will try that if we could achieve a revenue target growth of around 20%. And it is driven by basically domestic demand and also strong demand from our export customers. And we expect 17 to 18% of our revenues coming from exports in this year versus 13% last year.
If I could ask you on that exports part, what markets are you looking at? Because you're one of the few companies who's looking at more orientation towards exports at a time when it's a very difficult global situation.
See, as on today, our export revenues are too low to be affected by all these wars and other geopolitical situations. We are just talking of 1,800 crore or maybe 2,000 crore of exports, which is very low as compared to our peers in China or other markets. So it should not be difficult. And also due to this tariff issues in various countries, India is definitely a preferred supplier because of its political relationship with most of the countries and free trade agreements coming up. So it is definitely, and our products have now acceptability all over the world. We have worked on necessary certifications in various countries to become eligible to sell in those countries.
So, Mr. Gupta, Neeraj here, good morning. Great talking to you. You expect a pickup because of all of this in the current year on the export side? I mean, as a percentage, would it keep on going up over the next 2-3 years?
Yes. Our aim is to achieve 17 to 18% of our revenues from exports this year.
Okay.
And maybe around 20% next year. But moving forward, our aim is to reach around 25 to 30% of our revenues coming up from exports within next 5 years. That is our target. And I'm pretty sure that we should be able to achieve this target. Domestic market is also quite strong. They're driven by mainly energy sector, and also new industries, data centers, and capex in infrastructure.
Okay. Now, I believe in order to do all of this, right, the Sanand plant expansion as well, can you give us some update there? Because the belief is that the scale up of that will drive margins, incremental revenues though come in maybe late FY27. So is that back-ended, the expansion and the scale up, and does it have a material impact on margins in a business like yours?
We are likely to commission part of the plant in Sanand next quarter, means in second quarter. And gradually the production will be ramped up once it is commercially stabilized. The whole full project will be completed by March 26. So the major revenues from that plant will be coming up in FY27.
Okay. No, and just that follow-up to that, Mr. Gupta, one is that therefore in a business like yours and with the competitive intensity that there exists, can a particular plant scale up help margins? Part one. Part two, I'm just squeezing in a follow-up here. What do you do with the remainder of the cash that you have? Do you invest in further capex in Sanand or otherwise? Because you do have the QIP balance as well with you, right?
See, margins depends on how quickly we are able to ramp up production in a new greenfield facility, and also how quickly we are able to bring orders and market into that plant. Secondly, regarding further this cash, we will chalk out a growth plan subsequent to 26-27, so as to keep maintaining our growth trajectory even after 5 years, because it takes around 2 to 2.5 years or maybe sometimes 3 years to build a plant. So we already have a good amount of land bank with us, and we will chalk out the strategy to the areas where we want to grow in our cable business.
I just want to press on a little more, Mr. Gupta, on the competitive part. Two major groups have made an announcement of entry into the space, cables and wire space. Are you beginning to see the impact of that? Do you anticipate some impact of this coming in? Because we've seen the kind of disruption that has happened in the paint space, for example. What is your perspective on this?
See, at the moment, there is no impact because they are yet to come into any type of production, or they are not in the market. So far as impact on our business is concerned, I don't see much impact because the markets are growing rapidly. So even if a new entrant comes, it will not have a major impact because there will be enough market for them as well. So I don't see, and we are increasing our market geographies. So we will definitely insulate ourselves from any domestic competition if it is coming from the new players.
And so how are you shoring up? You're saying that they're not on board yet, which is completely true, and the market is growing, also true. But what is the strategy on your end?
Strategy is that we have to have more penetration in untapped markets in India. We are improving our dealer network, our B2C network, so that we are well entrenched and acceptable to the customers. We are ready for the competition. We have the competitive intensity available with us. And also we will look for newer markets wherever possible, so that our growth is not impacted due to the more competition in India.
Okay. Mr. Gupta, we wish you all the best for that and more. All the best with the order wins as well. You had a few, maybe more come in store. Thank you so much for speaking to us today.
Thank you.
That's the view from KEI Industries. Now, that's the first business featured today on India Market Open. The other one is from a very buzzing pocket, and that's the transformer space. Now, Taril is in focus on the back of an order win, including an export order about 143 crore rupees and a lot more other points to talk about with them. Now, before we get joined by the management, let's bring in Anushi to give us more context around this. Anushi, good morning.
Hi, morning Neeraj. So as you rightly said that the company is in focus on the back of some recent order wins. Talking about the latest order that they've received an export order which is about $16.65 million, roughly translates to about 143 crore. This order was awarded by Jindal Energy, and which is an international entity that we are looking at, and this contract is to be executed in the next 1 year period itself. Now, it's the order book positioning of the company which is an interesting one, because if you look at the order book last year, that's FY25 end, the order book was up over 98% at 5,132 crore, while the order inflows in FY25 stood at 4,500 crore, so which was about a 120% of a growth as well. In terms of how the performance has shaped up, we've seen about a 56% of a growth in FY22, while FY24 there was a minus 7% of a downtick. 56% was the growth that we saw in FY25 as well. While margins have scaled upwards from a level of 6% that we are seeing to 16%, and the management does expect to keep the margins in this mid-teen range that we are looking at. In terms of where the outlook is concerned, they expect revenue of 3,500 crore in FY26, which is about a 73% of a jump from FY25. Along with that, for the longer term, they're aiming for a revenue of $1 billion. And this is with a mid-teen margins that we are looking by FY28 end. The company also aims to be fully backwardly integrated by the first quarter of FY27. To support this, there are a couple of capacity expansion plans also which are in focus. So interesting would be to watch out for how transformers shapes up going forward.
Yeah, well, they're very, Anushi, thank you so much for that. And all our past conversations with the management show that they are very constructive on growth and growth with profitable margins from where they are right now going ahead. Let's talk about all of that and the recent order wins with Chanchal S. Rajora. He's the Group CFO and advisor to the board at Transformers and Rectifiers. Mr. Rajora, good having you. Thank you so much for taking the time out. I hope all is well. Let's start off with the recent. Very, very good morning. Let's start off with the recent order wins, because you've had a few as we've looked at the announcement. They may have been, maybe some have been small, some have been medium, but there have been quite a few. How is the order inflow looking like? Because almost everybody seems to be suggesting that there is a bit of an issue when it comes to T&D and evacuation, and you might be in the right space therefore.
Thank you, Neeraj. It's always been great actually speaking to you and Tamanna. First of all, let me tell you about the order, what we have got from the Botswana right now. This is basically more important for us is that this is the largest private sector order what we have got for the export. Till now, the bigger orders we were getting from the utilities mainly, but this is a major milestone for us that we are getting big orders from the private sectors for the export size, right? As you're talking about the orders, as on today when we are sitting here, in this quarter we have got almost 650 crore rupees close to orders in this quarter, and 1/3 of that is coming from the export size. Inquiries are coming, in the same phase. Order execution is going on, and we don't see that any issues in terms of the order inflow and all. Yes, because of the raw material constraints, there was a bit of the issues on the delivery side, but all these things are getting eased up as the days are passing. So we see the industry is going into the right track. Things are going into the right tracks.
Got it.
And orders, as I said, is not a problem. As on today, when we are talking, we are sitting on the order book of 5,400 crore rupees, close to that.
Got it. And I believe when you ended the year, Mr. Rajora, you were sitting on 5,100 crores with about 18 months of revenue visibility. So it might be the same right now. How much of an order inflow do you anticipate, let's say, in the current calendar, if you will, the second half of the year? And would this largely be from the government side, state or central, or are private orders as a proportion of your order book picking up?
If you remember when we spoke last time also, and when we close our financial year on 8th of April, our managing director, Satyan Mamtora, has guided that this financial year will be somewhere near to 8,000 crore rupees of the order book. And we are quite sure that by end of this fiscal year, we'll be having order book close to 8,000 crore rupees.
Wow. Sorry, Mr. Rajora, can you just answer the second part? What's the split here, private versus government orders?
I am coming to that. Look, we have been maintaining since last 2 years around 50% coming from the utility side and 50% coming from the industry side. And we are quite maintaining that, and you'll see that around 50% will be having utilities on board and 50% will be on the industry side as far as the order book is concerned.
Mr. Rajora, very good morning and always a pleasure to speak with you. Just wanted to get your sense on the margins. Margins were, quite healthy in FY25 compared to previous years in the 19% range. Are you seeing signs of this staying on track from Q1? The order book, of course, robust, but in terms of margins, what's the outlook there?
Amanna, first of all, thank you for talking. It's always been a pleasure talking to you. And as far as the margin side is concerned, in the Q1, we are bettering our margins. That is what I can tell you. So it's the margin is going to be into the same trend, and we are looking out to better the bottom lines as I always keep telling that I am more focused on the PAT. So my target is that how to strengthen the PAT, and we are bettering them up in this quarter. That much I can tell you.
Fair enough. Obviously, I don't want to put you in an uncomfortable situation, but just trying to understand that when you're focused on bettering the PAT, and this is something that would be music to ears of investors, how are you managing to go about it? Because I know backward integration is part of the larger plan. Is that what's coming on board? Is it the quality of orders? Is it timelines of delivery? Just what is the general sense we can get on what's happening right now?
There are lots of factors which you can count on this. First of all is the operational efficiencies what we are trying to bring, and we have bought into the system. Right, order inflows are good, margins are bettering up. That is the one part, but that cannot be the continuous part. As always, I've been telling that you can't increase your profitability by increasing the sale price. There are lots of operational efficiency efforts are there which we are putting into the system, and those are actually contributing into that. We are working on reducing our costs. We are working on reducing our finance costs, and we are quite basically successful into that. Backward integration is one key which is going to be yield us not in this financial year, but from the next financial year, where we are targeting to become the fully backward integrated by mid of the next financial year, and we are working on that direction. And once the backward integration will take place, I'll be having a leverage of 2 to 2.5% on the margin sides. As well as the backward integration is going to help me increase in my revenue also, because my dependency on external forces will reduce, and I can increase the revenue by bringing the operational efficiency into the system through that.
So just to follow up on that, when you're saying backward integration comes on board mid of FY27, if I'm not mistaken, mid of FY27, and sees...
Yes, mid of next year.
Okay, and sees an upside of 2 to 3% from what base? Are we looking at FY25 margins as a base?
You need to look into the FY26 margins base.
Okay. So, and you're saying that's going to be in there about the same range or even better. So, the next couple of years is definitely looking good. What is the capex timeline to make all of this happen? Because of course, big capex plans is well over there.
We are investing close to 500 crore rupees in this financial year. Bring down all the backward integration plus the organic expansion of 22,000 MVA, what we are doing into the extra high voltage transformer segments. And all this capex is going to be completed, say, in next 12 to 13 months time. So that is why I am telling you that in mid of next financial year, we will be 100% backward integrated. But also we will be adding up another 22,000 MVA capacity in our Moraiya facility, which is the extra high voltage facility. I would also like to mention that last year, April, we have initiated the first real expansion of transformer industry in India, that we had announced a 15,000 MVA expansion in our second unit in Changodar. For IDT and distribution transformers as well as the special duty transformers, and the first phase of that has already been started giving the production from this quarter, and in next 6 months time, that 100% of that will also available for us for the expansion for the commercial production side.
Mr. Rajara, two quick questions. A lot of capacity is coming on stream, India and globally. Do you expect pricing pressure?
I don't think so that, Neeraj. First of all, say in India also, the latest capacity expansion which is going to be done, other than the tariffs expansion, is coming from the FY28. So we don't see any pressure here. And as well as the demand is so high, wherever it is this expansion comes, the demand is good enough to take care of that. So we don't see that any problem is going to be take place in that.
Okay, great to know. Last question, sir. I mean, I don't recollect whether you gave a formal guidance post your earnings call or in your earnings call or no. But let's say 2,000 crore revenue number and a 16% EBITDA margin number in FY25. What do you go up to? Looking at the order book, sky's the limit. But what's the realistic assessment of revenue and EBITDA margin targets for FY27 or 28?
So Neeraj, in my all the conversations and in my all earning calls, we have been very vocal on saying that in next 3 years down the line, we want to reach to $1 billion revenue. And we are quite intact on that we'll be reaching that. We are very fully prepared and working on that direction. And we are sure that we'll reach that with all the things are in place. Margin size, as I told you, that we'll be nearing around 20% on EBITDA margin in this process, and more importantly, the PAT will be more than 10 to 11% in that. And when I'm talking about the PAT, this PAT, I'm talking about pure operational PAT, nothing related to interest or other income in this. So we will be achieving that very clearly. We had been guiding that the coming year we will be doing around 3,500 crore rupees of revenue, and we are working on that direction, and we are quite hopeful that we'll be reaching that level also.
Okay, so 3,500 crores FY26, by FY28 roughly 8,000 crores depending on the dollar value, but I'm giving a leeway of about 8,000 crores of revenues by FY28 or thereabouts.
Yes.
With circa 20%
Yes.
margins.
Yes.
Is that a fair assessment?
Yes.
Perfect. Okay.
Yes, that's right.
Mr. Rajoda, wish you all the best for that and more. May the cycle last. But thank you so much for speaking to us today. And congrats on the order wins, of course.
Thank you, Neeraj, and looking forward to see you again. Thank you. Bye-bye.
Most certainly. Okay, that's a confident transformers and rectifiers. Is Aris Infra as confident, or can it be? We'll get to know the listing just about debuting. But let's get in Anushi to talk about this. Anushi, take it away.
Right, so I'll start off with Aris Infra Solutions, give details on the issues and the business that the company is operating in. And if we talk about the issue price, that's about 210 to 222. That's the issue price level that we are looking at. And this consisted of a complete fresh issue of 500 crores. So if you are looking at the debut, it's indicating a downtick in terms of where that is concerned. Now, if you look at the lot size, that was 67 shares. Now, the company is in the business-to-business, B2B model, technology-enabled company providing entire procurement process for construction materials market. If we talk about their revenue in the 9-month picture, that stood at 546 crore, while the EBITDA was around 6.03%, while profit was 6.52 crore as well. And they will be utilizing the proceeds received from this fresh issue for repayment of outstanding borrowings, which will add up to 204 crores. Along with that, funding the working capital requirements for 177 crore. An investment in subsidiary which is Buildmex Infra for 48 crore. Clients of this company include the likes of L&T, J. Kumar, Puranik Builders, Vadva Group, as well all of the prominent names that we are looking at the construction space. Now, if you talk about the multiples, now if you look at the PE multiple, that is around 25 times the 1 year forward, while the 2 year forward is 22 times that we are looking at, while EV EBITDA is 10 times and 8.9 times based on FY27 EPS estimates that we are looking. In terms of the brokerage consensus was concerned, it's a mixed picture that we are looking, with Deven Choksi avoiding this IPO, while Bajaj Broking had subscribed it for a long-term basis. So this is the overall picture that we are seeing for Aris Infra Solutions.
Picture's not looking that great, frankly, in terms of what the opening rates are looking like. About 8.5% down on a listing. So it doesn't bode well when there's so much excitement about it. But, I mean, you win some, you lose some. 222 was the issue price. 205 is where we are. We're taking a very short break. On the other side, Puneet joins in to talk about Dixon Tech. Dixon Tech seeing a little bit of pressure after a bearish call from Phillips Capital. What's going on? We tell you after this break.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Welcome back. Just in time for 25,200. Let's pull up the Nifty and keep it on screen. You're looking like some strength in the market. 25,200 getting reclaimed after that big dunk down yesterday from the highest levels. So that's interesting. We'll keep that in mind. What is seeing a bit of pain this morning perhaps is Dixon Tech. Not massively actually, but some concerns about losing one of their large clients. So you're seeing a bit of a drop there, and behind it is a note from Phillips Capital. Puneet joining in with more details.
Well, thank you for that. So Phillip Capital has maintained a sell rating on Dixon Tech. They're seeing a 37% downside from the current market levels with a target price of 9,085 rupees per share. And they're highlighting a very important note that one of its key clients, which is Motorola, has actually gone ahead and given some outsourcing of components for its key products to another company called Carbon. Now, Carbon was earlier, a manufacturer of mobiles, and now, gone into become an EMS player essentially. But Motorola has actually given a contract to Carbon, which is also a beneficiary of the mobile PLI. So this is a key negative because Motorola was one of its largest clients, and Dixon was a sole supplier for the final product and was looking to increase the components for something like a Motorola this year. That's what they highlighted in our previous conversation as well. So definitely a key negative. The other key aspect of the note is also highlighting that the long-term trajectory of outsourcing of these component shift remains uncertain for Motorola specifically because the China's Communist Party, the CCP, owns 10% stake in its parent company of Motorola. So that could be another overhang on the stock. They're also seeing Dixon to see multiple D ratings going forward, and they've reduced the FY27 earnings because of competition from Dixon. So the leadership is something that Phillip Capital sees to be uncertain in terms of components going forward, and hence maintaining the sell rating with a 37% downside is what Phillip Capital sees on Dixon Tech.
Okay. Wow, that stock, some bit of pressure in the session today. Thanks a lot for that, Puneet. Now, on to more stories. NSE has filed 2 applications with SEBI to settle the long-standing co-location and dark fiber case by offering to pay a total of 1,400 crore rupees, making it the highest amount offered by any entity till date. Charu is at the NSE office bringing us all these details. Charu, what are you picking up?
India's leading bourse, the National Stock Exchange, as per some sources, has filed for a settlement in its pending co-location and dark fiber cases with the market regulator Securities and Exchange Board of India. As per some people privy to the matter, we have also been told that this settlement amount could reach above 1,300 crore rupees, often, termed as an amount, as per some previous reports as well, to be the highest settlement amount ever, offered by an entity to the market regulator. Now, this would would be something that would clear out a big obstacle for the leading boards, making the path more clear for its listing dream that has been in the pipeline since the year 2016. We were also earlier told that other obstacles, for example, the clearing corporation norms or any other issue is also, on its way to get resolved. In fact, the SEBI chairperson Tuhin Kanta Pandey in an event over the weekend also mentioned that there are no real pending obstacles and the IPO is on its way. So let's see how the further developments roll out. Also, this is the settlement amount that has been offered. It is not something that has been approved as of now. Once approved, it would clear out the path for the IPO in a bigger way. So let's see how the developments actually take place further.
Stay on with us, Charu. We're going to talk to you about the other stock exchange while you're in front of NSE. But nevertheless, the Metropolitan Stock Exchange of India is charting a new revival strategy, pivoting its focus after its derivatives ambition faced a significant regulatory setback. What are the exclusive details you have?
The Metropolitan Stock Exchange of India is eyeing cash market segment as per some sources. We know that the market regulator SEBI has recently changed its expiry day norms, restricting the expiry days to a bi-weekly phenomena, keeping only Tuesdays, Thursday as the expiry days. Now, Tuesday has already been taken by NSE and Thursday has been taken by BSE, and MSCI has to share its expiry day with NSE, which might, as per some experts that NDTV Profit has spoken to, impact its plans for, entering into equity derivatives with a boom. Now, we also know that after a fresh funding and fresh revival plans in December last year, one of the most lucrative things about the exchange was the fact that it had hopes for, using expiry day Friday as a separate expiry day for itself. However, with the new norms from the market regulator, this seems very unlikely, and that is why, to still hold more value for its investors and for itself as an institution, the exchange is looking into, making developments towards the cash market segment. All the necessary approvals are already in place, and the developments could take 2 to 3 more months, and we'll have to see how the developments actually roll out.
Well, certainly exchanges are in favor, but thanks for that, Charu. And as is aviation now, domestic traffic growth in Q1, was it as bad as it has been feared? Now, Samhab joins us with a detailed analysis of air traffic trends and the answer to that very important question. Samhab, what are you picking up?
Well, if you see in the first quarter of FY26, there have been multiple events, some geopolitical, some internal, because of which the market is fearing that the air traffic growth in the first quarter of FY26 would be bad. In fact, they were expecting a negative growth. Now, if you look at the events, firstly, on April 22nd, there was a terrorist attack that happened in Pahalgam, which also led market believe that there would be some impact on tourism going forward. Then May 7th, India retaliated with the Operation Sindoor, because of which there was some conflict between India and Pakistan, which continued for a few more days after that. Then June 12th, the Air India aircraft crash happened, and June 13th is the Israel-Iran conflict, which also led to airspace closure internationally, which also impacted tourism, is what the market believed. Now, because of these events, the expectation of the market is that the air traffic in the first quarter of FY26 would see a decline on a YY basis. However, the data that we have picked up and we have analyzed shows us that the first quarter FY26 air traffic growth has been actually much better compared to what we had seen in the last year. Now, if you look at this data that we are giving here, in a first quarter of FY26, this is calculated as per the daily data number that comes in on the Ministry of Civil Aviation website. The total air traffic for the first quarter is expected to be around 426 lakh as against 402 lakh that we had seen last year. That is the first quarter of FY25. Now, obviously, the number for the first quarter of FY26 would be lower compared to the last quarter, but that would be largely because fourth quarter is a seasonally strong quarter, a very strong quarter for the aviation industry. Now, if you look at the growth numbers, the first quarter FY26 air traffic growth is expected to be around 6% as against the 4% growth that we had seen in the first quarter of FY25, that is last year. Now, if you look at the monthly data for the first quarter, April passenger numbers stood at close to 143 lakh, a growth of around 8%. Daily 4.77 lakh passengers flew. May number did report a slowdown, 4% growth, 143.5 lakh passengers. But in the month of June, the number is expected to be around 139.4 lakh passengers, a growth of around 6%, which means that for the first quarter, the growth is expected to be around 5 to 6%, which is much more than what we had seen in the first quarter of FY25, where the growth was only 4%. Now, if you look at the international air traffic, there, if you look at the number, could stand at around 1 crore passengers, which is a growth of 6%. Yes, here the growth has halved compared to what we had seen in the previous financial year, where the growth was around 30%. 19% in FY25. But again, it's not a degrowth, it's still a growth of 6% on a YOY basis. Despite the fact that last quarter or last year the growth was much higher, we have still managed to grow 6% on, this is for the domestic airlines, this is the international traffic for the domestic airlines, that is Indigo, Air India and SpiceJet. They have grown air traffic at around 6%. And lastly, if you look at the occupancy rate or passenger load factor, again here for Indigo and SpiceJet, we have seen a decline in the passenger load factor, but it's not a massive decline for Indigo. It has come down from 87.3% to 86.6%. For Air India, from 85.3 it has increased to 88.3, and for SpiceJet it has come down from 92.2 to 88.4. So not a massive decline coming in here for the passenger load factor, which is the occupancy rate for an airline company. So most likely first quarter would not be as bad as what the street was expecting. And lastly, if you look at the brokerage data for Indigo, the consensus target price stands at around 6,012 rupees, which suggests a return potential of 7%, and the highest target price on the street for Indigo stands at around 6,700, which suggests a return potential of around 19% from current levels.
You know, this is really interesting, Samit, because one would think that with everything that has happened in quarter one, it would be a huge drop in terms of numbers. The fact is that you might not see that on their balance sheet come results season. Thank you for that, Samit Sarkar there. All right, let's get to our conversation this morning. Ashish Gupta joining in, Chief Investment Officer, Axis AMC. Ashish, always a pleasure to have you with us on NDTV Profit, and great to have you on today. Are you shopping for all of these promoter stake sales when they're coming up? Because this is what mutual AMCs seem to be doing. Promoter comes to sell, there's a block deal, and there's a mutual fund on the other side.
Actually, I think we have seen in the last 2 months acceleration both in promoter stake sales and private equity stake sales. And I think from this week, we are seeing quite a large pickup in IPO pipeline as well. So several large IPOs are going to come in the coming few weeks. So I think this is a trend that we have been seeing over the past 18 months. So even in 2024, there was a fairly large supply of equity coming into the market. And in fact, it was outpacing even the inflow into mutual funds. And in the first quarter, with the market correction, this supply reduced. And now with the market recovering, we are seeing this supply kind of resuming. The good thing is that, we are seeing, particularly with the IPOs now, many new companies, and actually the IPO slated for the rest of the year has several technology companies coming to the market. So different kind of companies are coming to the market. The other good thing is that with this supply coming in, it kind of helps absorb liquidity and does not kind of make the market valuations even richer, right? So I think supply does play an important role. If you talk about our strategy, we have been selective. There are a couple of private equity stake sales that we have participated in, and I think 2 IPOs till date we have participated this year. So we are quite selective. Also, I think overall in the IPO market, some of the frenzy has subsided. So what you were seeing in the second half of last year, when IPOs were getting subscribed multiple times and there were large listing pops, I think now IPOs are getting more rationally priced and subscribed.
Okay. Ashish, good morning, Neeraj here. Considering the pipeline that is on offer, do you reckon that unless global flows turn back into favor of EMs in India, that IPO pricing could be a lot more reasonable? Because as of now, the supply seems to be daunting. And while mutual funds are, and the Indian retail investor is a big port of call, there is only as much that mutual funds will keep on lapping up, right?
Sure. No, definitely. I think the fact is the demand and the supply go hand in hand, right? So during the period when the foreign flows turned negative and you saw correction in the market in the Jan to March period, the supply also kind of went away, right? So some of the supply comes to the market only when there is demand, right? If I take the question slightly differently, so will this kind of supply mean more moderate upside in market return this year? I think that is definitely the case. I think just because liquidity flows continue with mutual fund and potentially FII flows come in with the dollar weakening, should not be assumed that the market will have very large gains this year because the supply will counterbalance it. In fact, what is interesting is that we have been talking about our market getting back to all-time high. If I look the last 6 months, YTD, many markets have actually sharply re-rated. So if you look at Korea, in dollar terms, it's up nearly 40%. Japan is up 20%. Germany, France, UK, all these markets are up between 20 to 30%. Even Brazil is up about 30%. So in fact, year to date, as you know, Nifty is up about 6-7% now. Year to date, India is actually not an outlier in terms of performance and actually underperformed many global markets.
Ashish, in terms of how you're looking at Indian equities right now, all considering the same, economy is doing okay, good monsoon, looking bullish, corporate results last quarter were not as bad as expected. Having said all of that, one core momentum seems to be missing. Do you see that turning around in the next couple of months?
So I think you are right. Last quarter results were not as bad, but we have to take it in the context of expectations, right? So if you see earnings started missing estimates from June last year, and that was when expectations of earnings growth for last year was about 16-17%. Come to the March quarter, the earnings growth expectation itself had come down to about 7-8%. And really, a company earnings did not miss those estimates. So we did see a very sharp downgrade in earnings through last year, despite relatively lower misses in the fourth quarter. If I look at this year, growth expectations are more modest. We are starting with about 11-12% growth. And a lot actually hinges on the second half of the year, because as of now, we continue to see mixed trends. So if you see broad indicators, so there are indicators like GST collections are up 12%, e-way bills are growing in double digits. But there are multiple indicators, whether you look at power demand, you look at diesel sales, even FMCG and auto sales, they continue to be soft. Part of it is seasonality. Part of it, as you were talking about earlier in the show, relates to some of the events that transpired during the quarter. But I think the big hope is that by the second half and really September, October, all the liquidity easing and the regulatory easing done by RBI starts to feed into the economy, and that kind of start showing up in the numbers. So I think expectations that we have for this quarter is going to be muted. But I think the outlook from September is actually more important.
Ashish, you guys are maybe GARP investors, and forgive me if I'm making a wrong presumption, but if that is indeed the case, is value currently in BFSI predominantly? It's a large bucket, provides a lot of options, and the regulatory tailwinds, if I can call them that, are in favor.
So BFSI is one sector that is trading below its historic multiples. But having said that, it is also a sector that is growing slower than its historic growth rate, right? So we are still looking at only 9-10% credit growth currently. Even if you look at sectors like insurance and private insurers that used to grow premiums at 25-30% are just growing it in mid-teens now. So the growth curve for the sector has also shifted. Yes, we like financial, but I think there are several other pockets that offer growth as well. We continue to like capital goods. We continue to like segments like hospitality, hospitals, retailing, real estate. So I think while financial is one pocket, I think the opportunity in the market is a lot broader. Again, while we have seen the regulatory unwind and the liquidity support, growth for financial still has to kind of come back to levels where it used to be 3-4 years ago for us to see multiples go back to that level.
All right. Thank you so much, Ashish, for speaking with us. Always a pleasure to have you on, Chief Investment Officer at Axis AMC, on how the boom post good monsoon, consumption push, tax boost, all of that is yet to play out in the markets. Well, what's playing out right now is positive, but range-bound trade as well. Before we wrap up India Market Open, this is so exciting. Live visuals coming in from the Axiom 4 crew that has boarded the Dragon spacecraft. All eyes will be on the skies today as the Indian Air Force Group Captain and astronaut Shubhanshu Shukla is set to journey. Let's get those pictures up. There you go. Those are live pictures coming in. I mean, this looks like something out of a movie. If you see the live pictures of them actually in the cockpit, and that'll be great to see. Now, after multiple delays, the Axiom 4 mission is now scheduled to lift off from NASA's Kennedy Space Center at Florida at about 12 this afternoon, India time. And Shukla is serving as a missions pilot. He will embark on a 28-hour journey to the ISS, where he and his 3 crewmates will spend about 2 weeks. I mean, just imagine that excitement, Neeraj.
Yeah, I wish I can imagine, but I can't. I mean, it's just something that is unfathomable except for some experience that you may have. But yeah, fabulous story for sure.
Yeah.
Fabulous development for sure.
All right. We'll wrap it up right here on India Market Open, but stay tuned. A lot more coming up on the other side. You're watching NDTV Profit.
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL
for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome to NDTV Profit. I am Mahima Vacharjani and with me is Alex Matthew and you are watching Ask Profit, a show that gets all your stock related queries answered. Before we move on to the queries, let's take a quick look as to how the markets are doing at present. Let's pull up the Nifty 50 as well as the Sensex, and it's trading higher. It's trading around 0.6% higher than Nifty 50. The Sensex as well as the Nifty Bank is trading a tad bit higher. The overall Sensex is seeing gains of about 0.5%. There is a Nifty Bank which is seeing gains of about 0.3%. The broader end of spectrum though, the mid cap 150 as well as the small cap 250. Let's pull up that. The mid cap 150 is trading 0.5% higher, but small cap 250 is seeing gains of about 1.3% in trade today. So it's a clear outlier for sure today. Let's pull up the Nifty 50 constituents and see how they are doing in trade today. There are counters like Bharat Electronics, Kotak Mahindra, Eicher as well as Axis that are under pressure. But there are counters like Nestle, Titan, Tata Consumer, Eternal, all consumption names doing well. Nestle up 2%, Titan up 2% as well. Tata Consumer up 1.7%, Eternal up 1.4%, followed by HCL Tech, Bharti Airtel as well as Reliance, all seeing gains of about 1%. Let's pull up the advanced decline ratio and see how the advanced decline ratio is faring. In terms of the overall advanced decline ratio, there you go. The overall chart has been widening throughout the day, slightly narrowing at the moment. There are around 1900 odd advances versus that of 330 odd declines. So that ratio is almost 6:1 as we speak right now. Let's also pull up the sectoral heat map and see how sectors are faring in trade today. There you go. It's Nifty Media, which is up almost 1.7%, followed by Nifty IT, which is doing well in trade today, up by about 1%. Nifty Consumption FMCG stealing the show for sure, up about 1.8, up about 0.8 to 0.9%. Nifty Auto also doing well, up by about 0.7%. But something that's not doing well again today is the Nifty Defense. There's profit booking seen in the entire defense pack. Let's pull up the constituents on the Nifty Defense and see. It's down by about 1.2 odd%, but counters like Data Patterns seeing cuts of about 4 odd%, Paris Defense down 3%,
Zentech, Garden Reach, as well as Cochin Shipyard, all down by about 1.5 to 1.8%. The only counters in green are BML, which is hardly up 0.2%, and Mishra Dhatu, which is up hardly 0.2% as well. Let's also see the BSE 500 overall, the total market, and see what counters are buzzing in trade there. There you go. Of course, your Dixon Tech is one of the top losers for data pattern, Solar Industries, Lloyds Metal, as well as Siemens. There's Balaji Mines, that's up by about 13.5%, Network 18 up 10%, Infibeam, Alkyl Amines, as well as Endurance Tech that are doing well in trade today. India Mart also on the back of that Nuvama note doing very well in trade today, where the target price was hiked to 3,100 for the counter. All right, with that, let's welcome in our guest for the day, Vaishali Parekh, Vice President and Technical Research at Prabhudas Leeladhar, and Rajesh Agrawal, Head of Research at AUM Capital, joining us now. Welcome to both of you. Before I move on to the questions, Vaishali, I'll come to you as to what is your reading with respect to where the overall Nifty as well as Bank Nifty is concerned, and if you were to pick certain counters today to go ahead and buy for a short-term perspective, what would they be?
Very good morning, Mahima, Rajesh, and all viewers. Yes, the market is gradually showing strength after yesterday's move. Let's talk about the levels first. So 25,200 is a very comfortable zone. So once we see a close about 25,250 levels, I think it induces further upside target projections of 25,500, 25,600. Likewise, even Bank Nifty, we are very fine at these levels. So now for near-term basis, 56,000 would act as a support. And I would look at the target of 57,500. Now, sector-specific, well, I would say, or rather stock-specific also, I think it's now time to focus on mid-cap, chemical sector, because we are seeing good pickup, good momentum trying to set in chemical. Like in the front line, we are already seeing SRF getting in momentum. So is the case with Aarti Industries. So I think this is one sector which is been underperforming since quite a while. And I'm looking at attractive levels here on.
Keep your eye on mid-cap, mid-caps, especially in the chemical space, is the view that's coming in from Vaishali. All right, our first question for the day then is from Jaikishan Guneshwar, who is writing in, and he's got an IPO allotment of Tata Technologies last year and wants to know if he can continue to hold at the moment or not. Rajesh, I'll come to you on this one, and if you can also try to pull up how Tata Tech has done since its IPO. Rajesh, what would your advice be to Jaikishan? Should he continue to hold or sell at the moment?
Good morning, Mahima. Good morning, Vaishali. Tata Tech, since its IPO, has not done anything on the bourses. I remember it was around 1,400 after its listing, and it has fallen down to almost 700. That's almost a 50% discount from post-listing to current price. Despite the fact that the company has a strong footing in auto software, I would say, and they're doing very well. Previously, they were dependent for maximum revenue from Tata Group. Now they have diversified, not only diversified the client base, but they have diversified the product base too. Going forward, I think this company can give almost 15 to 20% return from the current market price in the next 1 year or so. So at this point of time, we suggest a hold on this stock.
Right, so that's with regards to where Tata Technology stands. Our next question then is from Dilip Asolkar, who's writing in from Mumbai. He's got 22 shares of Kaynes Technology, bought at 550 a piece, and he wants a midterm view, that is from 3 to 6 months perspective. Vaishali, I'll come to you on this. What are the charts indicating when it comes to Kaynes Technology?
So, well, the stock has, after making a high of around 8,000 levels, it's now consolidating. It did make a low of 4,000, and currently it is nicely sitting on a cluster of moving averages. So for now, I would say keep 5,500 as a near-term support level. And once we see the stock moving above 6,000 with a 6 months perspective, you can look for the first target of 6,500. And from there on, we can have a relook. So for now, it's a positive view, and 5,500 should act as a support.
All right, so that's with regards to where Kaynes Technology stands. Our first caller for the day, Pradeep, is calling in from Bengaluru. Pradeep, a very good morning to you. How can we help you today?
Very good morning to all of you, madam.
Good morning, Pradeep.
Yes.
You see, I am having 30 shares of Credit Access Grameen.
Okay.
Right. Now, it has been languishing for long,
Right.
but recently it has made an up move. And it has just broken even just now. So I would just like to know whether I should hold on to it or should I exit from it.
Okay, and when you bought Credit Access Grameen, was it the fundamentals that you saw?
Yes, it was the fundamentals because I am a long-term investor.
Understood.
And I'm having a vision. I've been investing for 3 years and I have a vision of further 2 years.
Understood. All right. So I got your question, Pradeep. I'll take this up with Rajesh. Rajesh, Credit Access Grameen is the counter, and he wants a view whether he can continue to hold from a longer term perspective or not. He's just moved to the green, making profits of about 200 odd rupees. What is your view?
See, the gentleman said it right. It has not done anything in the from a very long period of time. And this movement, I think, it's just because of market condition and nothing else, because the numbers are not that supportive at this point of time. Even there are concerns about their margins and asset quality going forward. It's better to switch to a better bank, I would say. To HDB Bank or Axis Bank would be a better choice at this point of time.
Okay, so that's with regards to where Credit Access Grameen is. In fact, Q4 was a quarter where it turned profitable after losses for quite few quarters. So that is also something that has, kind of aided the positivity in terms of where the stock momentum is concerned. All right, the next question is from Aniket, who's writing in and wants to invest in both Senco Gold as well as Sky Gold, and need to know as to where rally in the gold stocks will be in the next 5 odd years. Rajesh, I'll come to you on this one. In fact, we'll be speaking about Sky Gold on KYC today. That is Know Your Company, which is the next show. The question that we are going to pose to Sky Gold on KYC today will be that is promoters selling a major concern, plus the strong growth that the company has seen. Will it be able to sustain that? And what has led to the negative cash flow in the past 2 years? That is the key questions that we'll be speaking on the Know Your Company show. And we'll also be speaking to the management, that is Mangesh Chauhan. In fact, he's the management as well as the promoter of the company, MD and the CFO, and plus the promoter of the company. And we'll be speaking to him about all of these concerns and, of course, how Sky Gold is seeing itself in the next 5 years. But Rajesh, speaking about Sky Gold and Senco Gold, what's the view like? And, of course, your outlook on these gold stocks on the back of rising gold prices?
Coming one by one, gold prices has gone beyond 1 lakh, as we all know, and that's majorly because of one, buying by central bankers across the world, and that was one of the major reasons. And second, because of geopolitical tensions going across the world, and people are moving to safe haven assets, and that's the reason gold has gone up like anything. It's scoring above $3,300 odd dollars. At this point of time, too, I won't be surprised if moves up further from here because of the marriage season that's coming in the next few months, and because of the tensions that's still going on. And not to forget about the dollar becoming weaker. So these are some of the factors which have pushed gold prices. Whether they will sustain or not in the near term is a question that we all are looking for. But for a longer term horizon, yes, it's a good bet as a commodity. As far as stocks are concerned, I think Sky Gold, you raised a very valid question that the company has been facing negative cash flows from since very long period of time, and for that reason we are not that bullish on the stock. As far as Senco is concerned, the company has been doing well. It was basically concentrated towards the eastern part of India. Now they are trying to expand to other part of the country. It has corrected quite a lot from its recent highs, I would say, and the company has been doing well, expanding their product profile also. So somebody can take a position in Senco Gold for maybe a target of 400 odd rupees. But a safer bet to play the entire gold space, I still believe that would be Titan, because it belongs to a larger group and has a large number of stores going well. I would be more happy going with Titan than going for Sky Gold or Senco at this point of time.
First, Titan over Sky Gold or Senco Gold is the view coming in from Rajesh there. All right, our next caller, Pranamjeet, is calling in from Himachal Pradesh. Pranamjeet, a very good morning to you. How can we help you today?
Good morning, madam. Madam, I am having 10,000 shares of
Hindustan Zinc
Okay.
at the rate of 433.
All right.
Want to know long term as well as short term view.
Okay, Paramjit, not sure and I don't remember it correctly. Have you asked this question before to us?
No.
No, okay, all right. So then congratulations, because you're sitting on a significant amount of profits of 1 lakh odd rupees. So first of all, congratulations on that. And I'll take this up with Rajesh again. Rajesh, he's sitting on profits of 1 lakh rupees already right now. Would you recommend to book partial profits and hold some of the share of Hindustan Zinc, or should he continue to hold all 10,000 odd shares?
See, the quantity is very huge, and I'm not aware of what percentage of portfolio the gentleman has in Hindustan Zinc. If it is the only stock which he has, then it's quite a risky bet, I would say, because concentration is there. So he might think of liquidating some portion of it if it's a huge percentage of its portfolio. Otherwise, as far as the company's fundamentals are concerned, we are very bullish on this going forward, not because of the zinc as a commodity doing well, but because of the silver component this company has. They give a good dividend. And at these prices, I think the valuations are also very attractive. So for a longer term horizon, one can continue to hold, but just be aware of your quantity because it's a very huge quantity.
Okay. I'm not sure if Paramjit is still there online. If we have him, do we have him? Okay, we don't have him. The call has dropped, it seems. But okay, next time when he calls, we'll ask him about his concentration in Hindustan Zinc. The next question is from Sandeep Kore, who's writing in and asking about Asian Paints and wants to know if there's a chance for Asian Paints to touch, back its all-time high. Vaishali, I'll come to you on this one. What are the charts indicating for Asian Paints now?
Well, it's hard to tell whether it will reach its all-time high, but right now I can say that, it is technically quite well placed. I mean, there is good correction taken place. So I would first look at a target of 2,500 to 2,700 levels. Then let's see how it goes, because overall, crude is quite in favor of Asian Paints right now. And I would say take it as a trading strategy, not too sure whether it will go to those high levels.
Okay, so that's with regards to where charts are concerned for Asian Paints. Our next caller, Ajay, is calling in from Ambala. Ajay, a very good morning to you. कैसे मदद करें आपकी?
Good morning, ma'am. Good morning, sir. Sir, मेरा क्वेश्चन मैम AI इंजीनियरिंग पे है. मेरे पास 34, 39 पे 300 शेयर्स है. मैम ये काफी नीचे आ गया है. क्या मैम इसको बेच के सीमेंस एनर्जी ले सकते हैं? वो 27 से 25 के आसपास है.
और ये आपने चार्ट्स देख के खरीदा था या फंडामेंटल्स देखे थे कंपनी के?
नहीं मैम, फंडामेंटल देख के ही लिया था. मैं वहाँ से 1-1.5 महीने पहले लिया था, बट मैम चलता ही नहीं है, ये नीचे ही आता जा रहा है. मतलब
ठीक है, ओके, समझ गए आपकी क्वेश्चन. राजेश, आई विल टेक दिस अप विथ यू एंड इफ पॉसिबल यू कैन आंसर द क्वेश्चन इन हिंदी. AI engineering is the counter. He's bought it a month and a half ago and he's sitting on losses of around 45,000 rupees. क्या करना चाहिए उसको? खरीद के रखना चाहिए, होल्ड करना चाहिए या सेल कर देना चाहिए, एंटर इनटू समथिंग लाइक Siemens?
See, taking one by one, as suggested, let me reply in Hindi. AI इंजीनियरिंग आपने लिया है फंडामेंटल्स देख करके, और मैं कहूँगा कंपनी अच्छी है, बने रहे स्टॉक में. 1 महीने में अगर आपने फंडामेंटली इन्वेस्ट किया है तो थोड़ा सा मध्यम से लंबी अवधि का नजरिया रखें, और 1-2 महीने के लिए चिंतित ना हो स्टॉक में, क्योंकि मार्केट में कई कंडीशंस प्ले करते हैं, तो इस वक्त होल्ड रहेगा. जहां तक सीमेंस एनर्जी की सवाल है, अभी रिसेंटली डीमर्ज हुई है सीमेंस कंपनी. पावर का पोर्टफोलियो इनका बहुत अच्छा है. 15,000 करोड़ के आसपास की ऑर्डर बुक है, जो कि करीब 2 साल की रेवेन्यू दिखाती है, और नए ऑर्डर्स आने की भी पूरी संभावना है, क्योंकि सरकार का पूरा नजरिया पावर वगैरह को बढ़ावा देने का है. तो लॉन्ग टर्म इसका बहुत अच्छा है. अब चूंकि अभी हालिया की लिस्टेड कंपनी है और डीमर्ज में कई लोगों को मिले ही है, तो हो सकता है कि सप्लाई कंसर्न्स हो. कुछ MSCI वगैरह में भी सेलिंग आने की बातें चल रही है, क्योंकि सीमेंस जिनकी थी उनके सीमेंस एनर्जी आए, तो थोड़ा शॉर्ट टर्म में प्रेशर हो सकता है, बट लॉन्ग टर्म के लिए बहुत अच्छा स्टॉक है. इसमें कोई भी गिरावट में आप खरीदारी कर सकते हैं.
So that's with regards to where AI engineering as well as Siemens Energy stands. Our next question is from Mohit, who's writing in from Ludhiana. He's holding 500 odd shares of restaurants brand Asia at 106 a piece, and his time horizon is for the next 3 odd years. Rajesh, I'll again come to you on this one. QSRs in the past 2 quarters have fairly done well. But do you think that restaurant brands is the right pick amongst the QSR present right now in India?
I don't think so. The numbers are not that exciting. It's not doing that well. The expansion has not been that great. And yes, I agree that inflation is at a subdued level at this point of time because of various reasons, but you never know when commodity prices start moving up. So margins would always be a concern. Even SSG has not been that great. A better play would be either Jubilant Foods or Sapphire Foods for that matter, rather than going for restaurant brands.
Okay, so that's the view with regards to where these QSRs stand. Our next question is from Shankar, who's calling us from Chennai. Shankar, a very good morning to you. I believe you have a question on Canara Bank.
Yes, very good morning. Yesterday I bought Canara Bank at the rate of 109 rupees 50 paise,
okay.
1300 shares. But my problem is I have only 1 month short-term outlook. Any chance it will surpass us 121 or 130 rupees?
Okay, got your question, Shankar. Got your question. I'll take this up with Vaishali. Vaishali, what he's saying is his time horizon is just 1 month. Do you think he'll cross that 121 to 130 mark in that 1 month period?
Well, it's wishful thinking, but right now, as I said, we are at a resistance. We need to move past the levels to see further upside. Now, talking about PSU banks and especially Canara Bank, I think it's getting in a trend. So if 1 month is a horizon, keep 105 as the stop loss. And if all going well, there is good buying happening in PSU banks. In all likelihood, this can do 150.
Okay, so that's with regards to where charts are concerned for Canara Bank. Our next question is from Arjun, who's writing in from Bengaluru. He's got REDA 100 shares bought at 165 a piece and planning to hold for the next 5 odd years, and wants to know if this is a good stock to hold in your portfolio. Rajesh, what's the view like?
See, the company is good. They are into financing of renewable energy system, and with the recent RBI guidelines coming for project financing, that's a positive for all these stocks, whether it's PFC, REC or IREDA. For long term, yes, it's a good company, but at this point of time, the valuations seems to be on a higher side. So I would say wait for some correction, maybe 150, 140 odd rupees would be a better levels to enter.
Okay, so that's with regards to where IEDA stands. Our next caller, Mansingh, is calling in from Andhra Pradesh. Mansingh, a very good morning to you. How can we help you today?
Good morning, ma'am. I want to add PG Electro Plus. How is the fundamental and what are the entry levels? Is it the right time to buy for 2 to 3 years?
Okay, got your question.
Any other pick from packaging
EMS
industry?
space? Okay, got your question, Mansingh. I'll take this up with Rajesh again. He wants to buy PG Electro Plus. Do you think that's the right pick in the EMS space, Rajesh?
See, EMS as a space is doing very well and is likely to do well in the near future because of various reasons of the government focus and all those things. PG Electroplast is one of the companies that is going to do well at this point of time, although the valuation seems to be a bit on a higher side. But still, for a long-term view, I think one can buy this. Even Sharma SGS, so one can consider. Both these companies are going to do well.
All right, so that's with regards to where these EMS stands. And of course, we have one more question on Dixon Technologies today. Satish from Bengaluru is asking this question. He's holding 110 odd shares of the particular counter and sorry, not 110, 16 odd shares of Dixon Tech bought at 15,050 a piece, sitting on a loss of 14,000 odd rupees right now. Vaishali, today there was a note on this particular counter with a 37% downside. What's the view like? Should he continue to hold Dixon or book losses right now?
Well, I would say the trend is down right now. There is no confirmation of an upward trend. So keep today's low as a stop loss. And if any bounce coming in, you can exit them.
Right. So that's with regards to where Dixon Tech stands. Our next question then is from Mohan Raj, who's writing in from Chennai. And he wants to know if he can buy Zeal Limited at the moment from a swing trade perspective. Vaishali, is that the right thing to do right now?
So I would say Z actually has already gone into a momentum since quite some time. So I would say keep 140 as the support or a stop loss. And I think look for a target of 155 to 160 for now.
Okay, so that's with regards to where Z Entertainment stands. Our next question, in fact, our next caller, Shankar, is calling in from Kolkata. Shankar, a very good morning to you today. How can we help you?
Very good morning, ma'am. See, I'm having 20 shares of Tata Communications.
Okay.
Purchased at 934 rupees about 3 years back.
Okay.
So I would just like to know whether I should keep it for another period of 2 years or should I book profits?
Okay, got your question, Shankar. Rajesh, what's the view like?
See, if you're holding, considering holding for a period of 2 years, you can continue to hold. The fundamentals are very strong. Company doing very well. Submarine cable business is doing well. At this point of time, although the valuations are on a high side at 1,600, 1,700 odd rupees, but for a longer term horizon, it's a hold.
Longer term horizon, it's a hold on Tata Communication. The next question is from Prakash, who's writing in from Chennai. He's holding 1,000 shares of Aditya Birla Capital, bought at 220 a piece, and he's holding this since 2017. What he's saying is, can he hold this counter for the next 3 odd months for a 50% plus return? Vaishali, it seems far-fetched, but do you think that's possible?
So see, Aditya Birla Capital has given a multi-year breakout level, I think, and it is all-time high actually. So I would say, well, 250, 255 should act as a stop loss. And since the trend is already in a strong upward move, I think this can go towards 280 levels to 300 to start with. So yes, 255 should act as a stop loss and continue.
Okay, so that's the view with regards to where AB Capital stands. Our next question is from Kishore, who's writing in from Hyderabad, and his question is on Tejas Networks. He's holding 100 odd shares, bought at 1025 a piece. From the last 1 year, what he's saying is that he's sitting on a loss. Let's try to pull up what his losses are exactly. It's roughly 26,000 odd rupees, and he wants a long-term view on this one from an 18-month perspective. Rajesh, I'll come to you. Should he hold average at the moment or sell Tejas Networks?
See, valuations are still high, although the company is doing well, the numbers are good, order book is good, and the sector looks very exciting. But still, we find that the valuation at these levels are quite high. It might slip to maybe 600 odd levels in the next 3 to 6 months, what we perceive as. So it's better to either hold for a long period of time, otherwise for a medium term, I think one should try to work book losses.
Okay, so that's with regards to where Tejas Network stands. Our next question is from, do we have the name of this person? Jitendra. Okay, Jitendra Mahajan is writing in, and he's holding Cochin Shipyard's 100 shares, bought at 2,700 a piece. And he wants to know if he can hold or sell at the moment. So he's bought at elevated levels. Vaishali, would you recommend him to keep holding it from a medium-term perspective, or can he sell the counter and book losses?
I think it's already given a good run up. So right now it is in a regular retracement zone. So if 2000 levels break, then it would call for further downslide. So keep a stop loss of 2000, because according to me, the defense sector has done its bit and it can consolidate to probably see some profit booking. So keep a stop loss of 2000.
All right, so that's with regards to where Cochin Shipyard stands. But with that, viewers, it's time to slip into a very short break. But we'll be right back answering all your queries on the other side. So do stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Welcome back. You're watching Ask Profit, a show that gets all your stock related queries answered. But before we move on to your queries, there's an interesting story development that Shimi is bringing in. The government is considering waiving spectrum usage charges for defense, armed forces as well as paramilitary and science and technology department, as outstanding dues run into several crores. Shimi is joining us with more details on that. Shimi, what are you picking up?
Yeah, so this has been a demand from, certain departments, several key departments rather, including defense, armed forces, paramilitary forces, as well as the science and technology. So what sources are telling us that this entire proposal would be taken up by cabinet meeting today, with starting, a few minutes later. So the move comes amid concern raised by these departments over the imposition of spectrum usage charges on that is used for non-commercial or strategic or scientific purposes. So what officials are telling us that this cumulative dues from these departments have run into several crores over the years, as most of them have not paid any SUCs payment for an extended period. So what also we are getting sense that these are critical institutions and that use spectrum for national security, research and emergency responses. So they are not generating any revenue from this usage. So the standard commercial charges shouldn't apply is what the demand has been. And department have objected also to being billed under the same framework as telecom operator, emphasizing the fact that they are not for the commercial usage. The nature is non-commercial. So the argument came that who will pay the SUC on that part. So now the proposal on the cabinet table to decide that whether they will get the waiver or not, but this has been a long-standing demand, and we will see some decision coming in today's cabinet meeting.
And we'll keep you updated with regards to what the cabinet meeting decides with regards to where these spectrum usage charges stand. All right, thank you so much, Rimi, for breaking that down for us. Let's continue with the queries then. Rahul from Jaipur is writing in, and he's got 2,419 odd shares of Nugent Software, bought at 1195 a piece. He wants to know if he can add more, and if yes, for how much time can he continue to hold? Vaishali, I'll come to you on this one. This is a very short-term query. Now he's clarified and written that he wants to hold this for the next 4 odd days. What would you recommend? Can he continue to hold the counter, or should he book whatever price he's getting right now?
I think if 4 days is the criteria, then 1100 is the stop loss, 1200 is the hurdle. So about 1200, it may maximum go to 1220, 1240. So act accordingly.
Okay, so that's with regards to where Nugent Software stands. Our next question is from Ravi Kumar, who's writing in from Tamil Nadu. He's holding 200 odd shares of Kalyan Jewellers, bought at 5 and 6 a piece. Wants to know if he can hold from a short-term perspective or not. Once again, Vaishali, your view on Kalyan Jewellers with respect to where charts are concerned?
So, well, Kalyan Jewellers, currently the price is 533. In fact, it's just taking a new round of momentum right now. So, I would say keep 520 as stop loss and look for a trading target of 550. Above that, I don't know how short term period it is. So, 550 would be the first target. Above that, 600 is the level to watch. That is the main resistance level.
Okay, so that's with regards to where Kalyan Jewellers stand. The next question is from Sunita, who's writing in from Hyderabad. She's holding Aegis Vopak at 233 a piece, 125 odd shares, and wants to know when the results came. What she's saying is she's been holding this since the results came, and she wants to know if she can continue to hold further or not. Rajesh, your view on Aegis Vopak?
See, I think it's better to book profit at these levels because I think all the fundamentals have been discounted in this. Any meaningful upside from these levels would take some time to materialize. So it's better to book profits and re-enter at lower levels.
So that's with regards to where Aegis Vopak stands. The next question is from Sunena, who's writing in from Bengaluru. She's holding Voltas 100 quantity, bought at 1312 a piece, and she's saying she can wait for the next 1 or 2 odd months. And what could be the target price for that? Vaishali, on the charts for Voltas?
So I would say technically Voltas has been consolidating since a very long time after a recent high of 1900 odd levels and currently at 1300 levels. So I would say 1250 is the support, near-term support. As soon as the stock moves about 1250, it comes out of a big resistance level, and from there on, I would say there could be further rally going towards 1400 levels. So I think you should hold, not in a hurry.
Okay, so that's the view with regards to where Voltas stands. A very interesting question is asked by Dr. Nitish. He's asking if, as a student, what shares can he invest in right now? He's not given us the quantity, the kind of amount that he wants to invest in right now. But Rajesh, as a beginner, what would you recommend him to go ahead and buy right now, let's say 2 or 3 odd stocks?
See, as a beginner, I believe that he is new to stock market and just starting. So it's better to stick to large cap names or Nifty 50 names, which can be good for long term and be stable with less amount of risk. Equity as a product is always have an inherent risk attached to that. So as far as safe bet for a long term horizon at this point of time, I can suggest go for Reliance, HDFC Bank, ITC, Larsen, or a Cipla. These are 5 stocks from 5 different sectors, which can be held for a long term. If not in a lump sum, one can do a SIP mode, buying small quantities every month and accumulating these stocks for longer term horizon.
Okay, so that's the view with regards to where what stocks you can go ahead and buy right now as a beginner in the stock market. All right, and next caller, Vishal, is calling in from Chandigarh. Vishal, a very good morning to you. How can we help you today?
Yes, a very good morning to you, ma'am. I had a query, ma'am. I hold Blue Jet Healthcare 579 shares at the cost of 891.
Okay.
Now, this stock is into the CDMO thing, but it is at a very high P, that is of 50. I was thinking of changing, although I'm not losing much on this. I was thinking of changing to Dodla Dairies, which is at a P of 30 and has shown good results. Is that a nice switch, or should I stay at Blue Jet only?
Okay, got your question, Vishal. I'll take this up with Rajesh. Rajesh, he's completely shifting the sector as well. But what he's saying is that it's based on the P multiples that he's looking at right now. But I think the right thing, and you would be the right person to answer this, the right thing to do would be to shift in the same space which has a lower P, right? What would you suggest?
See, I was coming to that only because when you are comparing P, you cannot compare apples with oranges. See, you're comparing P of a pharma company, growing pharma company, I would say, with a company in a dairy products, which are two different sectors having two different Ps. Even in the same sector, if you look at private sector bank and public sector bank, private sector banks are always trade at a higher P versus private sector bank. Public sector bank. So it's impossible to compare Ps of two different sectors. Coming one by one, Blue Jet is a very strong company. Rather, I would recommend a buy on this. The company has been doing very well. They export their products. They are into sweetener that's used in the toothpaste and other things. The expansion has been complete. And I believe that going forward, the numbers are going to be good because of the expansion and all. Dodla Dairy is also good, but there are inherent risks associated with that. So, and that's the reason for the low P, I would say. So rather than switching from Blue Jet to Dodla, what I would suggest, be in Blue Jet. And if you have spare money, you can invest in Dodla.
All right. Rajesh, hi, good morning. And Vaishali, hi, good morning to you as well. Joining a little late today, but then pleasure as always to be on this program with you as well, Mahima, and to speak to all of you. The first question that we're taking is, or the first question I'm taking, I should say, because you've gone and taken quite a few so far. Mayura Kshatriya is writing in and she's asking about State Bank of India. She's purchased 650 shares today. And taking into consideration the relatively modest decline of about 1.7% over the course of the last 6 months. So she's looked at the price action over the course of the last 6 months. She's looking at whether or not to keep holding this. So Vaishali, on the chart, State Bank of India has not been a big mover, she's pointed out. What is the potential upside?
So I would say, good morning, Alex. Yes. These stocks, I don't think they should be taken as a day or two trading strategy. I think this is one of the heavyweight in the public sector banks. So technically, I think it's very well placed. Keep on accumulating. 760, 770 acts as a very good support. And long-term price projections, what we are looking at is perhaps 880 to 920. So according to me, this is not a trading stock. Just hold.
I believe we've got a caller from Hyderabad. Suresh is calling us. Suresh, very good morning. How can we help you today?
Yeah, hi. Very good morning. So is it right time to take an entry in NMDC? It has been fallen from 75, 76 zone to recent low. It's 67 for short term.
Okay.
Can I get the same level? I'm planning to take invest around 3 lakhs on the same.
Got it. Okay. So Vaishali, pretty straightforward question. When you say short term though, Suresh, you just want to clarify, you're talking about 1 month, 2 months, 3 months, 6 months?
I can hold it for 6 months.
6 months. Okay. Vaishali, so there you have it. The timeline is also defined. What is the level that you would look at as the best level to accumulate?
Well, so right now it is just moving in a narrow range of 65 to 70 levels. So 65 would act as a very good support. So buy closer to the support level. And once it crosses 70 levels, this is ready. It is coming out of its consolidation and it can go towards first target would be 76 and after that 86. So that's the target that we are looking at. So do buy and accumulate even at lower levels.
Next question is from Teja Reddy, who's writing in from Ireland, and he's saying that he's a daily viewer of our program. So thank you so much for that, Teja. His question is that he wants to invest in pharma companies from a view of 5 to 10 year perspective. What he has picked right now is Dr. Reddy's and Sun Pharma, and of these companies, he's saying that which stock would you recommend, and he has an amount of roughly 2 lakh rupees that he wants to invest in. Rajesh, your view, should he diversify into into both of these counters, or should he invest 2 lakh rupees in one of these?
See, I would say diversify in both these counters. Put 1 lakh each into both the companies. Both the companies are very strong companies, frontline companies, having good product profile, and not only domestic, but they cater to international markets also. And some of them are feeling in the heat because of Trump's and all. But still going forward, I think both the companies are going to do well when you look at a period of 5 years. So diversify in both. Put half money in DRL and half in Sun Pharma.
Okay. All right. We've got a next caller from Bengaluru. Murli is calling us. Murli, very good morning to you, sir. How can we help you?
Very good morning to you. And the question is to Mr. Agarwal is my favorite, Rajesh is my favorite fundamental analyst.
Okay.
My question is, I bought my wishes to him through you, and I bought 20 shares of 3M India at a rate of 29,075.
Okay.
So it's a low liquid counter in MNC and low liquid counter. It is a good dividend till they started paying the dividend for the past few years now. All along they are not paying dividend also. This year the dividend is around 512 rupees on a 10 rupee share. But I am looking at a long term, and it has reached a peak of 40,000 rupees. Though it's an IPE company, now it is around 29,000. I bought around 29,075, 20 shares. What is the view? Because most of the MNCs are not, low liquid are not in the coverage area of the analyst. So please guide me.
Yeah, it's an interesting company. The number of copyrights, the number of intellectual property that it has, the number of products that it has developed, it's an interesting story to say the very least. So let me ask Rajesh what he thinks about 3M India. It's not, as he's pointed out, the most liquid counter, and you heard the first part also. So I don't need to pass on those well wishes.
Thank you, Mr. Mulli, for your kind words. It's viewers like you which motivate us to come every day on channels.
I thought it was me.
Yes, of course, it's you. Because let me share with you a fact, Alex. My first venture in media around 20 years back was NDTV Profit, which I continued for almost 3 months after venturing to other channels. So NDTV will always be a favorite because it's one of my first.
Glad to hear.
Anyway, coming to 3M India, it's a very good company, no doubt. And as you said, a lot of IP rights, a lot of products developed in a long term. The only issue is the volume, which is not there. And that's a fact for almost all the MNC companies, because majority of the shareholding is either with the promoters or with the institutions which never sell. And for long-term horizon, you continue to hold, don't look at everyday price movement. It's a kind of stock which one can continue to keep in its portfolio for money, unless you have a requirement of fund, no need to sell kind of. So continue to hold.
Okay, continue to hold 3M India is the view coming in from Rajesh. Our next question is on HDFC Bank. Do we have the name of the... Okay, Amit Kumar from Gurgaon is writing in to know as to what he can do with his HDFC Bank holdings. Vaishali, on the charts, from a medium-term perspective, how are the charts faring?
Well, banking stocks are all doing well, and HDFC also is doing very well. So I think continue holding. It is in an upward trend, and this stock can go towards 2,000 and higher. So my view is positive.
I mean, are we reading that right?
Yeah, so, I just read that on the screen.
So I just want to ensure, if you're listening to this, Amit Kumar from Gurgaon, please clarify, because you've written 10,000 units of HDFC bought at 1929, which would mean that the acquisition price would be 1.9 crore. And another 10 units bought at 1,908. Of course, no judgment. If you bought, kudos to you, and hopefully you don't have concentration risk. Let's talk about JP Power next. And from HDFC Bank, it's a pretty wild switch. We've got viewer Srishal, who's writing in from Bengaluru and who is sitting on decent profit. He says that he has bought at levels of 14.2. Vaishali, on the charts, what would you do?
I think this too is in a good upward trend. since it's for a trading perspective. Keep a stop loss of 17, and I think this stock in times to come can go towards 2021. So still there is scope of further upside.
And we've gotten clarification on the HDFC Bank doubt that we had. Amit does indeed have 10,010 units of HDFC Bank.
Interesting.
Okay, let's take the next one. We've got ONGC that we're talking about. Prasanna is asking about this, and he's looking for a short-term trade. I believe that he's bought 5,000. Let's pull up the shares. Yeah, so he's bought 5,000 at elevated levels, 339 in August. And he's saying that it's not crossing 260. Yeah, so that's the level that he's watching for in the near term. Vaishali, on the charts, what are the prospects?
So this is absolutely the technical resistance that he's talking about, 260 levels. So right now I would say 235 is the support. So it is on a downward trajectory. 235 is the stop loss. So I think the stock should bounce from here on, and let's see.
That's with regards to where ONGC is concerned. Our next caller, Shankar Narayanan, is calling in from Bengaluru. A very good morning to you. How can we help you today?
Good morning, madam. I'm a regular viewer of NDTV.
Thank you so much.
Both angles, congratulations to all of you. Both today's experts, both Rajesh and Vaishali madam, I am really appreciating their way of helping us. My question is on CAMS. I recently bought some months back, 4 shares at 4177.
Okay.
After that, the price came down to 3,900. Then again, it shot up now. So, is it the right time to add, or we have to wait for the quarterly? Because their performance, everything is good. I have studied the company.
Okay.
Their mutual fund holdings, maximum support from the mutual fund industry, all those things I have learned. Their ROC, ROE are fine.
Understand.
And their PE also is below the industry. So let us have to have the view. Long term, I wanted to hold a long term.
Okay, Shankar, first of all, thank you so much for those kind words, and thank you so much for watching us daily. Rajesh, I'll take this up with you. He studied the company very well. What's your view with regards to where CAB stands?
See, first of all, it's a very good thing that he has studied the company, and that should be the procedure before investing your hard-earned money. I agree to the fact that CAMS is doing very well. The numbers have been good, return ratios are good. And going forward, also with the kind of increase in SIP amount every month, I think these kind of companies, whether be it CAMS or Capintech or other capital market related companies like BSE and all, are going to do well, no doubt on that. In a short term, there might be ups and downs because of market conditions and other things, but for a longer term horizon, these companies are going to give decent returns, I would say. So if you have a long term horizon, continue to hold, ignore short term price movements.
Okay. If you have a long term horizon, continue to hold is the view coming in on CAMS. All right, our next question, in fact, our next caller, Ashok, is calling in from Hyderabad. Ashok, a very good morning to you. How can we help you today?
Very good morning. I'm planning to invest 5 lakhs, and I'm looking for either Suzlon Energy or Inox Wind or both.
Okay.
So just I want to know. I'm investing for 6 months to 1 year.
Okay. Got your question, Ashok. Just want to.
What is the right levels to enter? What is the right levels to take an entry on those things?
Okay. Any specific reason as to why you've chosen only these two counters in the renewable energy space and wind specifically?
Yeah, going forward, I think as we are having a lot of power themes were going on, but it is slowing down now. But again, I'm thinking that it will pick up in next 6 months to 1 year. So at the same time, it came down. At the same time, Suzlon came down from 76 levels to 64, 62 levels.
Correct.
As it is support zone, and Inox Wind also trading between 200 to 160. So it came down from that level. So that's the reason I'm looking into. I was verifying these two things.
Okay. Ashok, got your question. I'll take this up with Rajesh. Rajesh, he has almost 5 lakhs to invest in right now, and he's saying if he can go ahead and buy Suzlon or Inox Wind or maybe both. But, energy transition is going to be the next big thing. Would you recommend to go ahead and buy one of these counters and anything in the solar space as well?
See, coming one by one, the companies he has chosen is both into renewable energy, no doubt on that. Suzlon has repaid its debt. sitting on some amount of cash, going for capacity extension and all. But all said and done, both the companies are trading at their optimal valuation, and any major upside from these levels would be a little difficult task. And moreover, when you talk about long-term horizon, I think quality matters, and you should go for large cap names like a Tata Power, which is also in a renewable as far as conventional energy also. So that's a better pick, I would say, putting new money into a power sector stock for a long-term horizon.
Okay, so that's in regards to where these power companies stand. We have one more question from Srishil, who's writing it from Bengaluru, and he's currently holding JP Power. He's invested around 15,000 odd rupees. Okay, I think we've taken this. All right. Then our next caller is from Prasanna, who is okay. We've also taken this. We have Delta Corp as the next question. Manohar Kher from Mumbai is holding 600 odd shares of Delta Corp at an average price of 152. He wants to know if he can average, hold, or sell at the moment. Vaishali, on the charts for Delta Corp.
So, well, chartically, it is showing signs of improvement. Hold for a while. If the stock crosses 90-92 levels, you can expect 105. But if you have to go in this sector, I think Nazara is already in a set trend. I would prefer that.
All right. So that's it with regards to where Delta Corp stands. Our next question is from Jyoti, who's holding 500 odd quantity of the counter. She's not mentioned the counter. That's interesting. All right. We'll ask her what counter she's holding 500 shares of. But the next question is from Shrikant, then from Hyderabad. He's holding Paytm at an average price of 1376, 100 odd shares, and wants to know if he can hold or exit. Rajesh, lots has happened with this particular counter. What do you suggest? Should he continue to hold, or should he sell at the moment? What should be the strategy?
See, holding would be on hopes that things would be better going forward. But I don't think one should continue to invest in a company like Paytm. The numbers have not been that exciting. There are a whole lot of negative stories going on. Competition is going up. So it's better to switch to some other NBFC, maybe a Jio, Poonawalla, the Bajaj Finserv would be a better choice at these levels, and they might help you recoup your losses what you incur in Paytm.
Okay, so that's with regards to where these finance companies stand, fintech companies, in fact. All right, the next question is from Hariharan, who's writing in and wants to know about Jyoti Labs. He's holding 500 odd shares of Jyoti Labs, bought at 323 a piece, and wants to know if he can hold or average at the moment. Vaishali, on the charts, what are you observing, and what is the support and resistance that you see?
Well, I'll just have a look because it's on the other one.
All right, Jyoti.
So I don't have the stock. Sorry, I don't have.
All right, Rajesh, in your view on Jyoti Labs, it's one of those, small cap companies, in fact, not small cap, but small to medium cap companies in the FMCG space with a decent valuation.
I think one can continue to hold very strong brand. The Ujala brand belongs to Jyoti and it's doing very well. It's one of the market leader in that category. And apart from Ujala, there are a lot of other brands also with Jyoti. They are doing very well month on month, and numbers have been good. The margins have improved, and with inflation going down, I think demand from rural side is also going to go up. So maybe a target of 373 odd levels in the next 12 months is quite possible. At these levels, it's a hold. And by any chance it comes to around 300 odd levels, it would be a add.
So that's with regards to where Jyoti Labs stands. The next question is from Angad, who's writing in from Indore. He's bought Garden Reach Shipbuilders at 1569 a piece. Wants to know if he can hold or sell at the moment. Vaishali, on the charts, how is it faring?
So I would say Garden Reach, of course, one is if he has bought at good levels, I would say book partial profit because it is showing resistance at 3400 and currently at 3087. So if this level breaks, it can see a downslide coming to 2600 levels. So no, I'm booking partial profit.
Okay, that's with regards to where Garden Reach stands. Next question is from Vikram, who's writing in from Bengaluru. It's an interesting question. What he's saying is that he's studied EIH Limited, and he's saying that the PE appears to be least in the sector as compared to something like a Chalet or ITC Hotels. And it's a good dividend paying company as well, and wants to know the right levels to make an entry in this counter. And would you recommend buying this particular counter in the hotel space for the next 3 to 5 years? Rajesh, what's the view like? Is EIH the best pick in the entire hotel industry space?
See, travel and tourism has been doing very well after COVID. And all these hotel stocks are doing well. EH with its brand of Oberoi and all, they are into top category, I would say, and the valuations are also good. One can add to this. Apart from EIH, there are several other hotels like EPJ Surendra, which is trading at a very low valuation that has a Park Hotels brand. Or even ITC, which the gentleman said, because of the expansion plan that the company has almost said that the management had categorically said that they're going to double the capacity in the next 5 years. It's a debt-free company doing very well, belonging to the ITC group. So I think all these three stocks are good enough, and one can consider buying any one of them.
Okay, so that's with regards to where these hospitality stocks are concerned. But with that, Vaishali and Rajesh, thank you so much for joining us and taking us throughout the show and giving us all those insights. We're completely out of time on this edition of Ask Profit, but do stay tuned because Know Your Company is right back on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
scholars from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to NDTV Profit. You're watching Know Your Company, and one stock that we're dissecting today is Sky Gold. Joining me is also Mahima Vachrajani, who tracks the sector pretty closely. Mahima, clearly with regards to where Sky Gold goes, an interesting company that we have been watching out for. The kind of growth that it has achieved in terms of the markets is fabulous. Now the key question over here is as to why are we talking to the company? But before that, let me quickly take you through, what the company is all about. Firstly, the company is established in 2005 and they're mainly into designing, manufacturing and marketing of gold jewelry. Now, why is this company on KYC? The first plate that you see right now on the screens, why are promoters offloading? Because that's the latest one that we've picked up in terms of promoters which have gone ahead and offloaded nearly 4 to 5% stake right now. What is the reason for that, and is this what they're looking to continue doing as well from here on? Moving on, the second question that we ask on KYC right now is why enter the lab grown segment in FY26? It's an absolute niche that they're looking at because bulk of their businesses in terms of gold jewelry. Getting into lab grown, where to what we understand is 14 carat is what they're concentrating on. So we'll understand that rationale on that front. Thirdly, if you talk about the numbers, their profit growth has been higher as compared to their top line, and from a margin perspective, it's single digits. So to understand the math in terms of why this kind of a permutation combination that comes up in terms of their profit and loss account, the growth that they've been achieving, 3 digits, is this going to be sustainable from here on or not? And what is it that will lead to this kind of sustenance? And very lastly, export is another aspect that they're considering. Currently, it's in single digits for the company. The plan is to grow it to double digits, and if I'm not mistaken, it's around 25 to 30%. So what is that strategy going to be with regards to exports and to this kind of growth that the company has been achieving? How much will exports add on? I think those are the key questions, Mahima, that we should be looking at as well. But very quickly, in terms of about the company, we were talking about what the company does. Designing, manufacturing and marketing gold jewelry is what they're looking at. Apart from that, in terms of the business model, what's interesting is it's a B2B model. That means the company actually manufactures gold jewelry and gives it to retail companies. So that's what you're looking at from a business perspective. The products are mainly in that mid-range category. So mid-range jewelers is who pick up this kind of jewelry from a Sky Gold. Let's quickly understand their clientele. Malabar Gold, Joy Alucas, Senco, Kalyan Jewelers and Carrot Lane. These are the major clients that the company has so far. But what's interesting is the names they've added in FY25. They've added names like Indriya, Carrot Lane, PN Gadgil, as well as Pothys and Vega. So these are the ones which have added in FY25. Whether they've given them business so far or not is a question that we will be asking the management from here on. In terms of manufacturing, their facility is around 1.3 lakh square feet, capacity of around 12.6 tons per year, and they're expanding to almost manufacture 200 kgs per month to 1 ton per month. That's what they're looking at. Product portfolio as well, let me take you through that. 9 to 24 karat gold is what they are manufacturing, and this includes rose gold, white gold and yellow gold. Their focus is mainly in terms of lightweight jewelry, and the company has moved from generic to complex manufacturing. In 3 years, in fact, if you talk about their design team, that has also scaled to almost 110 members. So that's what it's looking like in terms of where the overall business goes. But I think Mahima could talk about more in terms of their additional foray.
Right. So, in terms of their additional foray, like Hiral was mentioning earlier as well, diamonds is something that they've made a foray into, and lab-grown diamonds is going to be, something in focus. The Sky9 brand is a lightweight and contemporary jewelry brand that they have taken on board, and this is going to focus on making lightweight diamond jewelry. Plus, in the lab-grown diamond space, they're planning to add 14-carat lab-grown diamonds. So that is going to be something to watch out for, because that is going to be something that will be more of from an export perspective, since they're also planning to increase their overall exports. In terms of their overall exports as well, they've expanded into the US markets as well, and they plan to grow their exports going forward as well to that 25 to 30% of the overall revenue. Plus, in terms of the business mix, around 65% is corporate and overall 35% is others, but they plan to elevate that to almost 100% in the next 3 odd years is what the management has said. In terms of the overall inventory management, the strategy is to manufacture low grammage and move towards more fast moving designs. So that's with regards to where their inventory management stands. So overall, this is the picture as to how their, of course, manufacturing takes place and what their strategy is in place here.
Lots to ask the management about. Let's quickly look at the rating parameters, Mahima. Firstly, the income statement check is what you're watching out for in terms of the first rating parameter. We'll look at the balance sheet, cash flow, return ratios. These are the top 4. Moving on, you look at the shareholding, the street credentials as to what the street is looking at in terms of the company. Valuations, we're trying to value it with companies who are actually, retailers into the jewelry segment. So that's the like-to-like comparison that we're looking at. And the street coverage along with the outlook is the key for this one. So these are the 8 parameters, Mahima. Let's start off with the first one.
Right. So for income statement, overall, the performance of the company has been good when it comes to 3-year CAGR performance and 3-year growth as well. But like Hiral mentioned at the start of the show, the key question here is as to how profitability has grown much and far better than how revenue has grown. But with respect to their overall top line growth, 3-year CAGR has been roughly 65 odd %. EBITDA, the 3-year CAGR has been around 114 odd %, and the overall net profit CAGR has been roughly 99%. Margins, margins have been on an increasing trend, though still in single digits. From a 3% in FY23, they've gone to around 6% in FY25. In terms of the overall revenue split right now, domestic stands at 92% and export stands at 80%. Which the management plans to grow exports to that 25 to 30% mark of the overall revenue. In terms of the volume growth has also been very good for the company. Q4 FY24, the overall volumes stood at 460 kg per month, which was a 300 kg per month in Q4 FY24. So significant amount of growth in terms of volumes as well. So overall, the entire income statement posts a good picture, which is why we've given it a thumbs up considering the overall 3-year CAGR growth as well as volume growth in picture.
So that's a thumbs up on that front. Let's look at the balance sheet and check that. Now, what's interesting is that the cash balance has been absolutely strong. If you look at FY23 to 25, the cash and bank has grown from 18 crores to almost around 175 crores in terms of FY25. So that's a strong number coming in there. If you look at the other aspects as well, in terms of the debt is something which is another matrix we should be looking at, where the cash on the books on the bank is enough to cover the borrowings of the company, which is again a strong point from here on. In addition to that, if you talk about their new facility, they are planning to develop almost 5-4 lakh crore square feet on the land that they have, and this will also go ahead and boost their production to 4.5 tons per month. In fact, they've gone ahead and looked at an acquisition, that is Ghana and Gold. That acquisition also is in progress, and they've already seen a capital raise of around 270 odd crores in the month of October 2024. So the key question that comes up over here is, with a strong cash in bank plus a fundraise that they have done, what is the reason for the promoters to go ahead and sell out stake? Though with all these parameters, we've given a thumbs up to the balance sheet.
Right. The next parameter is cash flow. In terms of the cash flow, the overall net cash flow position has been negative in the past 2 odd years. When we take a look at how cash flow from operations have fared, they've grown to a negative 273 odd crores in FY25, which was a negative 6.5 crore in FY23. This is because of high working capital changes as well. But in terms of the overall net cash flow position as well, which was a positive 17 crore in FY25, it's gone to negative 3 crore in FY20, which was a 17 crore positive in FY23, has gone to a negative 3 crore in FY25, which is why we've given it a thumbs down for now, because overall net cash flows have remained negative in the past 2 odd years, from a negative 5 crore to a negative 3 crore, slightly downtick there, but still in negative, and which is why we've given it a thumbs down for now.
Okay, so that's with regards to where the cash flows go. Moving on, let's quickly look at the return ratios. In fact, we did have a lot of to and fro with our producers and internally as well as to what should be the rating that the company should get in terms of the return ratios. Yes, if you have to look at 2025, the return ratios are absolutely strong because the return on equity is around 21%. And if you have to talk about the return on capital employed, that stands at around 30%. But the key over here is there is no consistency that the company has been able to maintain, because it's already seen ROE of almost 22% in 2022, and the ROCE, that's the return on capital employed, has actually gone up to levels of 32% in 2023. So there is no trajectory that we are able to gauge whether it's an upward trajectory for the company or a downward trajectory, or whether it's maintained. There is a lot of volatility that you're seeing in terms of where the return ratios are concerned, and that's the reason why we're giving it a neutral rating.
The next one is a very important point, that's shareholding, and we've been talking about this throughout the show, right? Because promoters have slightly been selling their stake in the counter. In terms of the overall promoter holding, if we take a look at the last 3 odd years, the overall promoter holding has gone down from that 73.6% mark to a 58.2% mark as of March. And post that, last week, promoters again sold roughly each of these promoters sold roughly 1.8% stake in the counter and combined roughly 4 to 5 odd% stake in the company. And because of this, we're seeing that since promoters are selling stake in the counter, we've given this a thumbs down specifically. So promoters have been holding stake in 2 different ways. One, their individual holding, and via HUF. So last week they've sold stake of the HUF, where all 3 of them held around 2.19% stake, and they've offloaded roughly 1.8% stake. So the overall holding, in terms of promoter, one thing is going down, plus FIs never, held any kind of stake in the counter, and hardly in March 25 ending, FIs hold around 0.4% of the overall stake. DIs again have seen a pickup in terms of their stake overall, which was nil in the first 2 years of March 23 as well as 24, but that has gone to up to 7%. Lastly, in terms of public shareholding has gone up from 26.5% to that 34.3% mark. But like I mentioned earlier, because promoters are slowly and steadily decreasing their stake, we've given it a thumbs down here. And the question really to ask here is that why is that happening?
Interesting. So why is that happening is one question. And the other aspect is the kind of names that are coming in as well, because if you see the trend, the DIIs have been increasing, and in the latest one as well, I think it was Bank of India mutual fund which bought around 0.5% of stake. So that is one aspect that we need to consider on this front. But apart from that, if you see in terms of the street credentials, let's quickly look at that aspect. In terms of street credentials, in terms of the stock performance, 1 month the share price is down 15%, but this is mainly on the back of the pressure the company has been facing on the back of the sale that has happened. However, on a 1 year basis, 95% is the kind of return. 6 months again similar, 26% downtick. YTD also, if you see, it's a 20% downtick that you've seen, and the actual shining part is 95% upside in terms of the last 1 year, and in the last 5 years 13 times is the kind of returns an investor has made in terms of Sky Gold. But only because of the recent pressure, it's a neutral rating that we've given in terms of the street credentials.
Right, absolutely. And in terms of valuations as well, even this was, a point of discussion when we were giving it a rating, because overall the valuations are cheap right now as compared to where the other jewelry companies stand. There is Kalyan Jewellers, which is trading at 75 times. There is Senco, which is trading at 34 times. PC Jewellers at 13 times. Titan trading at 95 times. Sky Gold is trading at around 35 odd times, which is cheaper than as compared to something like a Kalyan Jewellers or a Titan. But overall, trading at 35 times is still not cheap when it comes to taking a look at the valuations, and which is why we've taken a neutral approach when it comes to valuations for now.
Okay, so that's with regards to the valuations. Let's quickly look at street credentials. Now, the thing is, not too much of coverage that's happening in terms of Sky Gold. So you just have a buy rating, and that's a single buy rating that's coming in on this counter with a potential upside of 74%. So hence a neutral rating on this one. So those are the 8 aspects that we've spoken about. But let me take you through the final performance rating. If you have to consider all the parameters on your screens, if you can just quickly get that one from income statement check to your balance sheet check, return ratios, cash flows, shareholding. Income statement, balance sheet, again a thumbs up, cash flow is a down. Return ratios, as we said, that because there is no consistency, it's a neutral. Let's go to the next one. If you talk about shareholding, a downtick because the promoter has been selling. Street credentials, again a neutral. Valuations neutral because it's on the expensive side, not as compared to peers. So overall a 4 on 8 is what NDTV Profit has given a Sky Gold in terms of its KYC rating. But to discuss further on this, let's also welcome in Mangesh Chauhan, MD and CFO at Sky Gold and Diamonds. Mangesh, welcome to the show and a pleasure to speak to you at NDTV Profit. Our first question coming to you is the promoter sale that has actually, worried investors right now on the streets, and that's the reason why we've seen a downtick in terms of the stock price if you have to look at the last 1 month or even on a YTD basis. If you could help us understand what's the rationale?
Yeah, sure. So we, promoter, his company is like completed 20 years. We have started a journey from 2005 and it's about 2025. So we have not uploaded any shares from last 20 years. We have been growing the company. We done 2 fundraise in the company, and first we were concentrating on the company growth and company perspective. Again, in 20 years, we have uploaded first time the 3 promoters have uploaded together 4.97%. So again, we took a warrants 18 years back of 1.4%. So it will be add up in July. So net, I will be at 3.6%. We uploaded together as 3 brothers. We promoters are there. So again, we uploaded after 20 years. So between 3 promoters. And again, some mutual funds wanted to Bank of India purchase and other funds also purchase. That's why we uploaded here.
Okay, Mangesh, hi, Mahima also joining in. Just want to get a sense, Hiran and I were discussing earlier as well about this, that overall your 3-year CAGR in terms of your top line growth has been around 65 odd %, but that compared to a net profit has been around 99 odd %. What has worked in the past 3 years when it comes to your cost optimization? Because I believe that is something that has led to a better growth in terms of profit, and at the same time margins have of course improved, but do you think there is further improvement that you expect in the margins going ahead from that 6% mark?
Yeah, 100%. We came up in our journey. You can see 2010 to 20, we work on the revenue model and customer acquisition model. And in the last 3-4 years, we came up with new products, new verticals, which add up to our margins. We came up with the studded jewelry, lab grown jewelry manufacturing. Again, we came up with 18 karat rose gold, white gold jewelry. So this expanded our margin. And going ahead, we are going to gold metal loans, which will improve our PAT levels by 0.4, 0.5 basis. And again, we are increasing our gold, advanced gold business from large corporates, which can again add up to our gross margin and EBITDA. So we are moving ahead to advanced gold business, which customer provide us the gold and we have to manufacture for them. So we don't have to fund the inventories and all in that. So we are expecting in 2 years, 10% advanced gold business will come from that. So again, we are coming up with new verticals in 18 karat. Also, we are expanding studded jewelry, which will help us to improve our gross margin. And again, gold metal loan, our debt converts into, whenever converts into gold metal loan, it will help us to improve 0.4 basis. at the PAT level also.
Okay. Mangesh, two questions I have. One as a follow-up to the first question I asked you about promoter selling, and second as a follow-up to what Mahima asked you as well. So you're saying you're looking at value unlocking because over the last 20 years, the promoters have not really offloaded anything, right? Is there any plan of further stake sale that could happen from promoters on the back of value unlocking? That's part one. And from a business performance perspective as well, we don't understand the math with the profit growth being way higher as compared to the top line growth and the margins being in single digit when gold prices have been increasing in this to this extent. So if you could help us understand that permutation.
So again, on the offload basis question, we are not going to offload anything in the future 2-3 years perspective, because already we have offloaded a good percentage. So we don't want to offload in coming 2-3 years or 4 years anything on the promoter sides. Coming to the margins, you can see we are into lightweight modern type jewelries, and we have come up with many new different verticals. We manufacture for CaratLane also, and Aditya Birla we onboarded. So we came up with new verticals. We come up with studded jewelry. We came up with 18-karat rose gold white jewelry, which is improving our margins. And again, gold rates are going up. So this is changing our inventory mix. You can see our majorly our inventory falls below 1 lakh. We are into lightweight jewelry, in which impacts is very lesser of the gold rates, because lightweight jewelry is a day in day out jewelry selling in 365 days. So inventory shift is there. 10 grams in inventory we are making in 8 grams. We are making the inventory much lighter with our 3D printers, with our technologies and all. So again, a number of pieces are gaining, volumes are changing, inventory shift are changing, but lightweight jewelry has lesser impact of gold rates, and that's why we have good margins in that.
Okay, Mangesh, just want to get your sense. FY25, your split was 92% domestic and 8% exports, which you've said will grow to around 25 to 30% of your total revenue. Just want to get a sense that how will this work? Which export markets are you targeting? And plus, try to explain us as to how the entire sourcing from Dubai for your export works for you.
So sure, we are at 8 to 9%, and we are targeting in the coming 2 years to go up to 25% from export. We are right now opening a subsidiary in Dubai to serve to UAE. So again, when we have an office in UAE, we can do a job work from our parent company, and that will help us to give the ground level support to the customer and a good rate to the customer at the UAE. You can see in India there are premiums of $4 to $5 for exporting the gold. So we will procure gold in Dubai and send the parent company for job work basis, and then we can sell at Dubai, which is the rate going in the Dubai gold prices. So customer don't want to bear the premium of the dollar of the on the gold, making charge they are ready to pay. So that will help us to boost our 20-25%.
Right. Understood. Yeah. Understood, Mangesh. So I think basically it's the making charges where you pay taxes, the import duty, that quotient is what the customers save as well. So that's how you're looking at that model. But thank you so much for joining us on the show. To do a quick wrap, one interesting aspect over here, Mahima, is where the promoters have said for the next 3 to 4 years, they are not looking to sell anything further. Right. The current sale was mainly on the back of value unlocking, which they were holding for the last 20 years, and export is going to be the highlight of their story from here on, which they plan to scale up to 25 to 30%. But completely out of time. With that, it's a wrap on this edition of Know Your Company. Stay tuned for more updates on NDTV Profit.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
That's huge. That is a biggie. It's out of
Gold Plus Clear Glass. पार हो या नियर, सब कुछ दिखे clear.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in
Hi, thanks so much for joining in. You're watching NDTV Profit, and those are live visuals. It's a momentous occasion for us here in India. We're all looking skyward, or will soon be, either figuratively and in some cases quite literally, as the Axiom 4 mission, which you're seeing on the screen right now, as it takes off from NASA's Kennedy Space Center in Florida. And that's because on that rocket is India's very own Shubhanshu Shukla. He is becoming the second Indian to go to space. The countdown is live. This is after a gap of over 40 years. The last time there was an Indian in space, that was Rakesh Sharma, and he coined the term that you're all familiar with. Sare jahan se acha. There you go, the rocket is taking off as we speak, and look at those visuals. It's a momentous occasion. There are 4 humans on that flight, among them Shubhanshu Shukla. This, as you know, is a collaborative human space mission run by Axiom, NASA and our very own ISRO. In fact, Shubhanshu Shukla is representing ISRO on that mission. There are 4 crew members on board. The commander is Peggy Whitson. She's the director of human spaceflight for Axiom with 675 days of space experience. The pilot, as you know, is our very own Shubhanshu Shukla. He's an Indian Air Force pilot, an astronaut with ISRO, and he's going to be fundamental in India's journey to space, India's own journey to space through the Gaganyaan mission and everything else that ISRO is working on. There are 2 mission specialists on board. One of them is Slavoj Wisniewski, and he's of Poland, and you've also got Tibor Kapu of Hungary. What a progress that rocket is taking. It's the Dragon, of course, and it's on its way to the International Space Station. Now, once they reach space, as I point out, they will make it to ISS, which is the International Space Station, and they will spend as many as 14 days there conducting research on behalf of several members of the scientific community. There will be 60 research projects that are conducted. Remember, this is a rocket flight that is taken off after multiple delays. Everything had to be absolutely right. And this is the difference between the launch of a commercial satellite or anything else that is not crewed by humans into space and a mission that is run by humans. When there are humans on board, everything needs to be absolutely perfect. You need to have every element, and this is complicated technology. There is complicated technology involved, of course, and there will be, as you know, if you watch some of these films in the past, detachment of the rocket, of certain portions of the rocket. There you can see that detachment of certain portions of the rocket as it makes its way into space. And ultimately, once it does make its way into the rarer parts of the atmosphere, remember, this is going to be a low orbit mission. And so it will at some point move beyond the gravitational pull of the Earth, and it will start orbiting in a low orbit in India. And by the way, we're going to be speaking to several people over the course of this next half an hour, just to give you a sense of why this is so important. We're going to be speaking to Dr. Amitabh Ghosh, who is a NASA Mars scientist, and also he's a planetary scientist. We've got Dr. Pavan Goenka, who's the chairman of InSpace, which is India's very own space program. And we've also got Pavan Kumar Chandana, who's the co-founder and chief executive officer of Skyroot Aerospace. Those live visuals tell you a story, don't they? You may not understand everything that is going on, but they are momentous, to say the very least. The entire globe looking upwards and looking at these visuals, and of course this is part of the process that will take Axiom 4 to the International Space Station. Those are the parents of Shubhanshu Shukla who are watching this live, and everybody's got their fingers crossed. Oh, so you have visuals from inside the rocket. as well. And everybody's watching with fingers crossed at this juncture. Those are live visuals, of course, coming through from the rocket. The 4 astronauts that are making their way all the way up to beyond, in fact, the gravitational pull of the Earth, and they will eventually make their way to the International Space Station. It's not a journey that's going to be completed very quickly. Of course, it's going to take several hours. 28 hours is what is expected to be taken for the crew of Axiom 4 to make their way to the International Space Station. And of course, once they make their way to the ISS, there will be multiple research projects that they will undertake on behalf of several countries from around the world, not least of which from India. There will be at least 60 research projects that they will take up. And there's an interesting one that even studies diabetes, believe it or not, but the rest of the projects are going to be talking about or going to be studying space-related research. Some of those projects are ISRO's very own projects, and the learnings from this mission are going to be absolutely crucial in the Gaganyaan project, which aims to take our own astronauts into space. But joining me now is Dr. Amitabh Ghosh, who, as I pointed out to you earlier, is the NASA Mars scientist. Thank you so much, Dr. Ghosh, for taking the time. The question that I'm asking is, why is Axiom 4 such a big deal, and why is there so much focus on it right now?
Well, there's very three interesting things. There are 3 countries which are sending the second astronaut to space. So, and India is one of them. And I think it's even more exciting for India is because our astronaut will have their own ride, which is Gaganyaan, a year or two back. So, it's like, it's different if you're driving a friend's car, but it's different if you're driving a friend's car and you're buying your own car the next year. So there's so many learnings that our astronaut could, Shubhranshu Shukla could do in that quest, which will affect his own journey a couple of years in India's own spacecraft.
Yeah, I mean, it's taken a lot of time for the second Indian to make that journey to space. And so therefore, it's very important. And you pointed out Gaganyaan, Dr. Ghosh. Let's talk about why this is so important in the context of India's own dreams of having astronauts in space and for its own mission to space. What will be done on this mission that will be a precursor to that one?
So I think, just think maybe 500 years back when the continents were being discovered. And so there were a few countries which did this, which went forward and discovered these continents, and the world became a bigger place. So now we are again at that corner where human spaceflight will make our world a bigger place. Very soon, maybe in 20 years, certainly in your lifetime and my lifetime, people will be landing on the moon. And maybe in our children's lifetime, they will start having bases on the moon. So our world is going to increase. And so there are few countries which are going to partake in this journey, the countries that have that capability. And India is going to be one of them, which is huge. And so we don't really think of it in this terms. Most countries in the world, and there are maybe 200 plus countries, right? They don't have the capability of spaceflight, robotic spaceflight, leave alone human spaceflight. So it's a huge deal. So 50 years from now, when there will be a base on the moon, or there'll be journeys maybe 100 years from now to Mars, there will be a few countries who will be part of that club. And so India will be one of them. So that's what is so very exciting and significant.
So Dr. Ghosh, to that end, let me ask you this. Why is it that there are so many satellites, so many flights into space by rockets that are not crewed by humans, so non-human missions, if you can call it that, and there are so few human missions? Is it a very different technology? Is it the cost involved? And so from that perspective, with these missions that are so close to each other, do we see more missions go up?
Okay, so you have asked a very good question. So imagine you were going to space compared to, say, a rover going to space to Mars, right? So if you go to space, then we have to be thinking of the pressure of the vehicle, the temperature of the vehicle, whether you have water, whether you have other facilities, you have meals. So you have to have a foolproof system, subsystem, engineering system, the power subsystem, the whatever is keeping the oxygen levels up. And then you have to think of redundancies. What if the power system fails? What is your plan then? So these things make the human missions much more engineering-wise rigorous, and sometimes maybe 4 to 10 times more expensive. So you cannot take a risk if the human is flying. You can perhaps take a risk if there's only a robot, if there's only a rover going to Mars or the moon. So that is the reason. And why do we have more non-human missions? Because most of the missions are like to put a communication satellite in orbit, to put Starlink satellites in orbit. So the motive here is to really has a different goal. It's not for humans to go and do experiments in space. So there are more demand for that, and there's less demand for humans going to space station, right?
Dr. Ghosh, finally, you spoke about those experiments, and there are several, and you pointed out at the start of this conversation, there's going to be a collaborative mission, and each individual and each part of that crew is going to carry out experiments once they get to the International Space Station. Can you talk about why that is important? What kind of experiments are these?
Okay, I will answer a different question. Since you're a business channel, I will answer a different question. So we are at the cusp of space tourism happening. Okay, so we are at this, if you think of commercial space flight, this happened in the early 1900s, right? Very few people were in the business. The Tatas were in the business, Henry Ford was in the business, and he went bankrupt. People did not want to fly. People didn't think this was feasible. People thought, who would want to go to another continent? So now we are in this stage where Elon Musk's company has reduced the cost of spaceflight by 95%. So suddenly a cost to go to Mars is no longer astronomical. It's probably the cost of maybe $100,000 to $200,000, which you can afford in a lifetime. So we are sitting in this sector, which can be $1 trillion business in 10 to 20 years. And I think we are at this crossroads now. So people are questioning, people are saying that, well, why do this? Then if you notice, ISRO, NASA, all these are taxpayer funded entities. So they cannot do this forever. So at some point, the private sector has to come in, and they are coming in. And so you have businessmen like Jeff Bezos trying to set up a base on the moon, businessmen like Elon Musk trying to lower the cost of space travel. So if you think of in a business perspective, nobody would have said, for example, SpaceX, the valuation is now $100 billion. If you look at 20 years back, SpaceX was just starting out. It was out of a garage for almost. Right. And no profits. And look what has happened. And this is just the tip of the iceberg. So we are looking at a very different journey, and maybe even a sector opening up, which would be space tourism.
Okay, so and on that point then, I wanted to ask you about that, but the missions that have gone, not missions, I shouldn't call them that, but the flights that have gone, almost flights of fantasy, you have suborbital flights that have taken place. What we're talking about, Axiom 4, is a low orbit mission. So do you think that private sector, SpaceX, etc., will soon have low orbit missions?
No. See, I think this is my personal opinion. I think low orbit missions will die out. Low orbit missions are 15 minutes or 10 minutes into space, and they cost like, I don't know, $200,000 or something like that. It's not interesting enough. I don't think, if you go to a ride in Disney World, it's 20 minutes, it's okay. But this is too much hassle just to go 40 miles into space and then come down. See, what's happening to Axiom 4 is what it is, how it should be. You go to space for a few days, you stay there, you do some things in space, and then you come back. Or you go to the moon and you stay a few days and you come back. So I think that is the sector which would probably probably in the long haul survive.
Okay, last question. Do you think that there could be an Indian company, Dr. Ghosh, that stands up to the likes of SpaceX, that is an equivalent of SpaceX, a private company at that?
Yes. So now you're talking business. So you have to think, if there are adequate number of Indians who will buy their services, then there will be an Indian company. So people go crazy that why is an Indian company doing products? Why is it not a Silicon Valley company? The markets sit in the West. If India had the market, then of course an Indian company would be able to do this. But if the markets lie in the West, if that's where people are buying, then I think it's harder. And then of course you cannot make in India. It's more complicated because of ITAR. It's the arms. This is the US technology control laws, right? So I think there are things that can happen, but one basic thing is, why do all these product companies, why do Apple launch in the US? Because the market is there. If Apple was to just service the Indian market, or an Indian company like Apple was to evolve, the question is whether the R&D cost would be offset by the revenue that is generated out of India. I think that's the bottom line.
Okay, Dr. Ghosh, thanks so much for joining us today, and pleasure having you on the program. You know, as those visuals were playing out on the screen, one of the things that struck me was the stark difference. When you look at those touchscreen panels and you look at those astronauts sitting in that rocket heading into space, the stark difference from what Rakesh Sharma would have felt as many as 41 years back. Space technology has changed so dramatically in that time frame. And really, so much of this is related to the success of that technology, of what even Indian companies are doing. So let's give you some perspective on what Indian manufacturers take from this event. Joining me now is Pawan Kumar Chandana, who's the co-founder and chief executive officer of Skyroot Aerospace. Pawan, thanks so much as always for taking the time. And let me ask you, as an Indian manufacturer, what do you take from this?
The most inspiring event of the year, I would say. In fact, we were very proud that when India landed on the moon, south side of the moon, I think this is as historic as it, considering that after 41 years, an Indian is going to space, and for the first time ever, somebody is going to the space station, and our own Indian astronaut is going to the International Space Station. So I think this is a historic moment, and it's going to inspire generations ahead. And to me personally, it's like a very inspiring moment, and it also shows the leap India is taking in the space sector. Starting from the early days where rockets were transported on cycles, to now we have landed on the moon, and now we are sending our own astronauts to space.
And your own journey has been pretty much like what we're talking about, the frenetic pace of increase. It's been a takeoff. You're involved with projects with ISRO, you're working on Gaganyaan as well. And all of this, I spoke to other people in the run-up to this, and they've all said that this is a precursor to Gaganyaan. So it's exciting times for you as a company as well. Talk to me about that ecosystem and where you stand. What are you doing, and why is this exciting?
Yeah, so as Skyroot, we are a leading space startup in India, and we have launched India's first private rocket to space. That was in 2022, and we are just a few months away from our launching of commercial satellites to orbit. So very few companies in the world are launching commercial satellites to orbit, and Skyroot will be one of them. And that shows the ecosystem which we are part of. Like, for example, India has been a spacefaring nation since the 1960s. We have the ecosystem, we have the launch pads, we have the talent, we have the manufacturers. We have a great ecosystem around us in which we are leveraging all that and going very quick and building rockets from India for the world for the commercial launch of satellites. So that's what we are doing. And in fact, for example, just to give an idea, the next rocket which we are going to launch has 400 suppliers, all from India, groomed by ISRO for decades. That's the kind of ecosystem, and it will be launched from a launch pad built by India for decades. So I think that's the kind of ecosystem which we come from, and very few companies, less than 10 companies globally are doing, launching commercial satellites to orbit, and we will be one of the very early few of them. And that also a matter of pride that an Indian company is building something as deep technology as a rocket which can send satellites to orbit. And then, we're going global. So, and then space market is global. And it's almost a $400 billion business today, and is set to become $1.8 trillion by 2035. So it's a exponential growth in the global space market, and it's a great opportunity for India to take leaps and be part of the global space ecosystem.
Yeah, and Pawan, exciting times, certainly. Also, the numbers that you're talking about, absolutely large, right? And the potential is humongous. I also take heart from the fact that you have significant localization in the rockets that you're building. But I do want to ask you, as a manufacturer, the focus seemingly right now is on non-human flights or non-human missions that are sent to space. For you as a company and for your peers here in India, will that pivot to human flights, and how soon will that happen?
Absolutely, absolutely. So right now, we are taking step-by-step process. The first step is to do satellite launch, which is non-human launch. But our vision as a company is to open space for all. The vision to meet open space for all requires to actually also launch human to space. We envision a future where going to space becomes as easy as like flying on an airplane, like how we do it today, quite regularly, quite common. So we want to create a future where it becomes quite easy to go to space. Space is no longer something, out of our horizon. Space is something which is regular part of our lives, whether it is for tourism, whether it is for work, whether it is for industry. In fact, space can host like great set of industries. There are materials which can only be produced in space. So there'll be a lot of economy which will be based in space in the future, and we want to be part of that journey. So the next leap for us would be, of course, though we are starting with the satellite launches, next leap would be for us to get into the human space flight. But of course, it's going to take time. And Gaganyaan program is, I think, a great leap for India, where ISRO takes that giant leap. As always, ISRO takes the first major step to create that ecosystem. So now it's creating that ecosystem through Gaganyaan program for human spaceflight. And India will become one of the very few countries which have that capability, whether it is design, manufacturing, testing, knowledge regarding human spaceflight. And I think that will be a good foundation step for all the private companies to go on top of it and then make it more commercial. So that's the whole idea. So though we are starting with non-human flights, eventually the vision is to get into human space flight down the time. Probably it would take maybe close to 7 to 10 years from now. But I think that's a eventual evolution for us from here to there.
Yeah, that's a direction that we're taking. 10 years, I'm glad that you put a number to that. The question that I have next has to do, and since we're on a business channel, Pawan, it behooves me to ask you this. This is not a cheap business to be in. It's highly technical. The materials involved are extremely costly, and so therefore the question arises, if you need to scale this up and if you need to do more projects like this, availability of capital is going to be key. So is that something that companies that yourself will tap the public markets for? How does that work?
Yeah, absolutely. So as Skyroot, we are have the privilege of being the most funded startup in the space sector. We have raised close to $100 million of capital, which we never imagined that we would be able to do when we started off in 2018. So that shows the potential of the sector that, both domestic and global investors are backing domestic space companies. I think it's a great validation. And then I think access to capital, space is a capital intensive sector, like you mentioned, and we need more and more capital as we go further. I think the next few years we'll be, of course, scaling with private capital. But eventually, I think, Indian public markets are very, very attractive, very bullish, and space is something which is close to the heart of every common man in India. So I think the next leap of growth after a few years will definitely be the public markets. and we would love to leverage. We want to scale the company to a level where we can be a great public company, and then from there onwards, I think it will be good growth phase, which Indian public markets can enable, is what we believe. But of course, we are all in the early phases. We have to get to that level where we can get into the public markets, and then from there, I think it's a wonderful opportunity. And like I mentioned, space is a $1.8 trillion business by 2035. I think India needs to take more leverage and more opportunity in this. Right now, we as a country are 2% of the global space economy, and the government's aim is to make it 10%. And all the private space companies and startups are going to take a leap in this. And I think the next phase of growth can come from the public markets.
Pawan, last point, and obviously in this situation, Subhashu Shukla is our blue-eyed boy here in India, and a lot of people are looking skyward and watching his journey into space. What is that one message that you would give to all of those young Indians that are dreaming of making similar journeys?
Oh, absolutely. I mean, Shubhanshu is our new superhero, I would say, for India. Considering that, none of us in our generation has seen anybody launched. Of course, Mr. Rakesh Sharma, a legend, he has launched to space in 1984. But many of us are not, the young India is not born when we saw that flight. But now we see this, historic flight right before our eyes. I'm sure it is going to inspire the entire nation. As you know, a majority of our nation is below, more than 65% of India is below 35 years old. So just imagine, the kind of inspiration our generation is going to get through this flight. And I'm very, very positive that I think this is going to bring up more people into the STEM education, more people into, space sector, more people to fuel our deep tech in India. I think this is going to be a legendary moment. And whatever happened, or whatever launch which has happened, gives everybody goosebumps, every enthusiast goosebumps, and is going to be in history for a long period of time. And I think the Gaganyaan program, and especially the Axiom flight today, will remain in the hearts of our young people and inspire them for decades.
All right, Pawan, on that note, thanks so much for joining me today. And what a message that was to everybody tuning in right now. If you've got dreams of contributing to India's space aspirations, then you know what to do. In fact, on that note, let me get Dr. Pawan Goenka on board. He's the chairman of InSpace, which is India's space program. And let me start by asking you, Dr. Goenka, that very question. One message that you have for Group Captain Shukla, and also all of those Indians that are looking up starry-eyed at this mission that will set the foundation for the future of space travel.
Well, first message to Group Captain Shukla. Captain, the whole of India is looking at you right now. We've been waiting for this moment very anxiously for several days, and we wish all the success to the mission. I'm sure that under 14 days you would come back with a lot of learning and be ready for the human space flight that India would undertake. So all the best to you. And I think for people who are watching and listening, this is a very proud moment for India to have Group Captain Shukla go in XM4 to Space Station, International Space Station, with 3 other astronauts, with several experiments that will be done. But more than experiments, it is the learning that Captain Shukla would have on a human space flight, which will then become the sort of bedrock on which India would plan its own human space flight, which is currently under development. So it's a very, very important moment, very anxious moment. The whole of India is proud of Group Captain Shukla and what he's achieving, and we will be waiting for the moment which will happen in just about 25 minutes.
Yeah, so I do want to ask you, from the Indian ecosystem standpoint, there's so much that has been created over the course of the last few years. It's a very short period, and everything on the ground is moving so frenetically fast. But give us a sense of the moving parts right now, Dr. Goenka. How quick are things moving, and what is the kind of spend that is currently underway?
Well, as you said, there are multiple moving parts, but they're all sort of beginning to come together. We of course have the ISRO as the granddaddy of Indian space. They have all the technology, they have done so many projects, so many missions, made India proud, they have infrastructure. But now the emerging private sector that's coming forward with technology and with capabilities that they've developed, and really, in a sense, starry-eyed ambitions for what they want to achieve in space, is bringing it all together. And InSpace's role is to ensure that these starry-eyed young professionals who are coming into the space industry are able to succeed with the help of InSpace, with the help of ISRO, and create all the infrastructure for it. And the SSLV rocket that was transferred to HAL just 2-3 days ago, the announcement. We have an EO mission coming up for Constellation that will be announced in the next couple of months. We have some satellite manufacturing happening. We have data acquisition happening. So a lot of these things we are putting together, multiple different sort of verticals of the space sector to bring together to make a whole sum of these parts. So as you said very, very aptly, and that a lot of moving parts, but they're all coming together.
Yeah. All right. Dr. Goenka, thanks so much for joining us today and for giving us a perspective. Well, it's exciting times, and it's a momentous occasion, to say the very least. We're seeing history unfold in front of our very eyes, and the promise of a future that takes humans into space is bright indeed. We get back to regular programming. It's been a pleasure bringing this to you. Do stay tuned. This is NDTV Profit.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
That's huge. That is a biggie. It's out of
Gold Plus Clear Glass. Far ho ya near, sab kuch dikhe clear.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of rupees 77 to rupees 82 per equity share of face value of rupees 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Profit Buzzers. I'm Hiral Datia and with me is Puneet Javeri. Puneet, good afternoon. An interesting day of trade. You're seeing a good stable day in terms of Nifty as well as Bank Nifty as well. And you have the broader markets which are slightly mirroring what's happening in terms of benchmark indices. Let's quickly take a look. If we can just pull up Nifty 50 on the screens, followed by Bank Nifty and then the sectoral indices to give you a flavor. 0.7% higher in terms of Nifty 50, and if you see in terms of Bank Nifty as well, 0.2% higher, and that's what the broader markets are also doing, which Puneet will take us through very quickly. Let's quickly take a look at the sectoral heat map, and then in terms of individual stocks. There you go. You have defense, which continues to languish for a second consecutive session. 1.5% downtick coming in there. So that profit booking continues. Real estate is a downer as well, with cuts of around 0.2% on that front. Apart from that, the private banking space is pretty much on the borderline as we speak. What's bucking the trend is media, which is up in trade. Consumer durables is seeing a good run today. IT is also one of the top gainers in terms of sectors. Infra, auto, FMCG are the other ones which are doing really well. Let's quickly pull up the heat map of the contributors in terms of Nifty 50 and see what are the companies which are contributing. Titan is a strong one, 3.5% up move coming in there. Tech Mahindra, Infosys, Nestle, Maruti, Power Grid are a few of the other names that you are watching out for. BEL continues to lose. Kotak Mahindra Bank, iShares, Axis Bank, Cipla and ICICI Bank. These are the ones which are losing out. So that's what the benchmark indices are looking like. Puneet, if you talk about the mid cap and the small cap index, yesterday also you did see a good cool off that happened towards the end of the day. Today we are still not as good as the benchmarks, but somewhere in that trajectory. But individual stocks are not as good as yesterday.
Well, definitely. And, while we have seen some losing steam, we've seen a lot of stocks gaining steam as well in terms of both individual news flow as well as what's happening either in terms of reactions from brokerages, something like an MCX reacting very positively there. In the morning, we saw a negative reaction on Dixon Tech because of Phillip Capital. So it's been at a time, and if you take a longer term view, maybe roughly 6 to 8 weeks, we have seen the broader market show strength in the markets, and that's also visible post the Q4 earnings as well. So while we have been seeing the benchmarks trade in the range, and we've finally seen it go about 25,000 on Nifty, the small cap as well as the mid cap have been inching decently as well. And you see the 1 month chart of small cap 250 is visible on your screen as well, up almost 6% in the past month. Let's also look at the BSE 500 very quickly before we move on to individual stories, because we've seen stocks like Sammaan Capital being one of them, up almost 17% now. The other one's Balaji Amines, and this is a very interesting one because not any individual news flow today, but there was a couple of days before we covered it in the show as well in terms of what's happening with the Amine stocks, and we saw that reaction on Balaji Amines then, roughly 3 to 4% up, but today it's up almost 12%. Another positive day for Endurance Tech, and ever since there have been media reports claiming a mandatory ABS, which is anti-lock braking systems, coming in, We've seen a very positive this thing on Endurance Tech as well. On the losers though, some pressure seen on stocks like Data Patterns. We spoke about Dixon Tech as well. Phillip Capital maintaining a sell rating, target price of 9,000. And here that's largely been on the markets, but overall lot of individual name reacting today both on the positive and the negative side.
Absolutely, and I think defense is a space which has been languishing as well. We already saw the defending index, but let's quickly pull up few of the names which have been under pressure, from the likes of a BEL to a Zen Technologies. Data Patterns is another one, Paras Defense, Idea Forge, all of them have been trading under pressure, HAL as well. And this is the second or the third consecutive session after the ceasefire conversations that have been going on. You have defense, which has been a downer from a stock price performance perspective. So that's with regards to where defense goes. But moving on, we've been talking about IPOs right now, and they are the ones which are going ahead and absorbing liquidity, keeping valuations from going up, says Ashish Gupta, Chief Investment Officer at Axis EMC. Let's quickly listen into what he had to say.
The good thing is that, we are seeing, particularly with the IPOs now, many new companies, and actually the IPO slated for the rest of the year has several technology companies coming to the market. So different kind of companies are coming to the market. The other good thing is that with this supply coming in, it kind of helps absorb liquidity and does not kind of make the market valuations even richer, right? So I think supply does play an important role. If you talk about our strategy, we have been selective. There are a couple of private equity stake sales that we have participated in, and I think 2 IPOs till date we have participated this year. So we are quite selective. Also, I think overall in the IPO market, some of the frenzy has subsided.
That's an interesting take coming in there. But Aris Infra, that's the one which listed on the bourses today. Let's quickly pull up that one on the screens and see what the stock is doing post-listing. In terms of, I think we're just getting the wrong stocks on the screen. But yeah, Aris Infra, 17 to 80% downtick post-listing is what we are picking up. Now let's understand from the management as to, is it a concern from a valuation perspective, or what is it? Because in the unlisted space as well, what you've seen is that the valuations have soared, and when the issue price comes out, like it happened in the case of HDB, that issue price was way lower as compared to the existing price in the unlisted market. Mr. Srinivasan Gopalan, CEO at Aris Infra Solutions, joins in. Mr. Gopalan, welcome to the show and a pleasure to speak to you as always. Usually, there are 2 categories of investors. One who look at IPOs from a listing gains perspective, and the second one is someone who looks at a company from a longer term perspective. The ones who have probably seen a Aris Infra from a listing day gains perspective would be slightly disappointed today seeing the kind of cuts that it's trading with. If you could help us understand, do you think the markets have seen valuations that were slightly higher, or what, according to you, that could have gone wrong? I know as the management, you would not really be able to answer in terms of price perspective, but overall, what's your gauge?
So overall, what I believe is that it's very important to understand the history of Aris. Aris is a 4.5-year-old company, the first company to get listed in this space. And I think it's very important that you look at Aris from a long-term perspective. As far as the share prices and other things are concerned, honestly, we are committed to deliver what we are supposed to deliver as management, working on our receivables, working on our profitability, growing at the pace at which we have promised. So I think we are very, very focused. The new fuel that we have got by way of IPO helps us in achieving our financials.
Mr. Gopalan, a very good afternoon to you, and thanks so much for joining in. Firstly, congratulations on the listing. And in terms of just in terms of business, I was going through your RHP as well, and you mentioned you want to address inefficiency in procurement of infrastructure essentially, and you work with a lot of B2B companies. While we've seen margin improvement in the last 3 months, What has been one of the key aspects, because historically the margins have been really low. So how do you address the margin growth, and what is the expectation since now you're listed, in terms of, do you want to go in the low double-digit region, or what is the expectation that we can have in terms of margin performance?
So from a margin perspective, we have three-pronged strategy. One is the product mix. So if you see in the past, the percentage of lower margin products were very high. So that, if you see, we have significantly improved on that. Steel and cement, at one point in time, constituted 60% of our total turnover, is merely at 11 to 12% if you see our RHP. The second aspect is contract manufacturing. The percentage, which was last year, was between 12 to 13%, and in the last 9 months, we are upwards of around 40% of it. Both of them actually give us the margin push, and we will continue this moving forward. And the third one is the value-added services. The value-added services has really done well, from a 3 to 3.5% last year to a 5.6% coming in the last 9 months. So all these three strategies have helped us increase the margin, and that's what we will be concentrating on moving forward.
Mr. Gopalan, the other question is in terms of margins and profitability as well. How sustainable is that going to be if you have to take the first 9 months of FY26 or 25 into consideration? And this is not only for FY26, but if I have to look at the company 3 years from now, where do you see it growing? Will it be similar growth, or do you think with the fuel that you've put in through the IPO, with the funds that have come in, debt going down, probably a lot of things that improve from a fundamental perspective? So where do you see it in the next 1 year, and then the growth trajectory over the next 3 years?
So, ma'am, I can give you the direction in which it will be going.
Sure.
So first of all, the fuel helps us. Maybe by 4 o'clock today, we would have repaid the debt. Right. So that was one of the biggest reasons. Around 204 crores goes back in debt repayment. The other areas that we would be purely concentrating on is penetrating into our current customer base. You know that we have a very rich customer base, starting from the L&Ts, Tatas, Vadvas, Lodhas. So we will go penetrate deeper into these people to increase our wallet share as far as these companies are concerned. And today we are at a turnover of around 560-70 crores up to December. So we have not even scratched the surface. So we have significant potential in deepening our wallet share with these large companies. So I think we are in an industry which is $300 billion plus. We are in the right space. We are a tech-enabled problem solver on the procurement side, and one of first of its kind. And the scale is yet to be seen. The operational efficiency will come in with the play of tech as we move on to a 2,000 crore, 2,500 crore kind of a turnover. So it's only going to get better from here. We will have non-fund-based limits coming on from our bankers that will ensure that our working capital days are significantly reduced. So it's only, as I said, young company. You have caught us young. We have to grow together. And that has been the philosophy of the company always. And I will also request that all of us work together towards it. And that's where we are all committed to.
Thank you, Mr. Gopalan, so much for joining us on the show at NDTV Profit and sharing the views. But that's, pretty interesting to look at, because it's a dismal listing that you've seen with regards to Aris Infra. If you pull up the stock again, there you go. I mean, 17 to 18% is the kind of downtake, and that's the reason why we asked the first question with regards to what is the management's view on this kind of a listing, because is it the valuations which are really high, which the street is not really warranting, ready to actually give that kind of a valuation to the company? And number two, the kind of confidence that investors have had in the company, probably from a longer term perspective or short term, is the key thing we need to check over here, because a similar scenario that's happening with HDB Financial. Let's, we can't pull up that one right now on the screen. So let's just pull up HDFC Bank and see what's happening with the HDFC Bank as well. The story with HDB has been very interesting, and Vishy is joining us to discuss this. Hottest IPO in town, Vishy. The question over here is, because it comes in from parent HDFC a lot of interest from an employee perspective, from investors' perspective, to deal with it the way the unlisted market soared in terms of value they prescribed to HDB was really high, and you have the issue price which has come in at a discount to your listing the unlisted market price. If you have to take all of these parameters into consideration for the benefit of the viewers, what is that justification that the management would have given as well? You've spoken to them earlier. So how are you looking at it, and then what the brokerages are saying?
So I'll tell you what, when we asked the management about explaining why exactly the issue was priced at 700 to 740 a share, and the unlisted market was somewhere between the 1,000 to 1,200 sort of range. So why this big discount? And according to them, they felt that in the anticipation of the IPO, and there's been a lot of anticipation of the HDB IPO for a very long time. So in this anticipation, the prices in the unlisted space have shot up, and it's a very small base of people who are actually trading in these shares. That does not truly reflect the actual value. In fact, what the management said is that they believe at 700 to 740 there is room for new shareholders who will come in once the stock is listed, for them to gain some more value as the company grows going ahead, and therefore according to them this price is more appropriate, and that is what your brokerages seem to be also suggesting. We were looking at what SBI Securities is saying. In fact, they are penciling in a 5 to 10% listing pop in the stake, and that's something that they've told investors. They've said that there's a healthy retail loan book. In fact, the 6 brokerages that we've looked at, all 6 have recommended a subscribe to their customers. In fact, if you look at SBI Securities, same thing. Devin Choksey research saying that there's a niche in serving the underbanked and the underpenetrated areas of India, and because of the kind of service delivery infrastructure they have, 3,700 telecallers, 8,800 field resources, these are all expected to boost their business growth. Similarly, when you look at what Centrum is saying that there's a robust brand franchise and a granular retail lending model. The hybrid underwriting model is there with a seasoned portfolio. So obviously these things all work in favor. Alongside that, they've got access to low-cost funding because of the AAA rated credit profile, because of HDFC Bank's backing. Antique, same thing, pan-India presence, a granular book, low ticket size to drive sustained growth. These are all things that are working in favor of HDB Financial. Share Khan, Systematics, all pointing out to the fact that their business metrics seem very, very healthy. Asset quality seems quite well managed. They've got a very well diversified book. They've got great parentage, because of which they get access to cheaper source of funding, and therefore this IPO makes sense to buy, is what brokerages are telling their customers at this point here.
Well, thanks for that, Vishy, for taking us through a whole host of views on the HDB Financial IPO as well as what brokerages make of it. But we also spoke to Shweta Daptardar, who is the Vice President BFSI at Elara Securities, who recommends it as a definite buy. Listen into what she had to say.
It's a definite buy, and if you look at the numbers quickly, so it's a 14-15% ROE business model as on today.
Well, that was the view, but the other IPO which is set to open today is also Samhab Steel. Now, let's first look at a little bit about the company as well. It operates as one of the key manufacturers in the steel piping segment. The company's issue is opening today on June 25th and will be open essentially till the 27th of June. Now, the key aspect is that the issue price is 77 rupees to 82 rupees per share, and the fresh issue component is roughly about 440 crores, with the other 100 crores which is an offer for sale for the company. Now, as I mentioned, it mainly operates in the steel piping segment. It's a manufacturer of electric resistant steel pipes as well as structural tubes in India. It's also one of the only players to manufacture a narrow width HR coil with backward integration capability as well, which should help in margins going forward as well. In terms of just a few numbers, and we'll be joined by the management very shortly. The revenue for the company is about 1,000 crores for the 9 months of FY25, with the margins operating at roughly about 10.47% as visible on your screen right now. We've also put up a historical data on screen as well. Roughly for FY24 and FY23, the margins were operating in the 12 to 12.5% range. So it'll be interesting if we can reach that level again in this particular year of FY25 as well. But there are, of course, a few key aspects of the business to talk about as well. And for that, we have been joined by Mr. Suresh Goyal, who's the chairman as well as the executive director, as well as Vikas Goyal, who's the managing director as well. Both of you gentlemen, thanks so much for joining in, coming to a studio as well for NDTV Profit as well. Let me just start off first for the IPO as well, because while we are, it's at a very interesting time in India because we are seeing growth amongst infrastructure stocks, to say the least. But for you, if you can just a little bit talk about the business first before we get into the nitty-gritties of the IPO as well.
Thanks to have us in your show. What I am talking about the संभव, तो मैं ये कहना चाहूँगा कि 21 साल का हमारा अनुभव है स्टील मैन्युफैक्चरिंग का, और उस अनुभव के साथ और हमारी अनुभवी टीम के साथ हमने 2017 में संभव की शुरुआत की। हम अगर बात करें प्रोडक्ट की, तो हम 3 प्रोडक्ट लाइन में प्रोडक्ट बनाते हैं। पहली है ERW स्टील पाइप एंड स्ट्रक्चरल ट्यूब, जिसका हम निर्माण हमारी बैकवर्ड इंटीग्रेशन स्टील यूनिट में करते हैं। आप कह लीजिए जब बात करते हैं बैकवर्ड की, तो हम कहते हैं कि हमारे पास में पहले स्टेप में जो हम बनाते हैं स्पॉन्ज आयरन, और वो बनाते हैं हम हमारे पास आयरन ओर और कोल की मार्केट से ख़रीद कर। और उसके अब सेकंड स्टेप की बात करें तो हम पावर बनाते हैं, जो कि स्पॉन्ज आयरन की जो वेस्ट हीट है उसको, और जो बाई प्रोडक्ट स्पॉन्ज आयरन का निकलता है उससे हम पावर बना लेते हैं। तो हमारी फ्यूल कॉस्ट जो है वहाँ पे 0 हो जाती है। फिर हम पावर को तीसरे स्टेप के अंदर में ले जाते हैं, जहाँ हम मेल्टिंग करते हैं। तो स्पॉन्ज आयरन और पावर दोनों के साथ हम मेल्टिंग करते हैं और स्लैब्स का निर्माण करते हैं। और चौथे स्टेप में हम करते हैं HR कॉइल, जो हमारी अल्ट्रा मॉडर्न, ये कह लीजिए टेक्निकल एडवांसमेंट के साथ में हमने स्टेट ऑफ द आर्ट मिल लगाई है, जिसके अंदर में हम वाइडर विड्थ की जो कॉइल मिल्स हैं उनके इक्विवेलेंट नैरो में भी कॉइल हम निर्माण कर लेते हैं, और हमारी जो क्वालिटी है वो एट पार हो जाती है। और फिर 5वें स्टेप के अंदर में ERW पाइप का निर्माण करते हैं। और दूसरी हमारी जो प्रोडक्ट लाइन है वो है गैल्वनाइज्ड कॉइल एंड पाइप्स। तो आप कह लीजिए कि जब ये हम दूसरी बात करते हैं तो ये हमारा वैल्यू एडेड प्रोडक्ट है, जिसके अंदर में हम HR कॉइल जो है उसको कोल्ड रोलिंग करते हैं, और कोल्ड रोलिंग के बाद में हमने एक मॉडर्न टेक्नोलॉजी के साथ में काम किया। नॉनॉक्स टेक्नोलॉजी की हमने गैल्वनाइज प्लांट लगाया, प्री गैल्वनाइज कॉइल का प्लांट लगाया, जिसमें हम प्री गैल्वनाइज करते हैं उसको, और फिर पाइप एंड ट्यूब्स बनाते हैं। और तीसरे प्रोडक्ट लाइन की बात करूं मैं आपसे, तो वो प्रोडक्ट लाइन जो है वो हमारी स्टेनलेस स्टील की प्रोडक्ट लाइन है, जो नीश मार्केट का प्रोडक्ट है, और उसको भी हम स्क्रैच से बनाते हैं। हम स्क्रैप मेल्ट करके स्लैब्स बनाते हैं, फिर उसको HR में कन्वर्ट करते हैं। उसके बाद हम उसको HRAP प्रोसेस के द्वारा, या कह लीजिए हॉट रोल्ड एनील्ड पिकल्ड के द्वारा फिर कोल्ड रोलिंग करके और BA ब्राइट एनीलिंग फिनिश का कॉइल बनाकर मार्केट में सेल करते हैं। ये हम हमारी 2 यूनिट में करते हैं। और जब बात हम करते हैं कि हमारा डिस्ट्रीब्यूशन नेटवर्क कैसा है, तो हम अपने डिस्ट्रीब्यूटर और डीलर्स के माध्यम से पूरे भारत में ये माल बेच रहे हैं।
करेक्ट। अभी आप देखे जाएगा तो जो सप्लाईज है आपकी रॉ मटेरियल की, उसके साथ सप्लायर्स के साथ आपका लॉन्ग टर्म कॉन्ट्रैक्ट नहीं होता है, जिसके वजह से एक इशू आता है अवेलेबिलिटी का, दूसरा आता है प्राइसिंग का। तो आप वो कंसर्न कैसे सॉल्व कर रहे हैं?
जी, ये बहुत अच्छा आपने प्रश्न किया मुझसे। ये दरअसल में आप, जब मैं बात करता हूँ मेरी लोकेशन की, तो मैं छत्तीसगढ़ में मेरा प्लांट है। छत्तीसगढ़ बेसिकली आयरन और बेहतरीन क्वालिटी की भारत में आयरन और अवेलेबल है। नवरत्न कंपनी है और बड़े प्रोडक्शन, मास प्रोडक्शन में प्रोडक्शन करते हैं। और मैं कहता हूँ जो कोयले की, मुझे 2 रॉ मटेरियल लगते हैं, कोयला और आयरन ओर। कोयले की एशिया की सबसे बड़ी माइंस अवेलेबल है छत्तीसगढ़ के अंदर में। तो मेरे पास जो रॉ मटेरियल का कोई क्रंच आता नहीं है, क्योंकि मेरे आसपास रॉ मटेरियल की अवेलेबिलिटी है। हाँ, अब बात आती है कि लॉन्ग टर्म की, तो लॉन्ग टर्म में मेरे कोल इंडिया के साथ में जो हमारे सप्लायर हैं उनके साथ भी हमारे एग्रीमेंट हैं, हमने फ्यूल सप्लाई एग्रीमेंट किए हुए हैं, और जो नवरत्न कंपनी आयरन ओर की सप्लाई कर रही है उनके साथ भी हमारे लॉन्ग टर्म एग्रीमेंट होते हैं, जिसके तहत हमको सप्लाई मिलती रहती है। तो इस तरीके से हम रॉ मटेरियल के फ्रंट पे अपने आप को सेफ पाते हैं।
तो सर, ये जब आप मार्जिन्स की बात करते हैं तो लास्ट 2 साल हमने बताया कि 12 से 12.5 के बीच में मार्जिन्स रहे थे, अभी 9 महीने के लिए रफली अबाउट 10 to 10.5% के आसपास है। तो ये साल में आप 12% मार्जिन कर पाएंगे?
जी, जब बात हम करते हैं 9 महीने की, तो दरअसल में मैं बताना चाहूँगा आपको कि इन 9 महीनों में हम कैपेक्स पिछले 2 सालों से करते आ रहे थे, और हमारे जो प्लांट हैं इसके अंदर में हमने कैपेसिटी ऐड की, स्पॉन्ज आयरन की भी कैपेसिटी ऐड की है, हमने अपने पावर प्लांट की कैपेसिटी भी ऐड की है, हमने हमारी ERW पाइप, GP कॉइल, और 2 प्रोडक्ट जो हमारे नए हैं GP पाइप और स्टेनलेस स्टील, ये इसी द्वारा हमारे कमीशन हुए हैं। तो उनके कारण जो है हमारी थोड़ी सी आपको जो है वो कहीं EBITDA पे कुछ परसेंटेज में कुछ कम दिखता है, परंतु जब ये कमीशन हमारे हो गए हैं, प्लांट अभी हमारे कैपेक्स अलाइंड है, तो अब ये आपको आने वाले जो हमारे क्वार्टर्स हैं, जो हमारे जो ये फाइनेंशियल क्वार्टर है, उसमें बेहतर दिखने को मिलेंगे।
आई नो आप फॉरवर्ड लुकिंग गाइडेंस नहीं दे पाएंगे, बट विकास जी, हम लोग ने अगर लास्ट 3 साल के नंबर्स देखे, करेक्ट, FY24 काफी स्ट्रॉन्ग रहा है एज कम्पेयर टू FY23। क्या ये FY24 की जो ग्रोथ ट्रेजेक्टरी थी, हम वो वापस ला पाएंगे?
Very much, ma'am. Management and the entire board of directors are in the endeavor to achieve that kind of a growth trajectory. अगर मैं आपको ग्रोथ के बारे में बोलना चाहूँगा तो we have already disclosed that we are coming up with an 1.2 million finished product capacity fully backward integrated plant which will be commissioned in 3 phases. First phase will have approximately 4 lakh ton of finished product fully backward integrated, which will be expected to be commissioned by December 2026. So we believe our third unit, which is 1.2 million capacity, will give us a thrust in terms of growth, which you are talking about, which we have achieved in last 3 years. Apart from that, we are also commissioned, as Suresh ji said, we have commissioned additional capacity of 1 lakh ton of ERW pipe. We have commissioned additional capacity of 1 lakh ton of GP coil and pipe, additional capacity of 58,000 stainless steel coil capacity, which is just commissioned in November 2024. So this capacity utilization you can see in 2025 and 2026. So growth will also come from that expansion which we have done.
सर, एक बस लास्ट क्वेश्चन इन टर्म्स ऑफ एंड यूज़, बिकॉज हम काफ़ी लाइक बहुत सारे 2-3 बड़े लिस्टेड प्लेयर्स है ये सेम स्पेस में जो हाउसिंग में यूज़ करते हैं, इंफ्रास्ट्रक्चर में यूज़ करते हैं, थोड़ा यूज़ ऑयल एंड गैस में भी होता है। तो आपके लिए स्पेसिफिक ये कौन से की सेगमेंट्स, अगर आप कुछ परसेंटेज या कुछ रेंज दे पाए कि कौन से सेगमेंट्स में आपका मेन ये एंड यूज़ है विद कस्टमर्स, एंड मार्जिन्स कुछ डिफर करता है अगर आप इंफ्रास्ट्रक्चर में जाएँ या हाउसिंग में जाएँ, या मार्जिन आपके लिए काफ़ी सिमिलर है विद इन सेगमेंट्स?
देखिए, अगर आप बात करते हैं यूजेस की, तो मैं मेरे प्रोडक्ट की बात करूंगा तो मैं पूरे भारत के अंदर में बेच रहा हूं, और इंफ्रास्ट्रक्चर के अंदर में मैं पूरा मटेरियल बेच रहा हूं। और मैं जब बात करूं आपसे कि ERW पाइप की, तो ERW पाइप आज रिक्वायरमेंट है भारत की, क्योंकि रेलवेज़ के अंदर में आप देखिए, टावर्स में देखिए, आप जब देखते हैं कि बस स्थानक जो बनते हैं, बस स्टॉप जिसको कहते हैं वो, और आम जिंदगी के अंदर में जहाँ भी आप देखते हैं, स्टूडियो में जब मैं नज़र दौड़ाता हूँ तो मुझे हर जगह पे जो है वो पाइप्स की बनी हुई चीज़ें नज़र आती हैं। तो मैं ये तयशुदा बात है कि ये ज़रूर पाइप ज़िंदगी के हर जगह पर, अभी इंफ्रास्ट्रक्चर की हर जगह पर ज़रूरत बन चुकी है। और हम बात करें जब GP कॉइल्स की, तो वो हमारे कोस्टल बेल्ट्स के अंदर में अब जो सस्टेनेबल हमको स्टील चाहिए, उसके लिए वो हम पूरी तरह बेच रहे हैं। और मेरे जो यूनिक प्रोडक्ट जो मेरा स्टेनलेस स्टील है, उसकी बात करूं तो मैं जब भारत ग्रोथ कर रहा है, और स्टील की जो ग्रोथ है, पाइप की जो ग्रोथ है, वो भारत की ग्रोथ अगर 7-8% की हम स्टील की ग्रोथ मानते हैं, तो पाइप्स की ग्रोथ 10% के आसपास है, और स्टेनलेस स्टील की ग्रोथ 15% के आसपास है। तो मैं समझता हूँ कि हमारी वहाँ भी अच्छी पकड़ बन रही है, और हम हमारे प्रोडक्ट को सस्टेनेबल भारत के ग्रोथ के साथ में, और जो लोगों की ज़रूरत है, जो लोगों को आगे आम जिंदगी में चाहिए, आप देखिए बड़ी बिल्डिंग में जाएंगे आप, तो वहाँ रेलिंग भी अब स्टेनलेस स्टील की लग रही है, आप चढ़ेंगे तो भी स्टेनलेस स्टील की रेलिंग पकड़ के जब आप चढ़ते हैं, तो ये एक तरीके का पाइप की ज़रूरत है, और इस तरीके से ही हम जो है वो देश की सेवा कर रहे हैं।
काफ़ी सारे यूजर्स हैं, बट थैंक यू सो मच.
थैंक यू वेरी मच.
सुरेश जी, विकास जी हमारे साथ स्टूडियो में जुड़ने के लिए.
Thank you.
So that was the management of Samhab Steel. Listing is something that the street will be awaiting shortly. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of rupees 77 to rupees 82 per equity share of face value of rupees 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of rupees 77 to rupees 82 per equity share of face value of rupees 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of rupees 77 to rupees 82 per equity share of face value of rupees 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading to
Welcome back. You're watching Profit Buzzers. Now, BLS E-Services, that's a stock to focus on. The company is up with regards to almost 3% trading near the day's highest levels. Now, the subsidiary has gone and signed a definitive agreement with SBI and HDFC Bank to acquire their customer service points. The acquisition is a slightly smaller one, but let's get in Mr. Lokanath Panda, Chief Operating Officer at the company, who's exclusively speaking to NDTV Profit, to understand what would this mean and what's the kind of revenue contribution you're seeing out of this business. Mr. Panda, welcome to the show. What is this acquisition like? It's a 6.5 crore acquisition. How much will it add in terms of your revenues?
We are looking at an upside of around 16 to 18 crores from this acquisition in the revenues. And we are already the largest business correspondent, and this will further strengthen our network, especially in the south part of the country.
Okay. And so is this something which you're already doing as a service for other companies, or how does this function, or is this a new stream?
We are already working with the largest banks in the country as a business correspondent, providing financial inclusion services across the country, and this further solidifies our position in the market.
Okay. So apart from this, so if you're saying this acquisition is going to give you around 15 to 18 odd crores, are there any other aspects that you're going to consider with regards to further acquisitions of this kind from other banks?
See, if you look at our journey, we had acquired RD Fidelis some time back, a couple of quarters back, and that was part of our strategy to get into multiple banks and doing the loan aggregation service. And this is in continuation of that. So we are looking at the core business as well as businesses which are adjacent to us, as a strategic fit.
Mr. Panda, very good afternoon. Thanks so much for joining in. It's Puneet this side. I just wanted to understand in terms of expanding this into a medium to long-term opportunity, how much growth are you anticipating from this specific business? You mentioned about 18 crores in revenue is what you could increase it to. But from a longer-term opportunity, how much are you looking at in terms of both revenue, and will margins be very similar to what you operate into this particular line of business as well?
Yeah, the margins are similar, but with the benefit of scale, I think we will be able to optimize better and drive better margins out of this business.
And how much would that look like, Mr. Panda, if you have to look at the next 5 years from here?
We are looking at doubling our business correspondent presence, right, which stands currently at around 40,000 odd locations, right? So our outlook is to take it to about at least a lakh over the 5 years. And that also will give us, better consolidation opportunity of resources, right? So you will see better margins out of this business.
Right. So this is going to be an interesting space we should be watching out for. But thank you, Mr. Panda, so much for joining us on the show and sharing your views with the acquisition that you've made. A small acquisition in the making, but the stock is up nearly 4% as we speak. But moving on, another stock that we should be looking at is IndiaMart. Nuvama has upgraded the stock to a buy. The stock is up 5.5%. They have a target price of 3,800 on the counter. And what they've said is they've raised the target valuation multiples, same as pre-downgrade levels as well. And it's mainly the new initiatives that will lead to higher unique business inquiries. To discuss more on this in terms of whether this is a good opportunity or not, Gaurav Sharma from Globe Capital joins in. Gaurav, your views on IndiaMart. The stock is up 5.5% today. What do you advise investors to do? Gaurav, are you able to hear me? I think Gaurav is unable to hear us. So IndiaMart is one stock that we should be looking at, Puneet. But Puneet, another stock that is on our radar is a MCX as well.
Yeah, and just in terms of IndiaMart as well, because it's very interesting that Nuvama actually downgraded the stock a couple of quarters ago, citing that the paid subscriber base of the company was constantly falling, and it fell constantly for 4 quarters. So definitely, I think it's come at a very opportune time for the company, but it will have to follow it up with business performance in this particular quarter, and that paid subscriber base share is another one to watch out for very quickly as well. Gaurav, if I'm audible to you now, just wanted to understand your view specifically on IndiaMart, because we've seen consolidation over the last 2 quarters, but on the charts, does today's move suggest a little bit more upside from this current levels as well?
Yeah, hi, good afternoon.
Today IndiaMart came up with a gap up opening, and it is performing, rather outperforming on back of very steady and healthy volumes. So this particular up move goes to show that some more upside is still there. 2760 is the immediate level that I am eyeing at, and once that is taken out, it has potential to cross even 2900 odd levels in the immediate near term itself.
IndiaMart. The other two stocks that are in focus are MCX as well as IEX, again on the back of brokerage notes. UBS has a target of 10,000 on MCX, which is very interesting, and what they are saying is that the product launches and the volume growth that they will see in the average daily volume is what is going to drive the kind of growth for MCX. And if you talk about IEX as well, you have Bernstein, which has hiked the target price to a 160 from a 152, and they've upgraded it to a market perform from a underperform. So both these counters that are in focus. Gaurav, which one would you prefer? Where are charts showing strength, and any sell calls on this one?
I'll not be giving a sell call here in any one of those. I prefer MCX for that matter, and why not so? The kind of, the gold and silver prices are soaring. It will definitely increase the customer interest in these products. Similarly, crude oil also witnessed huge volatility due to the ongoing war between Israel and Iran. So these kind of moves are healthy for commodity transactions, and the more these commodity players stay in news, the better it will be for MCX.
One more stock, is Snowman Logistics that's buzzing in trade now. The company, of course, is an integrated temperature controller logistics service company, and it has been in news for a while since the pandemic now. But the company is, alerted the exchanges that they're doing a warehouse expansions, opening 2 new temperature control warehouses in Kolkata as well as Krishnapatnam, and the expansion will lead to 9,500 additional pallet capacity for the company as well. Now, it's key that they are looking to cater to industries like seafood, dairy, QSR, among others as well, and that will be increasing from the current capacity of 1.5 lakh pallets. So it's a sizable increase that they're doing. Gaurav, in terms of charts specifically, anything on Snowman Logistics as well? It's been a stock that's been ignored essentially from investors for a while now. What do the charts suggest?
Rightly mentioned, it is a less talked about stock, but it is into a niche business in the temperature control logistics system. So off late the stock witnessed good amount of profit taking. It slipped from 90 levels and went as low as 42, 40, close to that levels. Currently, it is trading around 61, and the stock is looking upbeat on charts. I see the upward momentum continuing here. 70 would be a very, logical and a close by targets that I'm expecting in a month or 1.5 months itself. Yes, being a little volatile in nature, I'll suggest a stop at 55 here.
Right. So that's with regards to where Snowman Logistics is concerned. But thank you, Gaurav, so much for joining us on the show. I know it was a short conversation that we had today, but we'll speak once again to understand your picks from here on as well. But one stock that is in focus is Sky Gold, which has been under pressure on the back of the promoter selling stake. In fact, the stock today has climbed to the day's highest levels with gains of 2% on the commentary that you heard on NDTV Profit, where they've said that there will be no promoter selling. Let's quickly hear that.
So again, on the upload basis question, we are not going to upload anything in the future 2-3 years perspective, because already we have uploaded a good percentage. So we don't want to upload in coming 2-3 years or 4 years anything.
That's Sky Gold, but a moment of pride for India. The second Indian in space, Shubhanshu Shukla, sent out a message to the country 10 minutes after the Dragon spacecraft lifted off. Here's what he had to say.
नमस्कार मेरे प्यारे देशवासियों, व्हाट अ राइड। 40 साल बाद हम वापस अंतरिक्ष में पहुंच गए हैं और कमाल की राइड थी। इस समय हम 7.5 किलोमीटर प्रति सेकंड की रफ्तार से पृथ्वी के चारों तरफ घूम रहे हैं और मेरे कंधे पे मेरे साथ मेरा तिरंगा है, जो मुझे बता रहा है कि नहीं हूँ, मैं आप सबके साथ हूँ। ये मेरी इंटरनेशनल स्पेस स्टेशन तक की जर्नी की शुरुआत नहीं है, ये भारत के ह्यूमन स्पेस प्रोग्राम की शुरुआत है और मैं चाहता हूं कि आप सभी देशवासी इस यात्रा का हिस्सा बने। आपका भी सीना दिल से चौड़ा होना चाहिए, आप भी उतना ही एक्साइटमेंट दिखाइए। आइए हम सब मिलकर भारत की इस ह्यूमन स्पेस प्रोग्राम की जर्नी की शुरुआत करें। धन्यवाद। जय हिंद, जय भारत।
Right, so that's the word coming in from Shubhanshu Shukla as well. I think regular updates is what we will be monitoring because he'll take 48 hours to reach his destination so far. But I think another stock that is in focus is IndusInd Bank. In the latest update from the IndusInd saga, sources are telling us that microfinance and Bharat Financial Inclusions is seeing more exits as officials appointed by the bank step aside. Vishwanath Nair, who's tracking the story pretty closely, joins us with more information. Vishwi, over to you.
What has happened is Vikas Mattu, who's the Chief Operating Officer of this microfinance unit, as well as the Head of Member Services, has resigned. Alongside him, his joint COO of the company, Anujit Varadkar, has also resigned from his position at Bharat Financial Inclusion. These were two officials who were very recently appointed by IndusInd Bank. As far as Mattu is concerned, he joined only in March of 2023, and Anujit Varadkar joined in May of 2024. Both these officials have now resigned, of course, and this is coming in the context of the enhanced scrutiny that is happening into the microfinance division. Remember that the bank had pointed out that in the microfinance business, they have seen incorrect interest income of about 674 odd crore and incorrect fee income of about 173 crore. Alongside that, due to poor provisioning policies at this microfinance unit, the bank had to make a 2,000 crore provisions against certain NPAs which were not classified as bad loans on the books. So this is there is an investigation that was initiated by the internal audit department, which was then, of course, supplemented with findings by EY. So therefore, these exits hold more importance. Already a month ago, you saw the executive vice chairman of the company, J. Sridhar, and him also resigning. He was also appointed by IndusInd Bank. So what is exactly Bharat Financial doing to counter these things? Well, they've actually promoted one of their long-term loyalists, Gopi Krishna A., who has been with the company for nearly 20 years. He has been promoted now to head of member services, and he becomes one of the highest ranking officials in the company. So it's clear that the people who are appointed by the bank are on their way out, while people who were always with Bharat Financial before IndusInd Bank acquired the company in 2019, they are now going to take charge because obviously the situation at the microfinance unit is looking a little tough.
Well, thank you for that, Vishy. But let's stick with the banking space now. In what is probably the first move of its kind, the government has demoted Mr. Pankaj Dwivedi from becoming the executive director of Union Bank. Now he has been sent actually back to Punjab and Sind Bank as a general manager. My colleague Mahima is here with details of why this has happened. Mahima.
Right, so as you rightly mentioned, Union Bank's Pankaj Dwivedi has removed as the executive director. He was removed on 24th of June, and this is probably the first time that the government has demoted a high-ranking officer and banker. Dwivedi will go back to holding his position as general manager in Punjab and Sind Bank, and government had originally appointed him as ED in March 2024. Union Bank of India stock was down nearly almost 1.5%. Today as we speak because of this. And why did this happen exactly? In August 2024, a woman filed a PIL against Dwivedi's appointment in Delhi High Court. The PIL had questioned Dwivedi's promotion despite a sexual harassment case against him, and complaint claimed that Dwivedi had sexually harassed her in 2018. Complaint had called for a review of all documents relating to his promotion as well. In terms of his overall appointment, a Financial Services Institution Board had recommended his appointment as executive director in July 2023, and government had appointed him as ED of Union Bank in March 2024. So this is the overall timeline and the reason as to why he has been demoted.
Got that, Mahima. Thanks so much for that as well. But a couple of very interesting names which are in focus as well. One of them is Mastech, because the CFO of the company, Mr. Raghavendra Jha, has resigned. Now there is no specific particular reason attributed to this as well. And he has been with the company for a while now. So that's one of the key reasons. while how this could impact essentially the stock, we'll get to know a little bit when the company's results come in. But we just wanted to make a mention of this as well, because within IT, the CFO is a very, very key role as well, which we've seen among the large cap players as well. But with that, completely out of time on this edition of Profit Buzzers. From Hero Lai and everyone who put the show together, thanks so much for watching. Stay tuned to NDTV Profit for more.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary. And
Hello and welcome to NDTV Profit. You're watching Profit Top Trades with me, Varsha Chandanani and Anushi Vakharia. Well, Anushi, markets are actually in green today, but let's see how markets are doing. You have Nifty 50, which is up almost 0.87%. Let's see other constituents when it comes to Nifty 50. You have Titan, you have Infosys, you have Tata Consumers, Tech Mahindra and Bharti Airtel, which are on the gaining side when it comes to Nifty 50. On the loser side, though, you have Bharat Electronics, you have Eicher Motors, Kotak Mahindra Bank, Axis Bank and ONGC, which are on the losing trend when it comes to benchmark index. Well, let's pull up sectorial heat map and let's see what sectors are buzzing in trade today. I think barring Nifty Realty, everything is in green, because if you see, Nifty Auto is up 0.87%, while FMCG is up 0.85%. Nifty IT though is up over 1%. Nifty Media is up almost 1.9%, but Nifty Realty is down 0.73%. Even we will have an interesting chart on Realty in the show also. Let's see what broader markets are doing. You have Nifty Mid Cap 150 and Small Cap 250, which are actually mirroring the benchmark. Nifty Mid Cap 150 is up 0.39%. On the gainer side, when it comes to Nifty Mid Cap 150, you have Endurance, you have Vodafone, you have Kalyan Jewelers, you have Delivery, and you have IDBI Bank. When it comes to Nifty Mid Cap 150 on the gainer side though. On the loser side, you have Dixon Tech. This is under pressure on the back of a brokerage note. We'll also speak on that. You have Mazagon Dock, you have Cochin Shipyard, you have Poonawalla Fincorp, which is on the loser side when it comes to Mid Cap 150. Defense stocks are actually under pressure in trade today. On the Small Cap 250 though, you have Jai Balaji, Network 18. Balaji Amines is also buzzing on the back of anti-dumping duty on their key products, that is acetonitrile. Even Alkyl Amines is buzzing for the same reason. Maharashtra Seamless and MCX are also gainers when it comes to Small Cap 250. On the loser side, you have defense names, you have Garden Reed, you have Data Patterns, you have Cochin Shipyard and Chennai Petro, which are on the losing side when it comes to Small Cap 250. But there's an interesting chart when it comes to real estate. The Mumbai Home Affordability Index dips below 50% for the first time in history. Well, Anushi, please tell us more about it.
It's a particularly interesting note that we are looking at from Knight Frank, wherein they've talked about how the affordability index has shaped up across the cities that we are seeing. And one highlight which stood out was the Mumbai affordability index, which for the first time has below the levels of 50%. In fact, now it's about 48%. But what does this mean for the market overall and for the real estate space? To discuss more on this, we'll go straight to Ghulam Zia, Senior Executive Director of Knight Frank India. Hi, Mr. Zia. Thank you once again for joining to NDTV Profit. The big focal point of the report was on the Mumbai market. If you look at the affordability index, you said that this is the first time that we are seeing this below the levels of 50%. Firstly, just for viewer context, give us a sense on what this affordability index is and how Mumbai, which was at the levels of 50 to 52% before, has now come down to 48%.
Great. Thank you so much for inviting me here on this platform. It's always a pleasure to interact with you all. So talking about affordability index, first of all, we are tracking it for last 15 odd years, and I'll come to a little later the backdrop of the index per se. But what is this index? It's all about two sides of it. One is the price of apartments or residential real estate. On the other side is the the ability of a buyer to pay EMIs, which is directly related to the household income. So together, these are the index. This is the index that we have created and which we have been tracking for last 15 odd years. And mind you, the Mumbai that you're talking about today at below 50%, when we started 15 years back, it used to be 94. The index used to be that much. So the affordability has come so long from 98 to about 48, 94 to about 48, which is a great achievement from Mumbai real estate buyer perspective. A buyer is finding real estate in Mumbai much more affordable. And again, there will be questions, how do we say so? The answer is simple that while in this period of 10-15 years, the wealth creation has improved, the ability or the salary pay rises and so on and so forth, all those things come up because, as I said, it's the household income per annum that we track. And on the other side, it also depends a lot on the home loan interest rate. So the recent cut, the RBI has declared almost 100 bips of a reduction in last 6 odd months. Even that is giving a huge boost to affordability. So when we are adding up all these things, in spite of a price rise of a finished good, which means apartment prices are shooting up, but on the other side, the affordability by way of wealth creation has shot up much more. So in spite of a price rise in the home sales or apartments, prices have shot up, but wealth creation has shot up at much higher pace than this. So net, what we are talking about, Mumbai sliding below 48 on our index, which used to be above 50 all through in last 50 years, a big achievement as you have noticed.
Okay, just for the viewer context now, when we are talking about these numbers, now 40% of a ratio in terms of what the affordability index is, that means that households in that city need to spend 40% of their income to fund the EMI, and this is for housing loan for that particular unit in the city that we are looking at. 50% higher or so is considered affordable. So Mr. Zia, just emphasizing on that part, now, if you just take, suppose a person who wants to buy a property, let's say about a ticket size of 1 crore or 2 crore that we are looking at in Mumbai, the argument is that Mumbai still is very much unaffordable as it comes to the prices that we are seeing over here rest to the other cities. But how, when we take this in account with what is the trend that we are seeing in H1 of 2025 is different when a person is going to buy a property of say 1 CR to 2 CR now versus last 2 to 3 years ago? How is it becoming more affordable now?
Okay, so let me explain this. The biggest differentiator for Mumbai, and this is something which has happened to Delhi in last decade and a half, happening now to Mumbai, is the improvement in infrastructure. So today, when we are talking about a lot of these, satellite places, which I don't want to call them satellite locations because infrastructure improving, the time taken to travel to these destinations have improved a lot. So the whole of Navi Mumbai, where Maharashtra government is right now talking about Mumbai 3, that is also very well connected due to the Atal Setu. On the other side, the old locations of Bhiwandi, Kalyan, and even this side on Vasai Virar and beyond Palghar, etc. In these locations, lots of inventory is coming and people are buying. So actually, something which is differentiating Mumbai from the next highest, would I say, costly market is NCR. And it is very difficult to believe that NCR has overtaken Mumbai as far as luxury segment is concerned. We'll explain it in a few days when we do our next report. But it is important to know that Mumbai does have a huge inventory of below 50 lakh apartments, albeit in these locations, which are today connected with better infrastructure coming into place. This is what had happened in Delhi about 8-10 years back when the metros had opened up. It is now happening to Mumbai. So a lot of these metros opening up, a lot of these coastal road, this, that, and so on is happening to Mumbai. Suddenly, a lot of these locations, which were back of beyond, say, about 5 years back, are getting closer to the city. And that is where the apartments that are coming up is adding to affordability of overall Mumbai's index that we're talking about. So while on one side, you will look at somebody buying a 600 or 700 crore apartment, but on the other side, you should also know that the number of apartments sold in Mumbai below 50 lakh is highest in all the top 8 cities of the country, which means that Mumbai is selling a lot of affordable inventory compared to the other cities of the country, which includes Delhi, Bangalore, Chennai, Hyderabad, etc. So Mumbai has the largest amount or largest number of affordable housing transactions happening, which is what we can't ignore. So overall, that's exactly what implies when we're talking about affordability for Mumbai coming down or improving below 50. that means that the overall environment for buying affordable houses in Mumbai has improved in last 5 to 6 years.
Okay, thank you for that comprehensive breakdown that we are looking at. But you described about the 2010-2011 situation where this affordability number at one point was plus 90%. Now from this plus 90%, we are looking at a number of 48%. Despite the rate cuts and the better infrastructure, these all contributing factors have led to this cut in this number that we are looking at. What are some of the other factors, which we should account for, some of the challenges which were there before and are now in a better position that is aided to this kind of an affordability index, which is now at a better positioning as compared to the past?
So as I said, while we discussed about infrastructure and availability of fundings, etc., it's important to also understand that what we are talking about is not directly, related to what is selling in South Mumbai. As I said, somebody buying a 700 crore apartment, or yes, on the other side, when I spoke about luxury segment in NCR overtaking Mumbai, it is still worthwhile noticing that 50 crore plus kind of inventories that sell in Mumbai is the highest. So net, while these two cities are, fighting with each other to pick up that honor of the most luxurious real estate of the country. But all that is aside, when we are talking affordability index, it is something where the ability of masses to buy a house comes in. Because the person who is buying a 700 or 800 crore worth of an apartment or a 200, 300 crore apartment is not really chasing the home loan to actually fund that purchase. It's actually affordability is coming in because largely that segment which depends wholly on housing loan to buy that apartment is now feeling much better off. And also let's not forget the Pradhan Mantri Awas Yojana, which came in October of 2024, is also coming in. So there are these two factors which are bringing affordability into all over India market, and more so in Mumbai, because this was one market which used to be the most unaffordable about 15 years back, and gradually is becoming actually more and more affordable with every year passing.
Thank you so much, Mr. Zia, for joining and sharing that perspective. It's an interesting note that one should keep a track of on what's happening with the overall affordability index. In fact, if you look at some of the key cities wherein they're still considered the most affordable, this includes the likes of Ahmedabad, Pune and Kolkata. So that is something that is interesting that we should be watching out for. But let's welcome in our guest for today as well. Prashant Tapse, Senior Vice President, Research Analyst at Mehta Equities, joins us. Mr. Tapse, welcome to the show. We were just having a discussion on the overall real estate space and the focus being on the Mumbai market, wherein it is considered that affordability index has become relatively better as compared to the last few years that we are looking at. Just want to get your sense on the overall real estate space and in the Mumbai based real estate players that we are looking at, if you have any favored picks in that.
I think, yes, I agree with the guest where he was saying about the infrastructure, which has helped a lot of the cities getting into closer to the cities, and even the people who are traveling very long, they are feeling very comfortable to have this metro infrastructure, which is very comfortable for them right now. So that is giving a lot of affordability to the new customers, new consumers to buy and buy the current inventory around this current levels also. Very much comfortable. Again, plus the interest rates, which is going down from last 2-3 months, is also helping a lot of people to have that kind of affordability, to have that interest rates and the loan book in the housing segment. In this favorite pick again, in the Mumbai-based Lodha developer looks very good for me at this point of time, because it has the largest inventory in India in Mumbai right now. Even Godrej Properties has a good inventory in Mumbai, so Godrej Property looks also good, very good for me from the inventory point of view. On the valuation, I think Godrej will be a very standpoint, very positive for long-term investors at this point of time.
Right. Thank you so much, Prashant, for that view. Well, moving on, Dixon Tech, if you see, is under pressure. Now, this is on the back of Phillip Capital, which has maintained sell with target price of 9,085. Well, Punit joins in for more details.
Phillip Capital has maintained a sell rating on Dixon Tech. They're seeing a 37% downside from the current market levels with a target price of 9,085 rupees per share. And they're highlighting a very, very important note that one of its key clients, which is Motorola, has actually gone ahead and given some outsourcing of components for its key products to another company called Carbon. Now, Carbon was earlier, a manufacturer of mobiles, and now, gone into become an EMS player essentially. But Motorola has actually given a contract to Carbon, which is also a beneficiary of the mobile PLI. So this is a key negative, because Motorola was one of its largest clients, and Dixon was a sole supplier supplier for the final product and was looking to increase the components for something like a Motorola this year. That's what they highlighted in our previous conversation as well. So definitely a key negative. The other key aspect of the note is also highlighting that the long-term trajectory of outsourcing of these component shift remains uncertain for Motorola specifically, because the China's Communist Party, the CCP, owns 10% stake in its parent company of Motorola. So that could be another overhang on the stock. They're also seeing Dixon to see multiple D ratings going forward, and they've reduced the FY27 earnings because of competition from Dixon. So the leadership is something that Phillip Capital sees to be uncertain in terms of components going forward, and hence maintaining the sell rating with a 37% downside is what Phillip Capital sees on Dixon Tech.
Right, Puneet, thank you so much for that. Well, Prashant, let me come to you. Just wanted to have your view, overall view on Dixon, and considering the news wherein now Motorola has outsourced domestic volumes to Carbon as well.
Yes, I do agree with the broker report. I'm very much negative right now on this EMS segment due to the high competition. A lot of other companies are going towards EMS segment because of the high margin and the long-term growth strategies. So Dixon being the market leader, I think there will be some kind of market share pressure going forward. And a lot of companies are shifting to India for having such kind of outsourcing contracts. But again, Dixon being the very largest in terms of getting this kind of advantages, but I think a lot of competition is coming into this kind of segments, and that will obviously have a disadvantage for Dixon, because the customers looking for a better manufacturing arrangements, where Dixon has a big capacity but he's not able to deliver that kind of deliveries in terms of product manufacturing. So competition is high, margins are very much under pressure, and the valuations are still concerned. So I think the price correction should go in a shorter period of time. My target would be around 12,000 in the near term.
That's the view that we are seeing for Dixon Tech. But let's move on to an interesting story, and this is about the domestic airfares in the first quarter. Are they as feared as feared? That is the question that we'll be posing to Samhab as he joins with a detailed analysis of air traffic trends and the answer to this.
Well, if you look at the first quarter of FY26, there have been multiple events because of which the market was fearing that the air traffic growth in the first quarter could be on the weaker side. Firstly, if you look at on April 22nd, 2025, there was the terrorist attack in Pahalgam, which also impacted tourism in that region. This was followed by India retaliated by the Operation Sindoor, and because of this, there was India-Pakistan conflict, which also impacted air traffic. And apart from that, if you see at June 12th, 2025, there was this Air India aircraft crash, and in June 13th started the Israel-Iran conflict, which also led to international airspace closure in some of the regions. So because of these factors, market believed that the first quarter FY26 traffic could be on the lower side. In fact, they were expecting a decline. But however, the data that we have collated and calculated, what we are understanding is that in the first quarter of FY26, air traffic for at least the domestic air traffic could report a growth of nearly 6%. As you can see in this chart, in the first quarter of FY26, the total air traffic is expected to be around 426 lakh. Now, this is calculated using the daily passenger data that we get from the Ministry of Civil Aviation website. Now, this number of 6 lakh is much higher compared to what we had seen in the first quarter of FY25, where the number stood at close to 402 lakh passengers. Now, obviously, this number will be lower than what we had seen in the fourth quarter, but that is because fourth quarter is a much stronger quarter seasonally for any airline company. Now, if you look at the growth chart that is there here, in the first quarter of FY26, we are seeing a growth of 6%. Now, this 6% growth is slower than what we had seen in the last couple of quarters, but is much more than what we had seen in the first quarter of FY25, that is last year, where we had seen a growth of just 4.2%. Now, if you look at the monthly data, in the month of April, we had seen close to 143 lakh passengers, that is around 4.77 lakh passengers on a daily basis, a growth of 8%. In the month of May, it grew by around 4%. In the month of June, we are expecting it to grow by around 5 to 6%. So the overall growth for the first quarter is expected to be around 5 to 6% based on the daily passenger data that we get from the Ministry of Civil Aviation website. Now, if you look at the international air traffic, now this international air traffic are for the domestic players like Indigo, SpiceJet and Air India. Now, there, if you look at on the international front, we are expected to clock the air traffic number at around 1 crore, which is a growth of 6%. Obviously, this number is much lower than what we had seen in FY25, where we grew at around 13% 15% on an average for the full financial year. Yes, the number is lower, but it is at least a growth compared to what the street was expecting of a decline in the first quarter of FY26. Now, if you look at the passenger load factor, which is a measure of capacity utilization for the major airlines, for Indigo, it has come down to 86.6 from 87.3. Not much of a decline, but yet a decline. For Air India, it has increased to 88.3 from 85.3, and for SpiceJet, it has come down to 88.4 from 92.2. So it has declined for SpiceJet and Indigo, but not much of a decline that we have seen in the first quarter compared to last year. So more or less, the first quarter is not expected to be that bad for any airline company. And lastly, if you look at Indigo's consensus view for brokerages, for consensus target price for Indigo stand at around 6,012 rupees, which is suggests a return potential of 7%. Highest target price on the street for Indigo stands at around 6,700, which suggests a return potential of around 19%.
Okay, thank you, Samhab, for that detailed analysis that we are seeing on the overall aviation sector. Prashant, let me come to you on this one. So, the main fear was on that the growth would be lower because of various incidents that have taken place in this last few months that we are looking at. But but the overall outlook is much better than expected. I want to get your sense on the overall space and what's your view on Indigo?
Despite having such kind of events in the last 3-2 months, I think there will be a sentimental impact of 1 week or 10 days. But again, the way how travel agencies growing very so fast, and people are having a lot of business trips and all on everyday basis, so that is not affecting this everyday travel. The domestic travel industry will grow very faster than the international travel, and Indigo is a market leader in that way, almost 64% of market share. So overall, my outlook on the industry would be yes, 5 to 8% kind of growth can be expected in the overall travel numbers on a month-on-month basis. On a year-on-year basis, I think the industry will grow faster than the GDP, again at least 7 to 8% on the higher, better side. Indigo obviously being the market share in the 64% major leader, I think with this again every 3 months to 6 months there is a overhang of OFS. So with these concerns, again 6,000, 6,100 can be a target for me on a very shorter period of time, and again 7,000 can be a best case scenario for next 12 months.
Thank you so much, Prashant, for that view. Well, moving on, Nuvama has upgraded IndiaMart to a buy rating and also hiked its target price to Rs 3,700. Mahima joins us with more on why Nuvama is bullish on IndiaMart.
They had earlier downgraded to hold in October 24, and before that they had downgraded to reduce in October 23. Post that, now they've upgraded the stock to a buy rating, so it's a double upgrade overall. Overall, the target price has been hiked from 2,100 to 3,800 rupees, which is a 45% upside from its overall yesterday's closing. What they're saying is that they believe that the business is entering a new demand upcycle, plus management's initiatives such as changes on platforms and investing in marketing as well as branding will attract buyers going ahead, and this will lead to higher unique business inquiries, followed by an overall rise in the net new subscriber addition as well. Plus, they have also increased the earnings estimates by around 9 to 10% for FY26 and 27, and this they are saying will be driven by higher revenue growth, while there might be lower profitability because of overall marketing and branding costs going up. Lastly, they've also said that overall target valuations also they've increased from 22 times to 35 times. And this 35 times was something that they had already ascribed to before they had downgraded the counter. So these are the reasons as to why Nuvama is bullish on IndiaMart Intermesh, and of course why we're seeing the up moves in the stock today.
Right. Thank you so much, Mahima, for all the details. Well, Prashant, the concern about IndiaMart was that there was no new addition in subscribers. Well, now Nuvama has came out and they have upgraded to buy. What's your view on the same?
I think with respect to the spending increase from next quarter, which will bring a lot of subscribers in their books, considering the growth in the SME sector and considering the market share in the SME and digital marketplace, almost 60% is IndiaMart takes care of these things. So if they spend in the right way, and I think if the subscriber growth volume comes in from the next quarter, I think that would be a great opportunity for any investors to buy at this point of time. Overall, I think with respect to valuations, with respect to ratios, with respect to other factors, I think very positive to have a very fresh position with at least target of 3,100 from the current levels.
Okay, thank you, Prashant, for joining and sharing your views on various of these counters. But let's shift focus. Snowman Logistics is up over 2% in trade today, and this is after hitting high of 5% in the morning. Let's bring in Jasmeet to talk to us more about this company.
Well, right. Snowman Logistics is up in trade and the stock has moved roughly around 2% on the account of new openings of the warehouses. While these are temperature controlled warehouses currently opened in Kolkata and Krishnapatnapuram. While this expansion will lead to an addition of 9,500 pallet capacity, currently management has 43 such stores all across India with existence in 20 cities, and the current pallet count they have is roughly 1.5 lakh addition. Apart from this, management also has 296 owned and 325 leased out refrigerator vehicles. Let's understand more about the management's commentary with regards to capex. While management plans on spending roughly 30 crore in FY26 and FY27 with regards to the expansion, while this warehousing is part business of it, which contributes roughly 41% of the overall revenue. While this has been flattish over last year, it will be interesting to watch out what management feels about warehousing and how many more capacities can they add on. And let's see how the stock reacts.
Well, thank you, Jasmeet, for all the details. Well, viewers, this is all the time that we have on this edition of Profit Top Trades. Stay tuned to NDTV Profit.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of rupees 77 to rupees 82 per equity share of face value of rupees 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Good afternoon and thanks for tuning in to India Market Close right here on NDTV Profit. I'm Neeraj Shah. With me are Puneet and Mahima, and we're going to take you to the next 1.5 hours of trade. But I'll quickly mark up what the markets are doing today, what specific stocks may be doing. We'll mark some interesting movers as well, by the way. So that is the thing to watch. Well, the biggest news of the day actually is right on your flash at the bottom of your screen. Donald Trump is saying that ceasefire between Iran and Israel is going well. This is as per Bloomberg. And maybe the markets are doing this too, but we'll try and get that. And Donald Trump is saying that proud of Israel because they have come back, whatever it means. This is as per Bloomberg, of course. We'll keep getting you more developments there. But non-banks are doing well because IT is up 1.5 or 1.6%. Very strong show. Like we said so many times now, it's almost a tic-tac-toe. The IT index gains one day, down the next, then again comes back. In today's session, we'll get the Nifty IT here on your screen. Well, 1.6% higher at the highest point of the day. The broader end of the spectrum too, not doing too badly. Remember the first 2 days of the week, it was essentially being led by mid-caps and small caps. In today's session, if we can get the mid-cap and the small cap indices, they're not leading, but they're not doing too badly. Market heat map and then the market breadth on your screen. Small caps 1.45% higher. A heat map. Some defense names and banking names are not doing too well, but Titan, brokerage note, falling gold prices, some people say a cup and handle formation, all of that might be auguring well for Titan. 3.5%, some bit of tech in Infi, Tech Mahindra, and some consumption names have done well too. In fact, let me take two specific themes because you can see a fair degree of green on the screen. I'll very quickly mark some specific themes on in today's session before we move on. So consumption is doing well. Would love to hear Mahima's views on the same. Jubilant, Nestle, Tata Consumer, there is Titan, there is Page Industries, Indian Hotels, some very strong show here by some of the consumption names. So that's part one. Defense is not doing well. Data patterns, BEL, solar industries, and multiple other examples really of how some of the defense stocks have come back. Amine names, at least these two, which is Indo Amine and Balaji Amines, are doing well. We'll get in Varsha a bit later on in the show to try and explain why is it that this could be happening. So keep an eye out for these stocks as well. And some brokerage views have come in on stocks. So in IndiaMart, Nuvama, as a result of which Nuvama is constructive, double upgrade, 5% higher. MCX, UBS is constructive, 5% higher. MGL, I think there is a City tactical buy here, up 5%. So guys, this is the long and short. Lastly, we'll tell what companies have said, and we'll get to this in a moment as well. But watch out for transformers and rectifiers as well as KEI Industries. Some pretty strong commentary. We'll talk about them as well. But Mahima, Puneet, what else are you guys spotting?
Right, so in terms of the overall, the themes Neeraj of course covered, let's pull up the sectoral heat map and advanced decline ratio post that and see how that is faring. Sectoral, like he mentioned, there's Nifty IT which is gaining the pack. Of course, Nifty Media also making significant gains, up by about 1.9%. There's Nifty FMCG, Nifty Rural as well as Nifty Auto doing well. Pharma also doing fairly well. PSU Banks, Finance also doing fairly well. But that is, advanced decline ratio is quite interesting. If you can pull up that, and see how that entire chart has fared throughout the day. It's kept the kind of widening it had since its morning, and there are 1700 odd advances versus that of around 400 odd declines. So that ratio is almost more than 4:1 per se. In terms of some significant amount of names that are seeing traction, let's pull up the BSE 500 and see the counters that are doing seeing big amount of moves in trade today. There you go. There's lot of action on the green side of things, and it's the broader end of spectrum that's doing well. There are counters like 361, there's 3M India, Aarti Drugs, Aarti Industry as well, that's doing well in trade today. There are counters which are not doing very well, the defense pack of course, but something like a Dixon Tech on the back of the note where there was a 37% downside is not doing well. Some counters of course like Jai Balaji, Kirloskar Brothers, Network 18, Balaji Amines, Den Network also doing well in trade today. But with that, let's welcome in our guest for the day, Shivangi Sarda, analyst equity derivatives and technical at MOFS, Motilal Oswal, joining us now. Shivangi, hi, good afternoon to you. Give us your sense as to how you're reading the charts for Nifty as well as Bank Nifty right now.
Very good afternoon, Mahima, and thank you, Neeraj, for having me. So we've seen that the markets have reacted well. The bulls are back in action from the last 3 trading sessions, and we've seen a follow-up from the previous week as well. It's on the verge of a Poland flag pattern formation breakout on the weekly basis. Of course, we're very comfortably holding above 25,000, which indicates that put writers are very much at base here. Now, India VIX has also cooled off, which indicates that there is comfort. Overall, we've seen that somewhere the index is finding support and good buying interest from pockets of sectors, not necessarily heavyweights, but a lot of scattered in between. But overall, good so far, and we've seen that the index is gearing up for 25,500 marks and 25,750 positionally for the Nifty index, with a support of 25,000, which will act as a major make or break zone here. Now, of course, we're entering into the monthly expiry, and there will be volatility and swings, which will be expected, tomorrow as well. So overall, looking quite positive. But if we talk about the Bank Nifty index, we've seen that some lackluster move over here. But of course, holding at the higher zones, although underperforming from the broader market, but still gaining strength. And we can see NBFCs are fairly, contributing to the strength of this index today. So overall, a good buying interest here as well, which is expected to take this index towards 57,250 with a support of 56,350 zone.
So 56,350 is the key support for the Bank Nifty, and we've seen some individual moves on the NBFC as the gold finance, but not so much on the large cap banks, and that's reflective in the performance of Nifty Bank as well. But Shivangi, good afternoon. It's Puneet here this side. What are your top picks for today?
Hi, Puneet. Absolutely, we have been seeing good buying interest in gold-related counters because of the gold cooling off from its record high levels. Of course, this is on account of the easing geopolitical tensions as well. Now, Titan is one stock which is on my radar. This stock, technically on the daily as well as weekly basis, it's given a very momentum breakout, and we are seeing that it's sustaining well above its key moving averages as well, which is suggesting that momentum is going to continue over here with continued strength. Now, of course, with good amount of volume and interesting open interest activity here, and the positive rollovers that are coming in, the entire combination is positioning this stock for a potential standout performer in the next series as well. So recommending a buy on Titan here. Now, my next targets for Titan is around about 3,800 with a support of 3,580 levels. And the second pick is MCX. We've seen exchange-related counters are in buzz, and MCX particularly has been doing quite well from the last 10 weeks. Making higher top, higher bottom formation. And we've seen that today's trading session was exceptional because of the increase in volumes that we've seen. And this increase has been remarkable, which was seen earlier this month. But again, we've seen bulls are back. Even on a monthly basis, the stock is up by around 35%, which is showing a clear breakout in strength holding at the higher zones. So definitely this one's getting ready for a target of 9,000 with a support of 8,500 levels.
MCX and Titan are the two picks that Shivangi has given today. In fact, there was a very interesting note of Macquarie on Titan, and that is something because of which we are seeing gains of about 3.6% in the stock today. What they're saying is that through their channel checks, they've come to know that despite of the rising gold prices, the overall demand for jewelry in terms of where Titan stands is still high, and overall footfall has moderated in June, but they're expecting Titan's jewelry segment to see a 21% growth in terms of their sales and EBIT growth as well. The second thing that they've mentioned in the note is an interesting one, that the overall customer adoption of lab-grown diamonds might be impacted because of the new certification rules that have been given out by GIA, which have certain rules as to how one needs to certify a lab-grown diamond and how one needs to identify a lab-grown diamond and specify that in the certificate. And because of that, the overall consumption or maybe demand for lab-grown diamonds might go down, and this could have a positive impact overall on Titan. Plus, what they're also saying is that along with that, there is demand recovery seen in mined diamonds, and that makes Titan to be in a good position as to when it comes to their product improvement mix as well. Lastly, they've also mentioned that their confidence in overall seeing 11 to 11.5% growth in terms of their jewelry EBIT margins. So that their margins are expected to be anywhere between 11 to 11.5%, which the management has of course gone ahead and already said. And plus, this will be supported by overall counter competition through new launches, and overall they're seeing sales strength reflect in EBIT, and this was something that was missing in the past few quarters as per Macquarie. They've given it an outperform rating with a target price of 4150, and the current price of Titan is at 3656. So that's with regards to where Titan stands. Shivangi, with respect to, I was just going through a recent note for Dixon as well, and that had given a downside of around 37%. But all of these EMS counters, in fact, have been, doing fairly well when it comes to the fundamentals. But where the charts are concerned for Dixon, what do you suggest? What are the charts indicating, and what's the kind of support and resistance that you see?
So, Mahima, for Dixon, we've seen that this stock has been a laggard one from the last 2 months, and even on a year-on-year basis, after performing, in fact, outperforming in the last year, we've seen some bit of consolidation here. It's not been able to surpass its previous year's high as well. So overall, some consolidative move here. Week-on-week structure is not really improving. There was good buying interest which emerged earlier this week, but it could not sustain. So overall, we've seen that this stock is still currently in pressure, trading below its important levels as well. So I would recommend a little wait and watch over here on this one. And if we want to go for IT space at all, one could focus on the mid-cap IT names such as Coforge or Persistent Systems, which are much stronger and relatively doing better than this.
Well, and the key aspect of note by which Mahima was referring to was also by Phillips Capital, and they addressed a very new point in Dixon that they could actually lose some of the key aspect, which is the component side of the business, which was expected to grow for the company as well going forward. But Shivangi, in terms of the other EMS players as well, if you can give us a view, because we've seen AC sales being very tepid in this particular month, largely offset by the early monsoon. So any view that you have specifically on a stock like Amber, as well as something on Keynes Tech as well, because on Keynes Tech as well, while it has not been impacted because of the AC aspect, the key for it was the QIP, and that has been absorbed very well. It's 1,600 crore that they've raised at 5,625 rupees per share. So both on Keynes as well as something like an Amber, something like an EPAC, which is also impacted because of the AC sales. Any kind of view that you have on the charts, does it suggest that it could rally a little bit more, at least in terms of Keynes Tech?
Now, Puneet, if you look at this entire space, we've seen that, even if I look at Keynes or Amber for that matter, even Voltas on the record, we've seen that these stocks have, tried to perform and try to move from the lows. But from the last 3 weeks, they have been stuck with, no follow-up here. So momentum is slightly missing in these names. Even, power stocks, if we draw a correlation between the two. Even they have been, quite muted. So I would, suggest that we could wait and watch here. There are many other sectors which are performing. Some selective pharma names, specifically the diagnostic space stocks. Even the travel tourism are picking up right now. Exchange related counters, some selective IT, especially mid cap ones. So these are the spaces which are looking quite good. Some, telecoms space stocks and the BFSI. So I think this is the flavor of the market right now, and we should focus there.
So that's with regards to where these counters are concerned. With that, Shivangi, before I move on to our next guest, just want to get a sense on what's happening in defense right now. Of course, we saw significant amount of gains because of the entire Iran-Israel conflict riling up. But with regards to defense pack from the last 2 days, there's profit booking seen. Do you think there are some pockets still left where there is more steam left and one can go ahead and buy for the next 6 odd months, which can give good returns?
Yes, definitely. There has been profit booking, of course, on account of the easing geopolitical tensions across the globe. But, if you look at the defense pack, HEL has been one stock which has been relatively stronger as compared to the other names. And this has witnessed profit booking, but overall it's still held on to its monthly, lows, and it's forming higher highs, higher lows from the last 4 odd months. So overall, this is one stock which has been in relative strength, and one can focus on this one on a positional basis as well. Of course, for the time being, trading perspective, this will not be one of the choices, but for some long-term structure, the stock is getting ready for a 5,100 odd levels.
Shivangi, also just one question. You mentioned MCX is one of the picks. What about the other players like IEX as well? Because we've seen another strong reaction come on that stock as well. Any view on that stock?
Talking about IEX, this has tried to move from the last 3 sessions. But today, it gave up its morning gains, and it has been moving in a very lackluster movement. Even if we look at the, hourly chart for this one, this stock hasn't moved at all in the last 3 hours. So overall, less of momentum here on this one.
Okay, Shivangi, we'll let you go on that note. Thank you so much for taking the time out and being with us. Really appreciate your time. All right, joining us on the show is Anil Rego, founder and fund manager at Right Horizons. Anil, good having you. Thanks much for taking the time out. Long time, but good talking to you. Are you constructive, Anil? Because the biggest bugbear, which would have been higher crude prices, are now behaving and becoming a tailwind. Is that the big, how do I say, trigger on the upside for the Indian markets currently?
Yeah, I think there are a number of them. I think crude is definitely one of it. And the market definitely doesn't like uncertainty related to wars and stuff. Okay, so to that extent, yes. Our view has been that crude should ideally stay weak in the long term. Apart from spikes that we can see at times like these. So crude definitely will be a major, booster in terms of sentiment at least. And I think if the ceasefire is able to hold, I think that's where it is. But of course, if it doesn't, then again, you may see volatility in crude again. So I think temporary respite, but I think the medium to long term still, we're not too concerned about the crude price.
But so does that and other factors make you constructive? Because I heard you say that is one of the factors. There might be more. The constant refrain that comes in is that valuations are steep, and yes, you could argue on the Nifty wide they are, but is the market set for gains? If not the index itself, then specific pockets at the broader end of the spectrum. Are we in a sweet spot?
Yes, no, actually I'm not as concerned on valuations as well, because if you went back and saw pre-COVID, right, the Nifty was at say 29. Okay, so today it's come off significantly. There has been earnings growth. And from that standpoint, at least on the Nifty side, I think I believe that we are in a better place, which is why typically, one would expect it to also go towards a higher range, and there is some headroom there. So valuations, I'm not as concerned. Yes, some of the other benefits that we are seeing, which are also medium long term, I think manufacturing is doing well. You are finding that somewhere the Make in India stuff is sort of coming through. Interest rates are not are good in India. I mean, down from earlier phases, and inflation also is I think relatively stable. So if you look at a lot of the fundamental factors, yeah, I think it is good. There was a slowdown in government spending for some time, which now that has also come back up. Okay, so from that standpoint, I think there is sufficient room for earnings growth as well. And I think if I look at the last quarter, earnings growth is not too bad.
Anil, it's Puneet this side joining in as well. Thanks so much for joining in. You mentioned that valuations look slightly on the higher side, but earnings growth to drive essentially in FY26. What are some of the key pockets that you are looking at where you could see that earnings growth come in? Because while we've seen some valuation comfort on IT, the earnings growth is not that visible there, but banks also haven't performed that much. So any kind of specific pockets that you're looking at where you expect earnings growth to come in FY26?
Yeah, I think the financial services and the banks also have been a little easy for some time. So I think that is something that is there. So you have NBFCs as well, which I think should sort of sustain earnings growth. I would also expect if oil prices say remain stable, then you may see some bit of growth coming in from there as well. That said and done, I think consumer discretionary we still want to watch. We are cautiously optimistic. So those are places which sort of we are liking. There are some niches that we also like. For example, wealth management is definitely a place to look at. Even the hospital sector is another one. That we think that I'm saying the niche places where one thinks that maybe sectors will and specifically stocks will continue to work.
Hi, Mahima also joining in. Just want to get your sense on the fact that we're seeing a lot of promoter stake sale taking place, year to date in 2025. We're also seeing a lot of buybacks that are happening on the cards. What is your reading with respect to this? Because most of these buybacks have happened in these IT companies. So do you think that these actions are sector specific? And if yes, how will you read these moves happening in the market, and then what sectors and pockets do you think would you go ahead and be positive about?
Yeah, so I think buybacks, if you see a little bit more towards the technology side, and that is something that happens once in maybe 3-5 years. Always there are buybacks, and because there's excess cash, they are good cash flow businesses and zero debt industries. So how do they deploy? So one of it is to look at acquisitions and stuff, and the other is to say, okay, let me do buybacks. So I think a combination of both, is what I think most companies will look at, and not everybody wants to do large acquisitions. So buybacks is definitely something for the technology side. Yeah. So even if you find that promoters buying in and stuff, I think that's also broadly indicative of the optimism, if you ask me, of the promoters. And from that standpoint, I think, yes, we are also seeing, when we're talking to companies, we are seeing relative comfort in terms of, their outlooks. And from there, I did mention a few of the sectors, like I said, the niche ones. Wealth management is something I already mentioned. Manufacturing is something as well. And specifically, if I look at the other is maybe a wireless and cables, because, one thing is that infrastructure will do well. With interest rates also hopefully coming down or remaining stable, you will find that some of these, housing related is an option, but we like to do it indirectly for various reasons, in terms of including corporate governance and, the way the industry is. We like, let's say, ancillary sectors which sort of feed in to infrastructure, feed into, real estate and stuff, and housing and infrastructure.
Okay, Anil, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time.
Thank you.
Well, one market view, and here's another market view. The primary market and the secondary markets both seeing a flurry of activity, while a packed IPO pipeline is getting ready to hit the street. We're also seeing an acceleration in stake sales by promoters. We caught up with Ashish Gupta, CEO of Access AMC, to understand this dual trend of fundraising and stake dilution. Here's his take.
We have seen in the last 2 months acceleration both in promoter stake sales and private equity stake sales. And I think from this week, we are seeing quite a large pickup in IPO pipeline as well. So several large IPOs are going to come in the coming few weeks. So I think this is a trend that we have been seeing over the past 18 months. So even in 2024, there was a fairly large supply of equity coming into the market. And in fact, it was outpacing even the inflow into mutual funds. And in the first quarter, with the market correction, this supply reduced. And now with the market recovering, we are seeing this supply kind of resuming. The good thing is that, we are seeing, particularly with the IPOs now, many new companies, and actually the IPO slated for the rest of the year has several technology companies coming to the market. So different kind of companies are coming to the market. The other good thing is that with this supply coming in, it kind of helps absorb liquidity and does not kind of make the market valuations even richer, right? So I think supply does play an important role. If you talk about our strategy, we have been selective. There are a couple of private equity stake sales that we have participated in, and I think 2 IPOs till date we have participated this year. So we are quite selective. Also, I think overall in the IPO market, some of the frenzy has subsided. So what you were seeing in the second half of last year, when IPOs were getting subscribed multiple times and there were large listing pops, I think now IPOs are getting more rationally priced and subscribed.
All right, now before we head into a short break, a moment that makes every Indian heart swell with pride. Indian astronaut Shubhanshu Shukla has scripted history, becoming the first Indian to reach the International Space Station in 41 years. Since the legendary Rakesh Sharma's journey as a part of the AXIM 4 commercial mission, Shukla took off with his crew from NASA's Kennedy Space Center in Florida at 12:01 p.m., a moment that was witnessed and cheered by thousands on ground and millions back home. And from the salience of space came his first message, a heartfelt salute to his beloved nation, India.
नमस्कार मेरे प्यारे देशवासियों, वॉट अ राइड। 40 साल बाद हम वापस अंतरिक्ष में पहुंच गए हैं और कमाल की राइड थी। मेरे कंधे पे मेरे साथ मेरा तिरंगा है, जो मुझे बता रहा है कि नहीं हूँ, मैं आप सबके साथ हूँ। आइए हम सब मिलकर भारत की इस ह्यूमन स्पेस प्रोग्राम की जर्नी की शुरुआत करें। जय हिंद, जय भारत।
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of rupees 77 to rupees 82 per equity share of face value of rupees 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of rupees 77 to rupees 82 per equity share of face value of rupees 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Back with India Market Close right here on NDTV Profit. Now, that time of the show wherein we welcome in Sumit Sarkar to talk about what is being heard on the street. And I'm guessing the street is full of stock moves, Sumit.
There's a lot of
phones
action.
have been buzzing.
Yes, a lot of action stocks that have been in action today. First to name is Deccan Cement. In fact, the entire cement space has been buzzing in trade, but Deccan Cement is something that dealers have indicated that there could be some corporate development. The company could be acquired by one of its larger peer, and the price that has been indicated by dealers is around 1100 to 1200 rupees per share. But do remember that these talks are at initial stage, and it might take time to for the deal to actually fructify going forward. Second stock on the list is PB Fintech. Dealers are indicating that there is a buzz of a potential block deal that could come in anytime soon in this counter. Lloyd Metal is another stock that has been buzzing in trade. Dealers indicate that the company's one of its plant might receive environmental clearance soon, so keep an eye out for Lloyd Metal as well. Then there is Vedanta and PNB Housing. Both these stocks, multiple dealing rooms have been suggesting their clients positional buy trades on both these counters, so keep an eye out for Vedanta. In fact, PNB Housing is something that has perked up in trade. It was flat for the first half and now it's up around 2%. And lastly, it's Trend. Dealers indicate that despite the fact that the stock is at higher level, there are sell flows at higher level on FIDs, so keep an eye out as well for Trend in trade as well.
Okay, and Sumit, in some sense, the optimism around Titan is vindication of the fact that maybe retail by and large could be okay. But some of this could also be, and Mahima, you can step into, but some of this could also be because of gold prices going down, cooling off, and therefore...
In fact, they're correcting that just before the buying period comes in for the festive season and for the wedding period.
Which might be positive, right?
Yeah, exactly.
Mahima, any thoughts here?
Yeah, I think the same thing. The gold prices cooling down just before the wedding season could act as definitely a catalyst. Plus, overall also, we were expecting that Q1 for discretionary spending will go up because of tax cuts, plus the overall 8th pay commission coming in, plus rate cuts as well.
The
so
8th
I
pay
think
commission
that should
is
also
up ahead, right?
Up ahead, but so the second quarter or so, but at least the tax cuts and the rate cut, of course. So that will probably lead to more money in the hands of people, and probably they'll go ahead and buy. I think any dip in gold is probably the indication where people go ahead and just buy right now.
I guess.
Just one more stock that I would want to highlight. Fino Payment is something that we highlighted last week, that the company might get their small banking finance license, and the stock is up to 17% in trade. At least it was up 17%. It's up
still
now
up
9%.
a healthy 9%.
It has cooled off a bit, but it was up 17% at one.
And the chatter still remains the same.
Yeah, something might come in.
Okay, and this something is around them getting
the banking SFB, small finance banking license.
Okay, well, watch out for Fino too. Thanks a lot for that, Somit. So keep an eye out for some of these stocks. 4 or 5 listed. You blink it and you miss it. Somit goes really fast, so keep that in mind. But the market is moving pretty fast too. We'll talk about some of the things that Somit spoke about with Aditya in moments from now. But Nagaraj Shetty to start off the show, because the market is doing well as well. 0.76, 0.78%. Nagaraj, good afternoon. Are you confident enough of giving a fresh long call on the Nifty at the current point of time?
Hi, good afternoon. Of course, Nifty has been in a strong momentum recently from the lower levels. In fact, it was moving in a broader high-low range of around 25,100, 25,200 on the upper side and 24,500 on the lower side. Now, recent the development indicates that there is a higher possibility of a decisive upside breakout of the range. And technically, we believe that whenever the underlying sustains above the prescribed range, it naturally it attracts the upside momentum on the upper side. So the clearly Nifty is moving above the hurdle of around 25,100, 200 levels. I think this time in today's session, it is going to sustain above 25,200 towards that till the end. And in the short term, we could see some swift movement in the Nifty on the upper side. And I'm expecting Nifty to reach up to around 25,600 levels, which is the initial target for the Nifty.
Okay, and what about Bank Nifty, Nagaraj?
Yeah, Bank Nifty is slightly slagging in today's session. The overall trend remains positive. Currently placed at the higher levels, hurdles around 57,000, 57,050. Once it moves above that level, one can expect the next upside momentum towards the 58,000 in the near term.
What would you go ahead and buy today? What are your top picks?
Yeah, I have 2 picks, one from mid-cap and one from larger cap segment. In fact, first one is Usha Martin. If you see the chart of the Usha Martin, has been in a larger consolidation pattern over the last few months. Recently, in the last 2 sessions, the upside momentum has came in from the lower levels. It has broken above the multiple hurdles like downsloping trend line. It has moved above the crucial 200-day EMA, which was holding on in the last 6-7 months. And it has placed above that level, currently trading around 339 levels. I think this is a significant upside breakout of the trend for this stock price. More upside is likely. The immediate upside target would be around 360. One can look to buy at this point of time, currently trading around 339, and one can place a stop loss at 327. Second stock is Jubilant Food. Chartically, if you look at the Jubilant Food was in a larger consolidation phase, and recently it has made a accumulation pattern at the lower levels and broken above the hurdle in today's session. Currently around 711, one can look to buy at this point of time. 750 is going to be the upside target immediately, and 690 is going to be the stop loss.
Jubilant Foodworks and Usha Martin are the 2 picks that Nagaraj has given for the day. Aditya, hi, good afternoon to you. And since Nagaraj mentioned Jubilant Foodworks, just a quick take on how you're seeing QSRs to fare in FY26, because last 2 quarters have been pretty good for a lot of these counters. And if one were to make an entry in this space, what would the counters be that you would pick?
So I believe FY26 will be much better than FY25 was for all of these companies. As discretionary spending continues to move up, I think that QSR is a space where a lot of benefit could come in. Within this space, Domino's or Jubilant Foodworks would be the top pick. If you're looking for a contra pick, contra would be Burger King or Restaurant Brands Asia. All of these companies we need to see how the volumes pick up over a period of time to then take positions in all of these companies. So the topic here would be Jubilant Foodworks, followed by a contra pick of Restaurant Brand Asia.
Yeah, but let's look at one of the key stocks for today, and that's MCX. Now that's buzzing in trade after UBS has written a note and increased the target price to 10,000 rupees per share from roughly about 7,000 earlier. So it's almost a 43% upside and a target hike that they've done. Now the key aspect of UBS is giving its highest target, which is backed by strong volume growth for this particular exchange. Let's first look at the analyst coverage, because that's one of the key aspects. That apart from UBS as well, there are 7 buy calls and 3 hold calls on the stock currently, and we've seen that the highest target price now is set with UBS at 10,000, but we've also seen a target price, a very decent target price with HDFC Research, as well as something like an ICICI Security maintains of roughly about 8,800 rupees per share on something like an MCX. Now, but what was the key trigger today was, of course, the UBS note, and let's look at that in a bit, because the key aspect that they say that the building blocks for the company are now in place to show stupendous volume growth. They've gone on to mention that favorable market dynamics as well as new product launches like the electricity derivatives could propel the growth for the company. They've also mentioned that key volatility in commodity prices, and we were just mentioning about the volatility in gold price as well, leads to increased demand as well, and the robust Q1 average daily volume, which is ADV, has been up almost 50% on a quarter-on-quarter basis, and roughly about 30% on a quarter-on-quarter basis, which is the average daily volume for the option side. So both futures as well as option doing very well for the company as well. The other key aspect that also that UBS had mentioned specifically was around maintaining that aspect with monthly bullion contracts and index contracts also doing very well. And on the gold volumes is also they had very interesting key points. One was, of course, the monthly gold average premium turnover has gone to from 230 odd crores to almost 400 to 600 crores, and that's used to be just 100 to 200 crores earlier in November 2024 when it was launched. The other aspect is the monthly contracts accounted for almost 80 to 95% of the gold ADV and should benefit something like an MCX going forward as well, and that's the positive momentum coming on the stock today as well. Aditya, let me come to you first. A very good afternoon and thanks so much for joining in. In terms of MCX specifically, we have seen a sharp up move in price today, but with the continued increase in gold prices and the average daily volume as well, what's your current call on MCX? Do you see that the earnings growth momentum could be much stronger, because UBS has hiked it by almost 13 to 15% now, and they're seeing a 26% EPS CAGR between FY26 and 28. So what's your view? Yeah, Aditya, that's for you.
Yeah, that was me. Okay. Yeah. So of course, brokerages can come out with very good reports hiking the target prices. But then, if you look at the valuation of the stock trades at about 86 times price to earnings. Really very expensive for a commodity exchange per se. MCX, mind you, MCX is going to dominate the commodity derivative space in the country. There's no doubt about it. But the valuations across MCX, BSC, or for that matter, when NSE will also get listed, are really very expensive. All these stocks have been continuously moving up. Any drop in trading volumes due to any adverse impact on commodities will mean that the stock price is really correct. So from my perspective, the future for MCX is good. However, the valuations are really very expensive. So for now, I will stay away until the valuations undergo a time correction.
Staying away is Atisha. Nagaraj, on the charts though, anything that gives a little more pivot in terms of more legs to this particular rally?
Yeah, of course, MCX has been a tremendous move without showing any reasonable downward correction on the chartically over the last couple of months, we can say. And though it has placed at the higher level, still there is no indication of any tiredness or any reversal pattern building at the higher levels. That means that more upside could be there in the near term. I'm expecting around another around 700 to 800 points is likely. Another 8 to 10% upside rally is likely from here onwards, as overall chart pattern is looking that strong, and I'm expecting more upside in the near term.
Yeah, so from a trade perspective, there is some optimism there in Nagaraj's voice. 5.36%. And I remember exchanges are in focus. Even IEX today has a Bernstein report wherein they have cited the target price of 160. That stock is up about 1% as well, so keep that in mind. But moving on to other stories, was domestic traffic in Q1 as badly disrupted as feared? Well, here's the data. Sumit, who just presented what was heard on the street, now joins in with a detailed analysis of the air traffic trends and the answer to that question of mine. Sumit.
Well, if you look at the first quarter of FY26, there have been multiple events because of which the market was fearing that the air traffic growth in the first quarter could be on the weaker side. Firstly, if you look at on April 22nd, 2025, there was the terrorist attack in Pahalgam, which also impacted tourism in that region. This was followed by India retaliated by the Operation Sindoor, and because of this, there was India-Pakistan conflict, which also impacted air traffic. And apart from that, if you see at June 12th, 2025, there was this Air India aircraft crash, and in June 13th started the Israel-Iran conflict, which also led to international airspace closure in some of the regions. So because of these factors, market believed that the first quarter FY26 traffic could be on the lower side. In fact, they were expecting a decline. But however, the data that we have collated and calculated, what we are understanding is that in the first quarter of FY26, air traffic for at least the domestic air traffic could report a growth of nearly 6%. As you can see in this chart, in the first quarter of FY26, the total air traffic is expected to be around 426 lakh. Now, this is calculated using the daily passenger data that we get from the Ministry of Civil Aviation website. Now, this number of 426 lakh is much higher compared to what we had seen in the first quarter of FY25, where the number stood at close to 402 lakh passengers. Now, obviously, this number will be lower than what we had seen in the fourth quarter, but that is because fourth quarter is a much stronger quarter seasonally for any airline company. Now, if you look at the growth chart that is there here, in the first quarter of FY26, we are seeing a growth of 6%. Now, this 6% growth is slower than what we had seen in the last couple of quarters, but is much more than what we had seen in the first quarter of FY25, that is last year, where we had seen a growth of just 4.2%. Now, if you look at the monthly data, in the month of April, we had seen close to 143 lakh passengers, that is around 4.77 lakh passengers on a daily basis, a growth of 8%. In the month of May, it grew by around 4%. In the month of June, we are expecting it to grow by around 5 to 6%. So the overall growth for the first quarter is expected to be around 5 to 6% based on the daily passenger data that we get from the Ministry of Civil Aviation website. Now, if you look at the international air traffic, now this international air traffic are for the domestic players like Indigo, SpiceJet and Air India. Now there, if you look at on the international front, we are expected to clock the air traffic number at around 1 crore, which is a growth of 6%. Obviously, this number is much lower than what we had seen in FY25, where we grew at around 13% on an average for the full financial year. Yes, the number is lower, but it is at least a growth compared to what the street was expecting of a decline in the first quarter of FY26. Now, if you look at the passenger load factor, which is a measure of capacity utilization for the major airlines, for Indigo, it has come down to 86.6 from 87.3. Not much of a decline, but yet a decline. For Air India, it has increased to 88.3 from 85.3. And for SpiceJet, it has come down to 88.4 from 92.2. So it has declined for SpiceJet and Indigo, but not much of a decline that we have seen in the first quarter compared to last year. So more or less, the first quarter is not expected to be that bad for any airline company. And lastly, if you look at Indigo's consensus view for brokerages, for consensus target price for Indigo stand at around 6,012 rupees, which is suggests a return potential of 7%. Highest target price on the street for Indigo stands at around 6,700, which suggests a return potential of around 19%.
So the first quarter will not be as bad as what one was expecting because of the entire Air India air crash. Indigo seems to be positioned well, is what Somit is saying. In fact, if we can pull up the stock, it's 0.7% higher today. But at 10 o'clock, when we broke the story today, the stock was up as much as 2% in trade after we brought the story to you this morning. Aditya, I'll come to you on this one. It's not just Indigo. In fact, a lot of these counters in the tourism space are buzzing well in trade, and this is because it's the season to travel now. It's summer vacations kicking in. A lot of these counters are seeing traction. How do you see the entire space, and what would your preferred picks be?
So Indigo is a fantastic company. The market share that they have gained at about 70%. It's a dream run for the company over the last 4-5 years. Practically with Air India having its problems because of the deadly crash that they had got, and SpiceJet having promoter problems and ex-promoter problems. SpiceJet has also scaled back its operations. So Indigo has had a free run, and because of that, the stock has moved up. Indigo's market cap is at about 2.1 lakh crores. And that values the entire aviation space at about 3 to 4 lakh crores. I feel that is really very expensive. If crude prices were to move up, these stocks will automatically move down because they will suffer the first rent. Or if world goes to the war and Middle East airspace closes down, these companies get impacted the most. So from my perspective, Interglobe is a dream company, fantastically managed, now looking to expand its international operations. That's where the next leg of growth would come. But I would not buy the stock at these valuations. I would need at least 25 to 40% correction in the stock to enter the stock. Aviation is a really very tough business. Even though Indigo has been on top of the business, it takes no time for them to have a bad quarter. So from my perspective, great company. That would be the only pick within the sector, but wait for a correction to enter into the stock.
Okay, wait for the correction to enter into Globe. Nagaraj, what would that correction be like? What are the levels that you're watching out to make an entry in Interglobe?
Yeah, chartingly it remains strong, placed at the higher levels. It has bounced back with the gap. The gap is still open. I think at the lower levels, 5,200, the higher base where it has made recently and bounced back, that is going to be a good support for the market, for the stock price. And at the higher levels, around 5,700 is going to be the resistance as per the range movement.
Got that, Nagaraj. But time for a bull and bear segment. Specialty chemical major Aarti Industries is at the crossroads now. The bulls are betting on its aggressive capacity expansion and strong growth guidance, but the bears are pointing to persistent pricing pressure as well as high debt levels. My colleague Varsha is now joining in to give us both a bull as well as bear perspective on Aarti Industries. Varsha.
Right, thank you so much for that. So yes, Aarti Industries is buzzing on the back of MK's note, but let's see what is working for the company. Well, it is poised to have significant incremental EBITDA growth by focusing on the ramping up the existing capacities and also increased order inquiries, particularly from US, will boost earnings for the company. While the recent expanded capacities in MMA will contribute to the gradual ramp up and improving operating leverage for 2026. But the persistent pricing pressure and overcapacity concern is one of the disadvantages the company has. The pricing environment remains subdued due to overcapacity, particularly from the Chinese manufacturers. The ongoing pricing pressure, especially in key products like MMA, that is monomethyl aniline, and the agrochemical business, will actually may impact the margins for the company going ahead. While a company do have a favorable macro tailwinds and diversified product basket which will help the company is well positioned to benefit from the current geopolitical situations and the agrochemical restocking, leading to incremental volume growth. While we all are hearing now from the management of every chemical company that the volume growth is back, though the pricing pressure still persists, but at least we are seeing the volume growth to be back on every company rather, or every like MK is bullish on Aarti Industries, then potential US tariff situation could create a new market opportunities across agrochemicals, pharmaceuticals and additives, while the energy business outlook is expected to improve with favorable gasoline naphtha spreads from Q2 of FY26. But elevated net debt level and delayed leveraging is one of the disadvantages the company has. Aarti Industries, if you see, carries a significant net debt which has increased due to ongoing capital expenditure and of course the capex that the company has done in the past. While management aim for net debt to EBITDA under 2.5x by FY28, but some analysts have a projection that the net leverage to remain elevated for longer than period expected. They are on track for their ambitious FY28 growth targets, wherein they are expected to have a sequential recovery when it comes to EBITDA, supported by the cost optimization strategies that the company has. And they have also projected strong financial discipline post FY26 with lower capex, improved balance sheet ratios, and they're targeting net debt to EBITDA under 2.5x with estimate of 20 billion EBITDA by FY28. But company has an historical guidance miss, and this is one of the bearish reason that we have.
Okay, Varsha, but stay on because we want to talk to you about another topic as well. But this is interesting, and because we have the guest who tracks chemicals very closely, I'm tempted to ask Aditya. Aditya, Aarti in particular, what are your thoughts?
So Aarti, as Varsha also pointed out, Aarti's long track record of over-promising and under-deliver is something that I have reservations about. It is a fantastic company. The promoters are also really very good. But two problems that I have got with the company is A, under-delivery, and B, the debt levels, not the net debt levels, but the debt levels of the company continue to remain extremely high. Aarti operates in the aromatic benzene space, and within that space, Deepak Nitrite and Vinati Organics are two other companies that are doing fairly well, fairly better than Aarti. For example, Vinati Organics is in the specialty chemical space within the benzene space or the ATBS, and that continues to do really well, where the companies promised about 25 to 30% growth over the next 2 to 3 years. Similarly, the aggressive expansion of Deepak Nitrite and the ability to execute large capex projects is far better than what Aarti is doing. So if I had a pecking order, I would put Deepak Nitrite and Vinati Organics 1 and 2. And then finally, I would put Aarti Industries. Not to say Aarti Industries will also not do well. It will also do well. But that's how the pecking order really is.
Okay. Now that's on this thing. Now Aarti and the amine companies are buzzing as well. At least a couple of them are. Varsha, what could be the reason?
Acetonitrile, the anti-dumping duty of acetonitrile is one of the reasons why Balaji amines and alkyl amines are buzzing in trade today. The acetonitrile will face anti-dumping duty if sourced from China, Taiwan and Russia. Now please know that acetonitrile is a compound which is used in your pharmaceuticals, in your agrochemicals, and the anti-dumping duty is levied for 5 years. Now for the companies that manufacture acetonitrile are your alkyl amines and Balaji amines. For alkyl amines, it is one of the key products which contributes almost 15% to FY25 revenue, while for Balaji amines, if you see, acetonitrile capacity is at 9,000 tons per annum, which company will double the capacity, which will lead to 18,000 tons per annum. And so this is basically one of the reasons acetonitrile being the key product for both the companies is buzzing in trade today.
Thanks a lot for that, Varsha. Nagaraj, before we let you go, we haven't quite spoken to you about the derivative side. I don't know if too many chemicals stay in the derivative side or no, but any derivative strategy that you want to share with us before you leave?
I mean, derivative strategy on the market?
Market, specific stock, what have you?
Yeah, Nifty, certainly the way the market has moved up, I think Nifty and Bank Nifty is looking positive. Though Bank Nifty was little lagging in today's session, I'm expecting this to move further. Even Nifty as well. One can look to buy even Nifty July future for the reasonable upside target for the at least 8 to 10 days for the near term.
Okay. Nagaraj, we'll let you go on that note. Thanks so much for taking the time out and being with us. Aditya, do stay on. We need to slip into a break on the note that banks are lagging the Nifty and the Sensex, but The indices per se are doing well with IT leading the way. Some more stocks and specific action on the other side of this very quick break. Stay tuned. Don't go anywhere.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio.
Welcome back and thanks for tuning in. The market is in fine fettle. Now, all through the last number of years that you would have heard management conversations, you would have heard them speak, especially in the NBFC space or the financial space, speak about the necessity of having a granular book, about having a well-diversified presence, both physically and online, and having a strong brand association. And when a single company has all the three incomes out of the IPO, you take notice. In this case, the IPO from a pedigreed brand name with a very large size. HDB Financial is what I'm talking about. Mr. G. Ramesh, Managing Director and Chief Executive Officer of the company, joins us right now in our studios. Mr. Ramesh, great having you. Thanks for joining in.
Thank you for inviting me. Thank you.
At the outset, all the best for the IPO.
Thank you.
Just talk to us about the timing of why is it that it has come about this now. Was it in some sense good fortune as well that the Reserve Bank of India did the turn that it did, and it's all aided the whole sentiment around the space?
Right. So we are a 17-year-old company. We've been through a journey, we've been profitable, we have had growth. In fact, we've been profitable from our second year of operations, right? So we have had a good balance of growth and profitability. Today we have 19 million customers. We have presence in 1170 towns with 1771 branches. So that's the scale of the organization, 1,07,000 crore balance sheet. We felt this is the right time, and anyway, the IPO is a milestone in our journey, and we felt this is the right time to raise capital. The last time we raised capital was in 2017, when our balance sheet was just about 1/3 its current size. So we managed growth of 3x without actually raising capital. So right time to raise capital plus upper layer. So all comes together, and this is the right time for the IPO.
Most certainly. Is the how do I say, is the landscape looking very solid for the immediacy of growth? I know you look at a very long term, right? And which is what you would, which are the kind of investors who would come in the anchor book,
right?
And which are the kind of investors you would want on your book as well, per se.
Absolutely.
But I'm still inclined to ask you, because one, there is a series of moves made by the government around raising discretionary consumption,
right?
And there is a series of moves made by the Reserve Bank of India,
right,
to try and help the NBFC sector per se.
Absolutely.
So is the timing very good for the short term as well?
So again, we've been through cycles, right? Through ups and downs, COVID years, managed, to continue to grow and continue to make money for the company and for our stakeholders. So for us, we really don't look at it as immediacy. What we're looking for is a business that's sustainable through cycles, and that's the reality in a growth market like India. We're not really looking at a market that's already well set into which we are trying to buy market share. Our focus has been, how do we create the market? How do we create customers? How do we create organized lending? And one of the things that is something that you'll find interesting is that while we are a subsidiary of HDFC Bank, we do not get any leads from the bank. And the 19 million customers I spoke about have been organically originated by this company since inception. So no inorganic growth, only organic growth. And for us, it's a long runway. We have a large product suite. We believe that when we look at our customers, which is what we call aspirational India, we say, what is it that this customer will need through his or her life cycle? And how do we address that requirement suitably? So for us, the customer is the hero, not the product. The product is really a journey, but how do we engage with the customer through their life cycle so that we can stay engaged with the customer?
Okay. I'm inclined to ask one more question before Mahima and Puneet also chip in. How do you see the next 3 to 5 years of this aspirational India growth working for you, considering the fact that for the longest time, we've been bucketed in a particular range of per capita for the average Indian.
Right.
And now we're seeing that rise and a larger portion of the upper end of the K really zoom up. How does that augur for a business like yours?
Right. So we say aspirational India, right? And I think one of the things that's really made the aspiration easy to access is technology, right? We have presence in 1170 towns, but the proposition that we have is, irrespective of whether you're coming to us in a metro, a non-metro, or a rural market, our time to process the application is the same. So that's a proposition that we come with because it's on a digital backbone. Now that helps customers. And the other thing that's happened is that even a few years ago, most consumer goods companies would look at urban markets and rural markets separately. For example, if you went to a rural market, you'd find that the same brands have products at a different price point, packaged differently, priced differently. I think that's slowly going away thanks to technology and social media. People are saying, hey, this is what I get in Mumbai, London, or Dubai. This is what I want. And I think that's really driving aspirations. Plus, technology allows us to deliver that to that aspiration, right, profitably. And that's what we really look at, and that's how we think about it.
Nice.
Right. So I was just going through the brokerage notes for the IPO, and there was one thing that stood out was the hybrid model that the company has, and that's seen as a positive for the company.
That's right.
How do you see this working well for you, and overall an outlook on how does this model work, and plus how is this a positive thing for you?
Okay. So as I said, we'd only do retail lending. Our top 20 customers is less than 0.34% of AUM. That's the level of granularity. We have no corporate loans, we have no real estate loans. But we work with a very heterogeneous group of customers. I said, think about an Indian sitting in Maharashtra, think of an Indian sitting in Assam, think of somebody sitting in Punjab. They speak different languages, have different sources of income, have different aspirations in terms of what their next requirement in life is. So for us, it's about how do we expand the funnel. And we expand the funnel by telling our customers, You choose the method by which you want to interact with us. We will provide you a best-in-class service. So whether it's a model where a customer comes to our branch, or whether he has a salesperson over at his workplace, or he comes to us digitally, the time taken by us to process his request is the same. Because the backbone is a tech backbone, and that's how we are able to expand the funnel through our digital model.
Mr. Ramesh, just one question essentially in terms of, you mentioned about the aspiration in India that you're saying, that the packaging now cannot be different because the customer wants that aspiration and has that aspiration already. Correct. Your presence in tier 3, tier 4 towns has been something that's been talked about as well during the IPO.
That's right.
What is the path forward over the medium term? Do you expect to increase penetration into these tier 3, tier 4s? Or are you also looking at newer places that you can expand in terms of product suite? What could be the strategy going forward?
So 70% of our branches are in city number 101 plus, which is population 101 plus. So that's 70% of our distribution. And the way we think about distribution is that we really lead the work with our manufacturers to help them increase their sales. So in our asset finance business and our consumer finance business, we work with more than 100 manufacturers, right? Between all the consumer products, television, two-wheelers, commercial vehicles, construction equipment, more than 100 manufacturers. What we do is an exercise where we sit with them at least once a year, understand what is their strategy for growth, how do they see growth coming in across India, and where can we partner with them to help them sell more. So in the last 2 years, for example, we opened more than 250 branches. And to us, that's an endless tail in terms of how much more we can add. There's no constraint really in terms of the opportunities. Really the constraint is our ability to invest and make a meaningful impact in the markets that we enter.
Mr. Ramesh, I would reckon that there would be a fair degree of liquidity out there in the offing for the near term. I know you're looking only at the near term, but I'm just trying to understand still. Would you, over the course of the next 2 to 3 years, pursue growth if it comes at a small cost of asset quality, or would the asset quality be the primary focus, even if it means that you have to let go of some growth, even as growth might be healthy per se for everybody?
Right. So if you look at our ALM statements over the years, you'll find that we are fairly conservative. We have a positive cumulative mismatch for 5 years, right? And so we're not the kind of business that borrows short, lends long, takes opportunistic calls based on predicting which way interest rates will move. We're saying we are a lender. We work on 101 principles, which is ability, intention, and end use. We don't do a trade-off. As a business, we make sure that we are balancing growth with profitability, because it's a cultural thing. You let off one for 3 years, getting it back is difficult. So, would I trade off asset quality for growth, or would I trade off, growth for profitability? The answer is that, it's a fine balance that we bring in, and that's what we want to do consistently for the next few years.
So you reckon that over the next 3 to 5 years, even if growth were to pick up, and if we see that pickup in growth numbers, let's assume the hypothesis is that we see a pickup in growth, it would still be accompanied by the asset quality that we've been used to from your organization.
That's right. Having said that, if there's a secular growth in India and the GDP picks up beyond where it is currently, you'll actually find that asset quality improves significantly, because customers have more money, and that's what's really reflecting in the higher GDP numbers. So a good high quality growth really results in customers having more liquidity, more money, and that enables them to expand their businesses and also improves asset quality.
You penciling that in when you're doing an internal 3-year growth target?
So when we do a 3-year growth target, we would look at which way India is headed, what are the macro and micro tailwinds, and if we believe that the next year is going to be a growth year, we would pencil it into our budget.
Do you believe the next year is going to be the growth year? Which will?
I'm optimistic about India, which is why I stayed back in India when half my classmates went overseas. I'm extremely optimistic about India, and so far I've been proved right.
Mr. Ramesh, just one on your product profile which you mentioned, because you specifically said consumer loans is one, but the MSME basket is also one. How has the product profile changed over the years, and what do you expect it to be in the medium term? Because we've seen a drastic change within MSMEs as well over the last 10 years. What have you seen for yourself, and what do you expect it to be in a couple of years?
Right. So the MSME, which is it's a large name for what we do. MSME itself is a very big field now. I think it's up to 500 crores of investments, if I remember. So our ticket sizes are pretty small, compared to what even might qualify as MSME. For example, when we do secured lending in MSME, our average ticket size is about 4 million rupees. If it's an unsecured loan, it's about 300,000 rupees. So we're really looking at a smaller segment. And what we really do there in that business, which is about 40% of our book, is what we call the classical neighborhood lending. We identify a territory that we think is good credit, set up a branch there, and we will only lend to customers whom we can meet. Right? So that business, the MSME business, is 40% of our balance sheet. Even today, we'll only put out credit once after a credit officer has met the customer and is convinced that the credit is good to go. Right? So that's the level of granularity that we bring in. That business is doing quite well. So we really don't fund large manufacturing setups, and I said 500 crores is large. So our ticket size are pretty small. So we're really looking at retail trade as one of the big segments. Small manufacturers are a big segment. But again, the market is very heterogeneous. Think about Tirupur, think about Surat, or think about Jorat. The local economy is very, very different. What we do is make sure that we are part of the economy that's really generating cash flows.
Interesting. Your gross advances mix, I was just seeing that in enterprise lending as compared to where it was in FY23, the share in terms of the overall mix has gone down, but consumer finance has gone up. Is this something that will continue, or are you expecting any change in the overall gross advance mix?
Right. So we started enterprise lending in 2008. When we started the company. We started asset finance in 2011 and we started consumer finance in 2016. So we had a product development process and thought process in terms of what we should be doing next. I said we want to make sure that any aspect of aspirational India, we should be having a suitable product so that we can fill in the gap. Given that consumer finance is a newer business, and if you take out 2016, 2 years of COVID, really it's a 5-year-old business, and we have a bunch of products. So that business being a newer business and a larger opportunity has grown. So it was about 13% 5 years ago. It's become 23% now. So that's a mix that will continue to change depending on the opportunity that we see.
Well, we wish you all the best for the issue. We look forward to talking to you on your listing day as well, because I'm sure it's going to be a rocking one.
Thank you, and thank you to you and all the viewers. Thank you so much.
No, not at all. Thank you for coming to the studio.
Thank you.
Aditya, any thoughts here?
So we must first objectively analyze the company rather than giving it a tag that it is a HDFC bank subsidiary, so it will do well. Looking at the book is tier 2 lenders. HDFC Bank on record has said that HDB Financial will lend to one tier below the lenders, below the borrowers that they lend to. First point. Second point is the book is concentrated on the vehicle finance side of it. The company will diversify its book over a period of time, but it will the fortunes of the company are related to what happens in the economy per se. If the economy will do well, the company will do well. If the economy does not do well, the company will face a lot of NPAs. Over the past 3 to 5 years, since I have been tracking HDB Financial, HDFC Bank has been concerned about their NPA, the rise in NPA for HDB Financial. So that is one of the concerns. The company borrows at about 7.9% in FY25, which is not cheap. It is really very expensive, and but natural that they will go and lend at about 14-15%. Then that's a risky borrower that you are lending to. Now, if we come on to the valuation side of it, at 3.5 to 3.7 times price to book, I don't think that that's a cheap valuation to buy. That is really very expensive. I believe we would see something that happened to Bajaj Housing Finance, where they also came up with a very expensive valuation for their company, and then the stock has seen a time correction. So I believe HDB, maybe due to a listing pop could see about 10 to 15% or 20% listing gain. However, the company is poised to undergo some time correction as the book continues to expand and the profitability comes back. Mind you, the company has grown at about 22% CAGR in terms of loan growth over the last 3 to 5 years, but the profitability has not come in at that pace. It has come at about 8 to 9% because the NPAs have risen. So net over a shorter period of time, I don't think investors will make a lot of money. Of course, over a longer period of time, since HDFC, it's from an HDFC group, I believe that they will do well over a period of 5 to 10 years. So short term, I don't recommend. Longer term, yes, if the valuation is correct, it's a good opportunity to enter this.
So with regards to where HDB Financial stands, but we're also joined by Amar Deo Singh, Senior Vice President Research at Angel One, joining us now. Amar, hi, very good afternoon to you. A quick take on KNR Construction. The stock is buzzing post its 4,800 crore order win that it has just announced, and we're seeing significant amount of moves on KNR Construction. Any view with regards to that? The stock is up almost 10% as we speak.
I would say if I look at this particular stock, the stock has been basically was consolidating for quite some time between the 200 and 220 zone, and today has been a very sharp move for the stock, and also volumes have been significantly higher. So yes, it definitely appears that the stock has formed a bottom, and on the upside, the stock is likely to rally towards the 250, 255 mark, which is going to be the first zone of resistance for the stock, where we could witness some profit booking.
Okay, so that's with regards to where KNR Construction stands. Amar, there is one more counter that's doing well in trade today, and that is India Mart Intermesh. And this is on the back of the Nuama note that has double upgraded the counter. But overall, volumes also, if we see, are 7 times its 30-day average today. Any view with respect to where charts are concerned for this counter, and more steam left there?
Yeah, I would say that if you look at the structure of India Mart, clearly from an intermediate term perspective, the structure has been very strong, and post the sharp correction which the stock had witnessed towards the 2000 odd levels. What we are seeing is that the stock was consolidating somewhere. It was unable to breach the 2400, 2500 zone, which it has taken out, and it's trading close to 2650. Volumes, as you rightly said, have been significantly higher. So yes, the way the stock has rallied, there seems to be more upside to it, and the stock has the potential to rally towards the 2950, 3000 levels.
And Amar, what are your top picks for today?
Yeah, I would say the first stock to look at is Birlasoft. This is one stock, if I look at Birlasoft, has been consolidating for, I would say, many weeks. It's been unable to breach the 420, 430 level. Currently, it's moved above that level towards 440. Volumes have also been significant of the past few trading sessions. If I look at the structure, that is positive, and on the longer term charts, it's moved from oversold territory. So the stock has a potential to rally towards 465, 470 levels. So one can keep a target of 467 in the short term and a stop loss of 423. And the second stock which I would like to talk about is Titan. This is one stock which was consolidating for quite some time, and today and last few days, we've seen some significant volumes in this particular stock. So Titan is positive. So we can look at buying Titan at the current levels with a stop loss of 3545 and a target of 3795 on the upside.
So Titan there, and Mahima did address the big brokerage note coming in from Macquarie. Really positive on that aspect as well. Amar, as well, any specific BTST or STBT calls for today?
Yeah, one can look at Jubilant Pharma in that regard. So what we are seeing here is that the stock was consolidating. The stock did witness some sort of mild correction towards the 1100 mark. Today has been a strong day for the stock, and volumes have also been significantly on 13th of June. And post that, the stock was in for consolidation. If you look at the structure, that's positive. So this is one stock one can look at from a BTST perspective. At the current levels, buying at the current levels for an upside target of 1265 and a stop loss of 1133.
Got that, Amar. Aditya, just on KNR Construction, we just highlighted that big order win coming in at this time now. But post Q4, we actually saw multiple brokerages, downgrading the stock, as well as on the results itself. While the company has a very strong order book, it's building on now. Any view that you have on KNR as well as the infrastructure space, because it seems like this new order win has really propelled the stock, and the valuations also look decent, at least for now. Any specific view on KNR as well as anything in the road infrastructure space?
So on the road infrastructure space, NCC continues to be my favorite. NCC has done tremendously well over the last 4 or 5 years. KNR has underdelivered, but now the valuations there are also extremely attractive. So this order win will only boost the company. And over the period of next 3 to 5 years, I believe KNR construction will also do well. So I have a positive view on the company since the valuations are accretive. The order book, the company has a very big order book. So from my perspective, I'm positive on the company, positive on the space as well, on companies like NCC, Ahluwalia Contracts, or KNR Constructions.
So that's with regards to where KNR stands. Another counter that was in focus today, and we did do a Know Your Company show on the counter, that was Sky Gold. And what we were concerned about the counter was that promoters were slightly and slowly selling their stake in the company. And we did speak to the management about that. We asked him for a clarification as to whether there will be further stake sale from the promoter side on that or not. And they also clarified, saying that the promoter selling was done for value unlocking purposes. Listen to what he had to say exactly.
So again, on the upload basis question, we are not going to upload anything in the future 2-3 years perspective, because already we have uploaded a good percentage. So we don't want to upload in coming 2-3 years or 4 years anything.
Amar, specifically, just because you were speaking about Sky Gold, anything on the charts that suggest any kind of buying momentum on Sky Gold?
Yeah, I would say that if you look at the stock has corrected from almost 400 levels. Currently, it's around 325. It does have some support somewhere around the 295-300 zone. So I would say that's a level where one can look at, provided the stock does find some support, because the sell-off has been quite sharp. So the pullback, if it comes, it's not very likely to last. So it could go in for some consolidation. So 290-300 is a good support for the stock. If that's not reached, then we could witness some upside towards 340-350 levels.
And Aditya, I just wanted to get your one view on something like a Tata Motors as well, because we did speak to the management as well today, and essentially the sense that I got was that the demerger would be very value accretive for its commercial vehicle business as well, because the financials are improved, 12% EBITDA margins for CV business, the high ROS. How do you look at Tata Motors as of now, and do you feel that post the demerger, the focus on CV business is much warranted?
Absolutely. The demerger, I think, will make a CV business that is comparable to Ashok Leyland. And we've seen Ashok Leyland's valuation is far more superior than what Tata Motors CV business really is. The CV business has really turned around, and because it is turning around and making about 10 to 12% margins, that stock should be something to watch out for. And anyway, within Tata Motors, they have guided for a slowdown within the US. So I don't think that the stock, US and UK per se, so I don't think that the stock price is going to do anything in the near future. Within the four-wheeler space, I think Mahindra & Mahindra is a better pick. Mahindra & Mahindra is doing extremely well within the Indian market and should continue to do well over a period of next 3 to 5 years. So that is one of my top picks, not Tata Motors.
Amar, anything on VIP Industries? It's seeing profit booking today, but what are the charts indicating, and what's the kind of support and resistance that you're seeing?
If we look at VIP Industries, see what's happening here is that the stock is witnessing some sort of profit booking post the sharp rally from almost 330 levels to 420 odd levels. So we are seeing some sort of profit booking, and higher levels. Now the stock will definitely find a lot of resistance, because if you look at this quarter, the stock is up by almost 15%. In the month itself, it's up by almost 16-17%. So the stock has witnessed a very sharp rally. So I would say that anyone who's long should not can look at booking some profits, because if it's able to reach the 440 levels, then you can expect the stock to rally towards the 470 odd level, 475 odd level. That's going to be the upside gap where the stock would be with selling resistance. Fresh entry at the current levels wouldn't be recommended.
Okay, so that's the view with regards to where VIP Industries stands. Anything on Sumitomo Chem as well, because that stock is also seeing a downtick of about 2% in trade today. What are the charts indicating there, Amar?
I would say this is one stock which is clearly in a consolidation zone. Be it a bull market or a bear market, the stock has been consolidating for quite some time. And on the downside, yes, the stock is strongly supported around the 490 odd levels, but again on the upside, 540, 550 is a zone of resistance. So it's more of a range play for the stock. Those who want to trade in a range, this could be a good stock to look at from that perspective.
Okay, and EID Parry, what's happening there? The stock is up 9%.
Yeah, so if I look at this stock is definitely in a different trajectory altogether. And if I look at the structure of the stock, it's very strong on the long term, on the intermediate term trend. And earlier the stock on, I would say 28th of May had made a high of 1042. So it has breached that level and it's trading at its all-time high. So that clearly shows, and that also on significant volumes. So if it's able to sustain over the 1040, 150, then definitely the stock is headed higher because the structure of the stock is very strong, but it needs to sustain above the 1040. That's going to be very important. In that case, the stock would rally towards 1150, 1180 levels.
Amar as well as Aditya, thanks so much for joining in, giving us a whole host of views on a list of stocks. We look forward to our next conversation, but thanks so much for joining in today. As we close to the markets, it's been a very, very interesting session to say the least. We've seen multiple news flows on broader markets as well as stocks reacting on news flows. The Sensex up almost 682 points, the Nifty as well up 200 points, and we've been highlighting that on the Nifty 50 that we need a strong resistance to be built at around 24,200. We've seen that push there, and it'll be very interesting if we can maintain that. Let's look at the heat map first of the Nifty. We saw individual moves, and Titan continued to remain there. It's up 3.6%. Aditya mentioned about his positive view on something like M&M up almost 2.2%, while Grasim as well as Infosys also saw some buying in today's trading session as well. Some more moves on negatives. BEL has been continuing to do very well. Some correction there. The top Nifty loses by almost 3%. We've seen some pressure on Kotak Mahindra Bank today as well, but largely it has been a green day today, and it's a very positive day for the market as well. Let's also look at the advanced decline very quickly, because we've seen that momentum at least be very stark today and continued right till the very end. 1,769 stocks that closed in the green was about 476 in the red as well. But Mahima, how are the broader markets doing today?
Right, so broader markets have clearly outperformed the benchmarks today. The mid cap 150 is up 0.5%, but the small cap 250 is the clear outlier today, closing 0.6% higher, almost at its day's high as we speak. So small cap 250. So I think the more action is on the broader end of the spectrum. In fact, let's pull up the BSE 500 and see which all counters have kind of contributed to that gain. There is Samman Capital, which is closing 15% higher. There's Network 18 up 13.7%. There's Balaji Amines up 12.4%. EID Parry, Kena Construction, Equinox seeing gains of about 7% odd. Something that's seeing profit booking today, a lot of these defense counters, Data Patterns as well as Mazagon, BEL are seeing profit booking. Something like a VIP is down by about 3.4% profit booking there as well. Bima down by about 2.2%. Dixon down by about 2.5%. And Angel One, which is down by about 3%. Before I move on to what to watch out for tomorrow, let's take a quick look on sectors as well. Let's pull up the sectoral heat map and see what sectors stole the show today. Nifty Media, of course, closing 1.75% higher, followed by Nifty IT. Like Neeraj mentioned in the start of the show, saying that it's like a very bumpy ride for Nifty IT. It's like a yo-yo ride for sure for Nifty IT, closing 1.5% higher. Nifty Consumption did well today. Auto did well as well. In fact, Nifty Infra as well as the healthcare segment also did well. But overall, private banks under pressure, closed around 0.1% lower. Let's pull up what to watch out for tomorrow. Certain things to keep your eye out today post market hours. The first one, of course, Fed Chair Powell testimony will take place, so something to keep an eye out there. Companies that will trade ex-dividend, this is entry dividend, so prime sec there. Infibeam will see a rights issue of around 67 to 267 ratio, so keep an eye out there. And Anchor Lock-in Exit, 3 counters to keep your eye out for. Ventive Hospitality, that's 5%. Carraro at 49%, and Sanathan Textiles 2%. 8%. And this one is a big one because 49%
Because it's a very
there.
interesting one because the IPO hasn't done well for investors largely in the cap market space and the auto component space. So definitely that, and endurance also very interesting after the EBS ruling, again up 7% today as well. But with that, it's a wrap on this edition of India Market Close. From myself, Mahima, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit for more.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. Viewers, today if we talk about the market, so it was a positive global cues that helped the Lal Street end in the green. Nifty manages to hold above 25,200 levels. Sensex shuts shop over 600 points up. All sectors barring defense end in the green today. Media, IT and consumption lead the gains. Autos also in the fast lane. After multiple delays, it's a truly proud moment for India. Indian astronaut group captain Shubhanshu Shukla Axiom's 4 mission was successfully launched into the space. Now, this historic liftoff from NASA's Kennedy Space Center makes him only the second Indian to journey to orbit 41 years, that is 4 decades after Rakesh Sharma. Shukla aboard the Axiom 4 Dragonflight by SpaceX delivered a powerful first message stating that this isn't just his journey, but the start of India's human space program. Prime Minister Narendra Modi also lauded Indian astronaut Shubhanshu Shukla's historic space odyssey to International Space Station. Now, in a post on X, PM Modi highlighted that Shukla is carrying the hopes and aspirations of 1.4 billion Indians, adding that India welcomes the successful launch of this international space mission. President Murmu also congratulated Indian astronaut group captain Shubhanshu Shukla, calling his journey into the stars a new milestone for the nation. Now, she also stated that the entire country is excited and proud of his achievement. President Murmu also highlighted the international collaboration on the Axiom 4 mission. She also noted that Shukla and his fellow astronauts from the US, Poland and Hungary exemplify the spirit of Vasudhaiv Kutumbakam, proving that the world is truly one family. Oil prices found some respite after plunging in the last two sessions amid uncertainty on the Iran-Israel conflict. Prices had rallied to 5-month highs after the US attacked Iran's nuclear facilities over this weekend and have cooled off since then. So Brent hovers close to around $67 per barrel, while the WTI edged higher to hold $65 per barrel levels. Meanwhile, a pullback in US dollar and treasury yields bolstered gold's appeal. Investors are also keeping a keen eye on further weakness in the dollar. Now, the focus shifts to fiscal deficit and US tariff policy as Iran-Israel tensions ease. Aditya Birla Group's Grasim Industries commences commercial production of resin manufacturing block. The manufacturing began at Birla Opus Paints plant in Maharashtra. Resin manufacturing blocks are the crucial components viewers in paint formulations. So they act as binders, providing adhesion, durability, and film formation as well. Nuvama upgrades India Mart to a buy and lifts the target to 3,800 rupees. Now, the new growth cycle begins backed by rising unique business inquiries and net subscriber additions. Fresh initiatives also fuel momentum, prompting Nuvama to boost revenue estimates. Now, with confidence restored, the valuation multiple returns to pre-downgrade levels as well. Domestic air traffic holds steady despite a turbulent quarter marred by conflict and crisis. Quarter 1 of FY26 traffic trends surprise on the upside with no sharp decline, just a resilient curve. Events like the Air India crash and global tensions did not dent the momentum. Domestic players are also expecting 6% growth in international air traffic in the first quarter of FY26. Now, this also signals investor confidence for India's skies. Its turbulence weathered. Now, flight path remains firm. JP Morgan initiates coverage on Indian hotels with an overweight call and a target price of 890 rupees. Now, the firm sees Indian hotels leading the pack on performance, premium offerings, and a strong development pipeline. While the market remains cautious, JP Morgan anticipates earnings beat by Indian hotels in H1 of FY26 to shift the sentiment. Phillip Capital also sticks with a sell call on Dixon Tech, setting a target price of 9,085 rupees. Rising domestic competition bites as key client Motorola shifts up to 35% of volumes to Carbon, now boosted by mobile PLI benefits. Now, the long-term outlook for this outsourcing pivot remains unclear, with pressure building, a possible multiple derating looms. Now, FY26 earnings estimates are also cut to reflect the squeeze. Aurobindo Pharma's wholly owned subsidiary gets marketing authorization from the UK's Medicine and Healthcare Products Regulatory Agency for Dirupeg, I beg your pardon, a pegylated filgrastim biosimilar. So this actually marks the Curatech's third biosimilar approval by MHRA. So Dirupeg is actually used to reduce infection risk in chemotherapy patients, enhancing access to affordable biologic therapies in the UK and Europe. The drug earlier secured approval from European Commission in April 2025, strengthening Aurobindo's global biopharma footprint. Philogen, partnered with Sun Pharma, has withdrawn its marketing authorization application for Nidlegy from the European Medicines Agency. So Nidlegy is used as a skin cancer treatment. The withdrawal comes due to delays in providing additional clinical data despite over 450 patients having been treated with Nidlegy. Now the company also plans to resubmit the application after addressing the data requirements, aiming to actually bring this innovative therapy to patients in Europe, Australia and New Zealand. JB Chemicals has received final approval from the US FDA for its generic amitriptyline hydrochloride tablets. These are used to relieve symptoms of depression. The approval covers multiple dosages ranging from 10 milligram to 150 milligram, allowing the company to expand its footprint in the US pharmaceutical markets. This milestone actually strengthens JB Chemicals' presence in the regulated markets and supports its long-term growth strategy internationally. PTC Industries subsidiary Aeroloy Technologies has signed a landmark memorandum of understanding with Safran Aircraft Engines to boost India's defense aerospace ecosystem. This partnership actually focuses on manufacturing components and materials for military aircraft engines, aligning with the government's Make in India initiative. Aeroloy, specializing in aerospace castings, will collaborate with Safran, a global leader in civil and military engine design and production, to enhance the indigenous capabilities and innovation in the sector. Now, this move actually strengthens India's position in the global aerospace supply chain and supports the country's defense needs. Hindalco Industries, through its wholly owned subsidiary Aditya Holdings, is set to acquire 100% stake in the US-based Aluchim companies for $125 million. Aluchim specializes in high-grade specialty alumina products used in advanced industries such as ceramics, electronics, and semiconductors. So this acquisition expands Hindalco's global footprint in the specialty alumina. It also adds an annual capacity of 60,000 tons. Timex Group's promoter are set to sell up to 15% of its stake via an offer for sale, that is an OFS, on June 25th, that is today, and 26th. So the base offer includes 7.5% of equity shares with an option to sell an additional 7.5%, totaling to 15%. Now the floor price is fixed at 175 rupee per share, reflecting a 35% discount to recent market prices. As of March 31st, the promoter held nearly 75% stake in the company. Now, this move will help the company enhance liquidity as well as broaden the shareholder base. Himadri Specialty Chemical has approved the acquisition of a 16.2% stake in US-based International Battery Company for 37 crore rupees. Alongside this investment, Himadri has signed a technology licensing agreement with Sycona Battery, aiming to strengthen its position in advanced battery materials. This strategic move supports Himadri's expansion into the growing electric vehicle and energy storage markets, enhancing its global footprint in sustainable technologies. UBS has maintained a buy rating on Multi-Commodity Exchange of India, or the MCX, raising its target price to 10,000 rupees. The brokerage highlights strong market dynamics and a steady pace of new product launches as key growth drivers. MCX is also expected to see volume growth. Overall, MCX is well positioned for continued momentum in the commodity space. The Employees Provident Fund Organization, that is the EPFO, has raised the auto settlement limit for advance claims from 1 lakh rupees to 5 lakh rupees. Now, this is a 5-fold increase that will help faster dispersal of emergency funds to members. This facility actually covers claims related to illness, education, marriage, and housing. Now, the process ensures claims are settled within 3 days without human intervention. The Metropolitan Stock Exchange of India is planning a new strategy following SEBI's latest rules on expiry days. After getting a fresh nod from the SEBI, the exchange is set to enter the cash market segment and is likely to fix Tuesday as its expiry day, putting it in direct overlap with the NSE. This shift is expected to roll out in the next 2 to 3 months. IndusInd Bank's microfinance arm, Bharat Financial Inclusion, sees a fresh wave of senior exits. Now, COO Vikas Muttu and joint CEO Anujit Varadkar resign amid the scrutiny. The exits follow an internal audit revealing incorrect interest income worth 674 crore rupees and 173 crore rupees in the fee misreporting. So poor provisioning adds a 2,000 crore hit to the loan book. Gopi Krishna, a 20-year veteran, is promoted to head of the member of services. EY supports the ongoing audit as the bank faces mounting pressure. The National Stock Exchange has filed for a settlement in the long-running co-location and dark fiber cases as part of the proposal. NSE has offered over 1,300 crore rupees. The matter is now awaiting SEBI's approval. And if cleared, the move could finally set the stage for NSE's much-delayed IPO. Starting July 1, the Reserve Bank of India will extend trading hours for the call money market repo and tri-party repo. The call money market will now stay open from 9 a.m. to 7 p.m., 2 hours longer than the current 5 p.m. close. The move is based on recommendations from working group and aims to give market players more flexibility and help improve liquidity management as well. The hottest IPO in town, HDFC Bank's NBFC arm, HDB Financial. IPO opens today. It includes a 2,500 crore fresh issue and a 10,000 crore rupees offer for sale. Priced at 700 to 740 per share, the IPO closes on June 27 with listing on BSE and NSE set for July 2nd. Brokerages unanimously recommend subscribing to the IPO. Some of these include Deven Choksi Research Centrum, SBI Securities. Antique highlights its pan-India presence, granular loan book and robust underwriting for sustained growth with reasonable valuations as well. And Sher Khan thinks that the issue is attractively priced. Systematics emphasizes growth from a growing customer base, underbanked focus and strong management. RS Infra Solution list at 205 on NSE and 209 on BSE, below its IPO price of 222. The stock debuts nearly 8% lower, missing grey market expectations. Despite raising 500 crores via fresh issue, the IPO sees only moderate subscription at 2.65 times. Now, retail investors also show strong interest with 5.59 times subscription. Analysts flag aggressive pricing and past losses as concerns. The company also focuses on tech-driven B2B supply for construction materials. Samhab Steel Tubes opened its 550 crore IPO with a 31% subscription on day one. QIBs lead with 38% uptake, followed by retail at 32% and NIIs at 19%. The IPO includes a 440 crore fresh issue and 100 crore OFS. GMP hovers at 9 to 10 signaling and 11% premium. Funds will be used to repay 390 crore in debt and for general corporate needs. Listing is set for July 2nd on NSE and BSE. The central government cancels the appointment of Pankaj Dwivedi as Executive Director of Union Bank of India. Dwivedi, who took charge in March 2024, is reassigned as General Manager at Punjab and Sindh Bank. The move follows the Delhi High Court PIL alleging sexual harassment and lack of vigilance clearance. Now, this, the 2018 allegations that had included corruption charges, this marks a rare demotion of an ED-level official. Snowman Logistics is in focus after it adds 2 new temperature-controlled warehouses in Kolkata and Krishnapatnam, boosting capacity by over 9,500 pallets. With 43 warehouses across 20 cities and a robust refrigerated fleet, the company is sharpening its edge in the seafood, dairy, QSR and pharma logistics. Management's capex of 30 crore rupees for FY26 to 27 reflects strong confidence in India's cold chain growth. Now, though FY25 warehousing revenue was flat, the expanded footprint actually could tilt the momentum there. JP Morgan strikes a cautiously optimistic tone on consumer staples. While FY26 revenue growth is expected to come from modest price hikes and better volumes, Q1 could feel the pinch from seasonality. Competition is heating up and raw material volatility keeps margins on the edge. The firm points to a strategic path ahead. Portfolio gains via selective M&A and distribution revamps are focused on capability building, reducing friction, and fortifying supply chains. Tata Technologies has joined hands with Amazon Web Services to launch a platform for engineering students in India to showcase their ideas and build smart mobility solutions. This year's theme focuses on using cutting-edge tech like AI, IoT, cloud computing, and AR/VR to solve real-world mobility challenges. After launching its own online store during the pandemic, FMCG major ITC has now shut down the platform, saying that it has served its purpose. The company is shifting focus to a broader digital strategy, tapping into an e-commerce, quick commerce, and modern trade platforms, while also building a stronger presence in the general trade to boost its overall distribution reach. Tesla's new car sales in Europe plunge 27.9% in May, even as the region's EV market grows 27.2%. The company's revised Model Y fails to lift demand. Tesla's market share drops to 1.2% from 1.8% a year ago. This marks the fifth consecutive monthly decline. Buyers shift to cheaper Chinese EVs and react to Elon Musk's political ties. Overall, car sales in Europe rise 1.9%, led by plug-in hybrids and alternative fuel vehicles. BYD scales back production and delays expansion at several China factories. Now the EV giant cancels night shifts and cuts output by a third at 4 sites. Now rising inventory and missed sales targets prompt this move despite deep price cuts. Plans for new production lines are also suspended. BYD aims to sell 5.5 million cars in 2025, up from 4.27 million last year. The slowdown signals a cooling in its rapid growth streak. Buying a home in Mumbai is still out of reach for most people, despite city hitting best affordability levels in the last 15 years, says a report by Knight Frank. Still spend 48% of their income on the EMIs, far higher than cities like Ahmedabad or Bengaluru. Sluggish income growth and rising property prices continue to weigh on the home buyers even as mortgage costs ease. Big action by the Enforcement Directorate in a 988 crore rupees bank fraud case linked to Shilpi Cables Technologies. Raids were carried out at 10 locations in Delhi, NCR and Ludhiana. The case is based on a CBI FIR which flags fraud with IDBI Bank and others. Company promoter Manish Goyal is accused of illegally sending bank loans abroad using fake transactions. The ED suspects money laundering, misuse of letters of credit, and fake investments through shell companies. Prime Minister Narendra Modi marked the 50th anniversary of the emergency by calling it one of the darkest chapters in India's history. The emergency, he said, saw the constitution being sidelined, democracy put under arrest, and thousands of people jailed. PM Modi also pointed to the 42nd Amendment as a clear example of how the spirit of the constitution was undermined during that period. Mumbai continues to be drenched, offering a welcome boost to water reserves as the city's 7 key reservoirs now hold 35.02% of their total capacity, according to the BMC. Now, these reservoirs are essential to Mumbai's daily water supply. The IMD has issued a yellow alert for continued rain and cloudy conditions today. With high tide expected around noon, authorities are urging extra caution in flood-prone low-lying areas. Former New York Governor Andrew Cuomo has conceded the Democratic mayoral primary to Zohran Mamdani. The 33-year-old Indian-American and state assembly member is leading the race, though the final outcome will be decided through ranked choice voting since no candidate won a clear majority. If he wins, Mamdani will make history as New York's first Muslim and Indian-American mayor. US President Donald Trump and NATO leaders are meeting today at a summit that could either unite or divide the alliance. The aim of the summit is new defense spending target. Just a week ago, optimism was high for European members and Canada to boost their defense spending. However, Spain has now rejected Trump's proposed 5% GDP defense target, calling it unreasonable. With all 32 members needing to agree, the path forward for NATO remains uncertain. The Federal Reserve is in no rush to cut interest rates. That's the message from Fed Chair Jerome Powell, pushing back against President Trump's demand for immediate rate cuts. Powell made the remarks during a hearing before the House Financial Services Committee. The session remained largely respectful, with lawmakers from both parties appreciating his focus on balancing inflation control and job growth. India's top javelin thrower Neeraj Chopra kept up his winning run this season by winning the men's javelin event at the 64th Ostrava Golden Spike meet in the Czech Republic. Now, this was Chopra's first time competing at this well-known World Athletics Continental Tour gold level event, where he won with the best throw of 85.29 meters. England has won the first test match against India by 5 wickets, taking a 1-0 lead in the 5-match series. Chasing a massive target of 371 runs, England pulled off one of the highest successful run chases in the test history. The hero of the day was Ben Duckett, who scored a magnificent 149 runs, playing a crucial role in their victory. He was also well supported by Zach Crawley, who helped set up a strong start with a huge 188-run opening partnership. Mika Singh called out Diljit Dosanjh, labeling him a fake singer for starring alongside Pakistani actress Hania Amir in Sardarji 3. In an Instagram post, Mika slammed Diljit's decision as irresponsible amid India-Pakistan tensions following the Pahalgam terror attack. Diljit said that the movie was shot before the tensions escalated. Well, with that, viewers, it's a wrap on Market Express, but please stay tuned to NDTV Profit, as Sanjana Chauhan will be bringing you, Profit 360 just after this short break.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the Red Herring Prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Samhab Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday.
Markets end higher as Nifty closes above 25,200 on strong global cues, while Sensex gains over 700 points. All sectoral indices barring Nifty Defence end in the green. Nifty Small Cap 250 outperforms all other indices, gaining more than 1.5%. Orbiting the Earth, Jai Hind, Jai Bharat. This was Shubhanshu Shukla's first words from orbit, spoken shortly after the Axiom 4 mission successfully entered the Earth's orbit. IndusInd Bank's microfinance arm Bharat Financial Inclusion sees more exits as officials appointed by the bank step aside. Sources say the Metropolitan Stock Exchange of India charts a new strategy after the SEBI's new expiry day norms by venturing into the cash market segment. Sources say the NSE has filed for a settlement in the pending co-location and dark fiber cases. If approved, the settlement could clear the path for NSE's long-delayed IPO. The IPO of HDB Financial opens with overall subscription at 31% on day one, with NII portion dominating the subscription at 58%. Valued at 12,500 crore rupees, the proposed IPO is set to be one of the largest by a non-banking financial company in India. Buying a home in Mumbai is still out of reach for most people, despite the city hitting best affordability levels in the last 15 years, says a report by Knight Frank. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. So let's dive right into it and have a look at how the markets fared today. Equity indices ended on a strong note, with Nifty around 25,250 and the Sensex up by 700.40 points. All sectoral indices ended in the green, with auto, consumer, durables, IT, telecom, healthcare, media, all up by at least 1 to 2%. Now, the BSE Mid-Cap Index rose 0.6% and Small Cap Index added 1.6%. My colleague Puneet now joining in with more details.
The Nifty and the Sensex had a really good session today, where we've seen a 200-point gain coming in on the Nifty 50 today. We've seen some big gainers like Titan on the Nifty today, while some losers such as BL was one of the biggest one for trading session today. We've seen Titan as well as Mahindra, as mentioned, has been doing very well, and they were the top Nifty gainers for today, while all sectoral indices gained in trade. The Nifty Media as well as the Nifty IT were the biggest gainers, up almost 1.5% for the day. We saw stocks like Network 18 and TV 18 Broadcast were the top gainers in the Nifty Media, which dragged the index in the green as well. While we've seen the Nifty Small Cap 250 indices also still a very stellar recovery in an end actually at the high point of the day. We've seen something like the Nifty Mid Cap also and the Small Cap 250 gains for the fourth consecutive trading session, and the bullish momentum in the broader markets continues year on as well. The Nifty IT, Auto, FMCG as well as Realty were some of the other indices that gained for the second day in a row, and we've seen the financial services and the Nifty PSU Bank also gain for the second day in a row as well. So it's going to be a very interesting point tomorrow to see if we can continue the rally further on the Nifty 50 and maintain that at 25,200 and become a key support level. But another interesting session today in trading today.
Right, thanks for that, Puneet. Meanwhile, Ashish Gupta, Chief Investment Officer at Axis AMC, notes a pipeline of new companies slated for IPOs through the rest of the year. He highlights that this fresh supply of equity is beneficial as it absorbs market liquidity, which can help prevent valuations from becoming excessively rich. He observes that the prior frenzy in the IPO market has now subsided. Let's listen in.
The good thing is that we are seeing, particularly with the IPOs now, many new companies, and actually the IPO slated for the rest of the year has several technology companies coming to the market. So different kind of companies are coming to the market. The other good thing is that with this supply coming in, it kind of helps absorb liquidity and does not kind of make the market valuations even richer, right? So I think supply does play an important role. If you talk about our strategy, we have been selective. There are a couple of private equity stake sales that we have participated in. And I think 2 IPOs till date we have participated this year. So we are quite selective. Also, I think overall in the IPO market, some of the frenzy has subsided.
And a new era of space exploration and a proud moment for India has officially begun after multiple delays. SpaceX's Falcon 9 rocket finally launched successfully, carrying the Crew Dragon capsule and 4 astronauts as part of the Axiom Mission 4. Right, all right. And now let's quickly cut across to the 44th AGM of Infosys. Infosys has announced at their 44th AGM the release of the annual report for the fiscal year 24-25. Let's quickly take a look.
Hello, good evening, everyone. I'm Michael Gibbs, Independent Director, joining in from Houston, Texas. I'm the chairman of the Stakeholders Relationship Committee and also the Cyber Risk Subcommittee.
Bobby?
Hello, good evening. I'm Bobby Parikh. I'm Independent Director and Chairperson of the Audit Committee. I'm joining the meeting from Mumbai.
Chitra?
This is Chitra Nayak. Hello. I'm Independent Director and Chairperson of the ESG Committee, joining from California, USA.
Govind?
Hi, this is Govind Iyer. I'm an Independent Director and Chairperson of the CSR Committee, joining in from Mumbai.
Aline?
Hi, good evening, everyone. I'm Eleanor Yolpotier, Independent Director, joining in from France.
Nitin?
Paranjpe. I'm an independent director of the company. I'm joining in from Netherlands.
Jayesh?
Good evening, everyone. I'm Jayesh Sangrajka, Chief Financial Officer, joining in from Bangalore.
Manikanta?
Hi, good evening, everyone. This is Manikanta, Company Secretary, joining from Infosys Campus, Bangalore.
Apart from them, we also have key executives and senior management joining us from their respective locations. Statutory auditors and secretarial auditors have also joined this meeting. The company has taken all feasible efforts to enable members to participate through video conference and vote at the AGM. I thank all the members, colleagues on the board, auditors, and the management team for joining this meeting over video conference. I now request Manikanta, Company Secretary, to provide general instructions to the members regarding participation in this meeting.
Hi, good evening, everyone. Members may note that this annual general meeting is being held through video conferencing in accordance with the Companies Act 2013 and circulars issued by the Ministry of Corporate Affairs and SEBI. The notice of the 44th AGM and the annual report for the financial year ended March 31st, 2025 have been sent electronically to members whose email addresses are registered with the company or with the depositories. In addition, physical copies of the annual report have been sent to the members who have requested for the same. Further, the company has sent a letter to shareholders whose email addresses are not registered with the company or depository participants, providing the web link from where the annual report can be accessed on the company's website. The facility for joining this meeting through video conference or other audiovisual means is made available for the members on a first-come, first-served basis. The company has also provided a webcast facility to view the live proceedings of this meeting on the company's website. The register of directors and key managerial personnel, the register of contracts or arrangements, certificates as required under the SEBI Share-Based Employee Benefits and Sweat Equity Regulations 2021, and other documents mentioned in the AGM notice have been made available electronically for inspection during this AGM. Members seeking to inspect any of these documents can send their requests to investors@infosys.com. As the AGM is being held through video conferencing, the facility for appointment of proxies was not applicable, and hence the proxy register for inspection is not available. The company has received requests from a few members to register them as speakers at this meeting. Accordingly, the floor will be open for these members to ask questions or express their views. We will facilitate this session once the chairman opens the floor for questions and answers. Members can also post their views or questions on the Ask a Question tab on the video conference screens before 4:30 p.m. IST.
Right, we'll continue bringing you the latest developments from that AGM, but let's move on to our other big focus this evening. In the latest update from the IndusInd Bank saga, sources are now telling NDTV Profit that the microfinance arm, Bharat Financial Inclusions, is seeing more exits as officials appointed by the bank are stepping aside. Vishwanath Nair, who has been tracking the story closely, joining in now with more information. Vishwanath, what exactly are you hearing?
What has happened is Vikas Mattu, who's the Chief Operating Officer of this microfinance unit, as well as the Head of Member Services, has resigned. Alongside him, his joint COO of the company, Anujit Varadkar, has also resigned from his position at Bharat Financial Inclusion. These were two officials who were very recently appointed by IndusInd Bank. As far as Mattu is concerned, he joined only in March of 2023, and Anujit Varadkar joined in May of 2024. Both these officials have now resigned, of course, and this is coming in the context of the enhanced scrutiny that is happening into the microfinance division. Remember that the bank had pointed out that in the microfinance business, they have seen incorrect interest income of about 674 odd crore and incorrect fee income of about 173 crore. Alongside that, due to poor provisioning policies at this microfinance unit, the bank had to make a 2,000 crore provisions against certain NPAs which were not classified as bad loans on the books. So there is an investigation that was initiated by the Internal Audit Department, which was then, of course, supplemented with findings by EY. So therefore, these exits hold more importance. Already a month ago, you saw the executive vice chairman of the company, J. Sridhar, and him also resigning. He was also appointed by IndusInd Bank. So what is exactly Bharat Financial doing to counter these things? Well, they've actually promoted one of their long-term loyalists, Gopi Krishna A., who has been with the company for nearly 20 years. He has been promoted now to Head of Member Services, and he becomes one of the highest ranking officials in the company. So it's clear that the people who are appointed by the bank are on their way out, while people who were always with Bharat Financial before IndusInd Bank acquired the company in 2019, they are now going to take charge, because obviously the situation at the microfinance unit is looking a little tough.
Thanks so much for that, Vishwanath. Let's quickly cut back to Infosys that's having its 44th AGM because we believe that Nandan Nilekani is now addressing. Let's go ahead.
The board has recommended a final dividend of rupees 22 along with the interim dividend of rupees 21 per share, which is already paid. The total dividend for fiscal 2025 is rupees 43 per share. The company expects to continue returning approximately 85% of free cash flow cumulatively over the 5-year period through a combination of semi-annual dividend and or share buybacks and or special dividend, subject to applicable laws and required approvals. Under this policy, the company expects to progressively increase its annual dividend per share, excluding special dividend if any. Salil Parekh, Chief Executive Officer and Managing Director, whose term extends until March 31st, 2027, and who is liable to retire at this annual general meeting, is eligible and has offered himself for reappointment. Based on the performance evaluation and the recommendation of the Nomination and Remuneration Committee, the board recommends the reappointment until March 31st, 2027. During the year, there was no retirement or resignation of directors or key management personnel. As we look around us, there's a perfect storm of multiple colliding trends that is raging. Clearly, the world is shifting from a single global market to fragmented blocks, forcing companies to make strategic choices and navigate between regions. Just a few years ago with COVID, there emerged the need to de-risk supply chains and move beyond just-in-time to just-in-case planning. Tariffs today are signaling to us that businesses must also de-risk their sourcing. With bilateral and regional trade rules emerging as dominant forces, there is a clear need to accelerate supply chain diversification. Add to this the new uncertainty that AI adoption is creating. Legacy system modernization and data architecture overhauls to ensure that all the firm's data is consumable AI are becoming increasingly unavoidable. Companies need both AI foundries for innovation and AI factories for scaling. Regulatory variances across regions, however, present implementation complexities and challenges. Energy transition brings in another layer of uncertainty, with the future now depending on innovation in solar, wind, batteries, hydrogen, and nuclear technologies. Electricity will play a much larger role, requiring massive infrastructure investments in transmission lines, charging stations, and transformers. This transformation too will have to deal with regulatory hurdles. The price of commodities will depend on how fast these changes take place. Every business sector is facing fundamental challenges. Automakers need to transition to electric vehicles. Pharma companies need to get better at using AI for drug discovery. Logistics firms need to manage supply chain reordering. Financial services are exploring tokenization. Energy companies need to reassess the long-term demand for their products. Utilities must prepare for a very distributed future. Manufacturers need to successfully integrate robots and 3D printing into the mainstream processes. And service companies are competing with more efficient AI agents. Every type of business in every part of the world is having to first adapt to rapidly changing business and technological disruption before advancing into an uncertain and unfamiliar future. In these times of mounting business volatility, Infosys offers the stability that organizations need to survive and thrive. Our comprehensive portfolio spans multiple regions, industries, and technological domains. We deliver solutions that address both established business needs and emerging market demands for which solutions need to be crafted. Whether clients are pursuing aggressive expansion or navigating operational constraints, we have invested in solutions that are relevant to their strategic priorities. In many ways, it's what sets Infosys apart. Our unwavering commitment to stay a step ahead of change and help our clients navigate the same. At Infosys, we are experts in the convergence of AI, cloud, and data transformation. Through Infosys Topaz, we combine AI's transformative potential with a robust foundation of cloud and data infrastructure, positioning our clients at the forefront of tomorrow's opportunities. Our extensive AI agent library accelerates productivity across critical functions, from code generation and IT operations to bill to cash and quote to order workflows. We have crafted specialized language models tailored to specific industries, IT operations, and cybersecurity needs. This deep expertise, coupled with strategic industry alliances, enable us to deliver model development as a complete service offering. Cobalt Cloud capabilities anchor our AI strategy, connecting seamlessly with top-tier public and private cloud providers, SaaS vendors, and PaaS platforms. Our data mastery, spanning architecture design and comprehensive structured and unstructured data management, empowers clients to confidently deploy enterprise-grade AI solutions. Across every dimension of enterprise technology, we create tangible transformational value while maintaining a laser focus on cost optimization, automation, and operational excellence. This comprehensive capability makes Infosys the partner of choice for global enterprises. As we shifting to becoming more AI focused, we are mindful about not losing sight of our responsibility to be human first. Everything we do is designed to earn the trust and respect of our stakeholders worldwide. At Infosys, our purpose, the value we bring to everyone around us, is to amplify human potential and create the next opportunity for people, businesses, and communities. We recruited over 15,000 college graduates in the year and ended the year with over 320,000 employees. 39% of our workforce are women employees. During the year, Infosys was recognized as a global top employer in 22 countries for best-in-class HR practices and processes. For the 5th consecutive year, we are also recognized as one of the world's most ethical companies by Ethisphere. We believe true progress is possible only when we serve the broader community, going beyond addressing the priorities of our clients and employees. We have our own blueprint for pioneering responsible business leadership in a rapidly changing world through being sustainable, socially responsible, and exemplary in governance. This is embodied in our environmental, social, and governance 2030 commitments. This year, we have made ambitious updates to the Infosys ESG vision for 2030. This refreshed commitment builds upon the strong vision and foundation that we had already established in 2020, encompassing critical areas include climate action, sustainable resource management, digital empowerment, workplace inclusivity, community development, employee wellness, and exemplary corporate governance. As part of our evolved aspirations, we now aim to achieve climate positive status in 2030, moving beyond net zero to sequester more carbon than we emit, while maintaining carbon neutrality through 2029. Our achievements today speak volumes to the depth of our commitment to ESG. For 6 consecutive years, including FY25, we have been carbon neutral while simultaneously expanding our positive environmental impact. Through 11 lake rejuvenation projects across India, we've increased water holding capacity by 4.3 billion liters. Our human capital development goals are equally transformative, extending digital skills to empower over 18 million people and enabling employment opportunities for more than 500,000 individuals. Our Tech for Good programs have empowered more than 1.25 million lives in e-governance, healthcare, and education, while our digital skilling initiatives have reached 13.3 million people. We have also become the first India-headquartered company to receive binding corporate rules approval from EU data protection authorities, underscoring our governance excellence. Through our community amplification efforts, we will continue to transform lives with technology for good, job creation, and comprehensive CSR initiatives. All of this will be underpinned by a commitment to leading data privacy standards and maintaining a position as an industry leader in information security practices. The world around us is shifting and changing at an unprecedented speed. One of the defining opportunities of our time is harnessing artificial intelligence to drive the next generation of enterprise, to reimagine the way we live and work to our benefit. We have been at the forefront of this transformation and are excited to bring our insights and expertise to our clients' journey. Our recognition as the fastest growing IT services brand over 5 years by Brand Finance, our position among the world's top 100 brands and among the most trusted brands in the US according to Cantor, reflects why leading global enterprises choose us as their AI transformation partner. I'd like to express a deep gratitude on behalf of the entire board to our dedicated employees, valued clients, visionary co-founders, and the governments of every region where we operate. Thank you for placing your trust in us and for your unwavering support. To our shareholders, your belief in our mission and your continued encouragement inspires us to strive for excellence every single day. Thank you all for being part of a continuing success story. I now request Salil, CEO and Managing Director, to address the shareholders.
Thanks, Nandan. Dear shareholders, welcome to the AGM event. I want to spend the next few minutes to share with you an update on where the company has been over the last financial year. The overall theme I want to talk about is leading in AI and cloud. At the start, we have seen that the overall year has shown us tremendous revenue growth. We've been able to grow the business by 4.2% year on year, with our large deals coming in at 11.6 billion and our clients greater than 100 million at a number of 39. This has shown a continuous growth for the company and a foundation which is building on growth for the future. Then as you look at the next operating performance, we see that our performance in terms of operating margin was very strong, and our performance in terms of cash generation was equally strong. In both those areas, we've been able to deliver at the highest levels that we could drive in terms of cash generation, with a free cash flow of $4.1 billion. On the next slide, we can look at the overall performance of the company in terms of our financials in rupee terms. Our total revenue in rupee terms grew at a level of 6.1%. Our operating profit grew at a level of 8.4%. Our operating cash flow was at a record increase of over 41%. Our net profit increased at 1.8%. Our basic EPS increasing at 1.8%, and our free cash flow increasing at over 44.8%. As we now look at the dividends that we were providing, if you look at the last 5 years, we have constantly been providing an increasing level of dividends each year. If you look at this year, with the recommended dividend by the board, we will be at an overall dividend rate of 43 per share, and each of the years it's been increasing in the past few years. Over the last 5 years, the company has returned to shareholders over 98,000 crores in terms of cash return. If you look at our balance sheet, we have a balance sheet which is extremely strong. Firstly, it's fully debt-free. Then it's a liquid balance sheet, and where we are every year adding to from our cash into building out the assets of the company for a long-term sustainable future. Then the biggest move we've had in this past year has been what we've done in artificial intelligence. So in AI, we are today working on 400 generative AI projects for our clients. Using AI technologies, we have generated 10 million lines of code, all done through different tools that we use within generative AI. We've also launched very exclusively and at great speed a whole capability around agents, and we have developed 200 agents already. Some of these agents are industry-based agents, and some of these agents are what we call horizontal or functional agents, and these agents are working with our clients to help them in their projects. We're already working on 30 agent-based AI engagements which are being deployed across different clients. And we have today 20,000 employees using GitHub Copilot for coding, one of the largest number of employees of any company around the world. We also recognized as a market leader by market analysts, leading in 9 generative AI studies across different analysts. There are several examples where we have deployed generative AI and AI into our clients. For example, with a large bank, we are using this for some of their financial processes like KYC, where 50% time reduction has been seen. With a large audit firm, agents are doing some of the pre-work and work on the audit. With a large auto company, agents are being used in customer service to improve that. In a large telco, generative AI is actually helping them to improve revenue growth. And in a tech company, generative AI has improved customer satisfaction by 24% on some elements of the customer service. Then, for making AI successful, there are 2 big components that are needed where Infosys is leading. So one of them is cloud, which is really becoming the infrastructure for everything in AI. So we had built several years ago Cobalt, which is all of our cloud capabilities. And here we see very strong demand for AI, which is essentially on the cloud. We are focusing on turnkey network transformation projects, migration, modernization, and also with an extreme focus on minimizing cost in these areas. We are also building the agents on cloud, on any of the cloud which are large public clouds. In their libraries, you can find agents from Infosys, and also which are custom agents with clients. And then getting all of this infrastructure ready for AI, leveraging the cloud. The second component of making AI successful is really the data capability. Data needs to become extremely robust, and many of our large clients are taking the first step of making their data within the enterprise, the architecture ready, so that that AI can be leveraged within the company. The data has become critical. Here we've made strong industry offerings already within the data area in retail, consumer products, insurance, in industrial, auto, aerospace, utilities. We are also working on enterprise data ready for AI, data for business transformation, and to build an overall AI economy using data. And then we are working on this from modernizing the data capability from legacy towards cloud-based and other structured and unstructured data architecture systems. Now, in the environment that we are in today, and what some of the points Nandan shared about it, it's very much focused from our clients on cost efficiency. And here we have a lot of strengths within Infosys. We have very good focus on automation, on efficiency, on lean, and also using AI for productivity improvement, which is one of the core elements of what our clients are looking for. In terms of how all this is put together, our delivery organization is probably the strongest delivery organization within the IT services industry, supporting all of our clients. We have one of the best delivery capability. We work on large and complex programs, and these are deep and also multi-service offerings where it's not just one capability, but many of them coming together. We could have some cloud, some cyber, some infrastructure, all coming together to support our global clients. And the foundation of this is our training capability that was built several years ago, where we have the best training capability in the industry, and all of our employees joining us from college go through that in the first several weeks that they're with the company. We continue with our leadership in digital, something we started several years ago, and that has become the foundation which is allowing us to become cloud first, AI first, and be strong in the data category. In terms of branding, we've done a lot of movement. Top 100 brand in the world, top 3 IT services brand, fastest growing IT services brand, #1 in analyst perception. And we can see in all of the events and all of the interactions with our clients, more and more we see we are becoming one of the more trusted brands in terms of technology and very innovative in terms of what we're doing with AI. This past year, we continued with our focus on small acquisitions in areas which we see good growth in, good client attention in. One of them was in energy consulting, which is based in the US, and one of them was in cybersecurity, which is a company based in Australia. And this builds upon the last few years where we've done several acquisitions which are now integrated, whether the acquisition is on engineering services, on Salesforce in Europe, in US, and also on some of the joint ventures that we've had some good success with over the last few years. Now, while we are doing all of this, we are very active in supporting what is going on across all the communities that we work in. Just in the last financial year, we have completed 200 projects. We've impacted over 1 crore people in India in a positive way with what we have called Springboard, which provides essentially free training on tech training. Over 9 million people have received this free learning all around the world. We have enhanced over 4 billion liter water capacity with restoring 11 lakes in a sustainable way. And over 28 lakh people have benefited from a variety of healthcare initiatives that Infosys supports. One of the biggest reasons why we do all of these things, both from a client side, industry side, technology side, delivery, is that we have a concept called One Infosys, where everything we do comes together for the benefit of the client to bring the best activities that are going on with respect to the client, whether it's in a different geography, in a different industry, or a different service line. We keep our clients foremost, and this One Infosys concept has helped us last year as well. With that, as I conclude, we had a good operational and cash performance, a strong leadership team, a very dedicated delivery organization, deep capabilities in AI, digital, cloud, and data, and many other areas, working as One Infosys, having the strong trust and support of our clients, which has led us to this sort of an outcome for the year. So thank you very much. And with that, I pass it back to Nandan.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Infosys and ED seeking explanation on Yuvraj Singh, Harbhajan Singh on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. Sources are telling NDTV Profit that the Metropolitan Stock Exchange of India is now charting a new strategy after the SEBI's new expiry day norms by venturing into the cash market segment. Sources added that the exchange already has all the right regulatory approvals in place and the move is expected to materialize in the next 2 to 3 months. Let me quickly go across to my colleague Charu for all of the details.
The Metropolitan Stock Exchange of India is eyeing cash market segment as per some sources. We know that the market regulator SEBI has recently changed its expiry day norms, restricting the expiry days to a bi-weekly phenomena, keeping only Tuesdays, Thursday as the expiry days. Now Tuesday has already been taken by NSE and Thursday has been taken by BSE, and MSCI has to share its expiry day with NSE, which might, as per some experts that NDTV Profit has spoken to, impact its plans for entering into equity derivatives with a boom. Now we also know that after a fresh funding and fresh revival plans in December last year, one of the most lucrative things about the exchange was the fact that it had hopes for using expiry day Friday as a separate expiry day for itself. However, with the new norms from the market regulator, this seems very unlikely, and that is why, to still hold more value for its investors and for itself as an institution, the exchange is looking into making developments towards the cash market segment. All the necessary approvals are already in place, and the developments could take 2 to 3 more months, and we'll have to see how the developments actually roll out.
Right, Charu, thanks for that, and stay with us because NSE has also filed 2 applications with SEBI to settle the long-standing co-location and dark fiber cases by offering to pay a total of 1,400 crore rupees, marking it the highest amount offered by any entity till date. Charu is at the NSE office. Charu, what are you picking up?
India's leading bourse, the National Stock Exchange, as per some sources, has filed for a settlement in its pending co-location and dark fiber cases with the market regulator Securities and Exchange Board of India. As per some people privy to the matter, we have also been told that this settlement amount could reach above 1300 crore rupees, often termed as an amount, as per some previous reports as well, to be the highest settlement amount ever offered by an entity to the market regulator. Now this would be something that will clear out a big obstacle for the leading boards, making the path more clear for its listing dream that has been in the pipeline since the year 2016. We were also earlier told that other obstacles, for example, the clearing corporation norms or any other issue is also on its way to get resolved. In fact, the SEBI chairperson Tuhin Kanta Pandey in an event over the weekend also mentioned that there are no real pending obstacles and the IPO is on its way. So let's see how the further developments roll out. Also, this is the settlement amount that has been offered. It is not something that has been approved as of now. Once approved, it would clear out the path for the IPO in a bigger way. So let's see how the developments actually take place further.
Meanwhile, electricity derivatives will allow energy users to hedge the price risk, says Harish Ahuja, the head of sustainability, carbon and power markets at NSE. Earlier this month, the SEBI had approved the launch of monthly electricity derivative contracts by NSE, and this move was made to encourage capital investments across the electricity value chain. While speaking to NDTV Profit, Ahuja spoke about the benefits of investing and also highlighted the risk of it.
For all the users who are consuming a fixed amount of electricity in terms of their kilowatt, this particular message is all the industries, all the SMEs, all the customers, high-end customers which have got a load of 70 kilowatt. At this stage, they are using the electricity sold to them by the utilities, DISCOMs. And there is no control on that prices by them. But I think monthly base load future may offer them opportunity to hedge their price risk or take a call on their own prices. Here, any person having load above 70 kilowatt is a natural hedger. They can come and take their trades here and kind of lock their prices for months to come. And that brings some saving also. But being a future options category, it has their own risk and they have to take a lot of learnings before they actually trade here.
So again, one more thing. So as far as our information goes, only MCX and NSE are the two players coming into this. So what would you say will be your advantage over MCX or any other player who might eventually enter?
See, this is a very big product in terms of its reach, in terms of volume we are expecting, and in terms of its transformation impact on the very power sector reform. One exchange, two exchange doesn't matter here. What matters is how you're approaching this commodity, And here NSE has a long-term view. This is first because in 2008, we had our own exchange, Power Exchange of India Limited. So our understanding of spot market is quite deep. And any derivative product get their value from its underlying. And I think being PXL with us, the understanding and the vision we have around this very product is slightly unique. Secondly, we have got National Clearing Corporation, which is a very, very stable, aggregated and well-performing clearing corporation. And here the settlement and, margining system will be worked by them. So I think that also has a USP for us. And third, very important, the way we like to roll out other products. I think we are very well prepared for launching quarterly, annually and CFD products. I think this launch sequence and the calibrated way we launch this will give us a USP.
And let's give you now some updates on the IPOs and fresh listings today. To start with HDB Financial Services IPO, the largest of the year so far, open for subscription. The 12,500 crore HDB IPO is among the largest NBFC issues in recent times and is a subsidiary of HDFC Bank. It's also the fifth biggest in terms of issue size in the last 20 years. So the issue will close for subscription on Friday, that's June 27th. And most of the analysts who have covered the IPO have issued a subscribe recommendation to the issue, citing growth prospects and the HDFC pedigree. Next up, let's take a look at Samhab Steel Tubes IPO that opened for subscription as well. The total issue size is 540 crores with the price band set between 77 to 82 rupees a piece. The subscription window will be open until June 27th as well, post which it will tentatively list on the exchanges on July the 2nd. Now, based out of Chhattisgarh, this company is a manufacturer of steel pipes and plans to use 390 crore from the net fresh issue to pay back a certain portion of its debt. Now, the IPO was subscribed 22% as of 3:30 p.m. on day one. And shares of Aris Infra Solutions made a muted debut on the stock exchanges. They listed at 7% discount to its issue price at 222 rupees on the NSE, while on the BSE it listed at 209 rupees, marking a cut of over 5%. The 500 crore IPO that was subscribed 2.65 times within its 3 days of public bidding. Aris Infra Solutions is a B2B technology-enabled company focusing on simplifying and digitizing the procurement process for construction materials. And now let's take a look at a very interesting Knight Frank report. The report says that Mumbai's home affordability index has dipped below 50% for the first time in history. This means that Mumbai homes are now more affordable than they were 15 years ago. But what does that mean in terms of accessibility? Anushi joins in with more on the report.
Now, it's an interesting outlook that we are seeing for the Mumbai real estate market. And what is it? This is something that Knight Frank has decoded. Now, according to Knight Frank, Mumbai has emerged as the least affordable city with an affordability level of 48%. But this is not the main point that we are focusing on. The main time is that despite the 48% of a mark that we are seeing in affordability index and it being the most expensive market, it is the first time in history that Mumbai is below the threshold level of 50%. In fact, Mumbai is now believed to be more affordable due to the reduced home loan rates along with better infrastructure that we are looking as compared to the past. Now, this is a surprising set of data that we are focusing on. But how does Knight Frank measure this home affordability index? So this implies that proportion of income of a household required to fund EMI of a housing unit. So a 40% of an affordability index implies that households in that city need to spend 40% of their income to fund the EMI of housing loan for that unit. EMI to income ratio of over 50% is considered unaffordable, which was the mark that we had seen for the Mumbai real estate market for the last couple of years. In fact, if we go back 10 years or so before as well, this number was once at above 90% levels. In other key highlights also, if you are seeing that the overall home purchase affordability had improved in H1 2025 on these interest rate cuts of around 100 basis points, and in house affordability increased across 7 of the 8 cities, with the only exception being NCR, wherein they had recorded a steep increase in where the residential price increases are. Ahmedabad, Pune and Kolkata are still considered the most affordable markets. So it's an interesting set of data that we are looking at, and Mumbai mainly on the focal point.
But it's not just Mumbai. Real estate prices are skyrocketing in Delhi NCR as well, and more specifically in Gurugram. But who is actually buying these luxurious flats, and are they being sold out on day one as developers claim? We discussed this on The Big Question this evening at 6 and 9 p.m. only on NDTV Profit, so don't forget to tune in.
When we are talking affordability index, it is something where the ability of masses to buy a house comes in. You know, because the person who's buying a 700 or 800 crore worth of an apartment or a 200, 300 crore apartment is not really chasing the home loan to actually fund that purchase. It's actually affordability is coming in because largely that segment which depends wholly on housing loan to buy that apartment is now feeling much better off. And also let's not forget the Pradhan Mantri Awas Yojana, which came in October of 2024. Is also coming in. So there are these two factors which are bringing affordability into all over India market, and more so in Mumbai, because this was one market which used to be the most unaffordable about 15 years back, and gradually is becoming actually more and more affordable with every year passing.
And moving on, there's been massive action by the Enforcement Directorate in a 988 crore rupee bank fraud case linked to Shilpi Cables Technologies. Raids were carried out at 10 locations in Delhi NCR and in Ludhiana. The case is based on a CBI FIR which flagged a fraud with IDBI Bank and others. Company promoter Manish Goyal is accused of illegally sending bank loans abroad using fake transactions. Now, the ED suspects money laundering, misuse of letters of credit and fake investments through shell companies. And that's a wrap on Profit 360. Stay tuned to NDTV Profit for all of the news and updates.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, on this program, we talk about everything related to your money, whether it is investments that you make or how to manage your taxes, how to account for your expenses, all of that. And sometimes we talk about products that are currently available, and sometimes we talk about products that have not worked. And today is one of those days. Mukesh Bubna is joining me. He's the founder and chief executive officer of Monexo Fintech, which is a peer-to-peer player. And if you're wondering what that means, let me first ask Mukesh to explain that to you. What is peer-to-peer lending? And then we'll get into the details as to what has occurred over the last few years.
Sure. Peer-to-peer lending, as it says, or the word peer can also mean a person. And we've always seen people lend to each other. Office colleague lends money to his other office colleague. Friends lend to each other. People in business lend to each other. But this word peer-to-peer lending, in true sense today, what it represents is the digital lending where people come together and lend to an individual. So imagine Mr. A wants to borrow 2 lakh rupees and he comes on a digital platform, gives his detail, the platform does the screening, grading of the borrower, and there are hundreds of lenders from A1 to A100 who are funding as little as 1,000, 2,000 rupees to Mr. A, who's the borrower. That's what peer-to-peer lending is currently.
Okay. So, would it be fair to say, Mukesh, that and in the run-up to this, I did speak to you and you explained that peer-to-peer lending in India started quite a while back, close to a decade back. And yes. The initial run or the boom that you saw in peer-to-peer a few years back was because people were seeking opportunities to earn more in the credit space, in the fixed income space, so to speak, because they were earning very attractive rate of interest because of the people that were borrowing. Is that fair?
Yes. See, India recently also has dropped the repo rate by another 50 basis point, and we've seen a large public sector bank dropping the saving account interest rate and the fixed deposit interest rate, much below the inflation rate, if you may say that word. So people will move to more and more investment products, whether equities, fixed deposits, and peer-to-peer lending sits in a, I wouldn't call it fixed return, but yes, a debt product which can give you a better yield than your inflation.
Okay, but some of that is what led to the problems, because there were players, Mukesh, in the peer-to-peer space that were not necessarily following all of the rules. And so the Reserve Bank of India had to come in and change the regulations. And as a result of which, and this is something that you explained to me, but I'd love for you to explain it to my viewers, because some of them might have tested the waters in peer-to-peer and they're probably wondering why it's not working anymore. So what changed? Why did it change? And why is it dissipated?
Sure. So a lot of questions. So let me give you a little summary starting from international level and very quickly bringing to the Indian shores. Peer-to-peer lending started way back in 2004 in UK by a company called Zopa, which today is a digital bank. Very quickly, it got picked up in US by 2 young entrepreneurs, one from somebody called Lending Club and Prosper. They got into their challenges, but again, they came out, and the regulators are different. In UK, it's central bank, and in US, it's SEC. Coming to our shores, India, in 2014, there was some consultation paper where SEBI said because it's belonging to lending, even though it's crowdfunding, it would not regulate and it would request RBI to regulate it. In 2016, there was a draft regulation, guidelines for consultation paper. And in 2017, RBI came out with a full guideline and who can operate and what is the capital requirement. At that time, RBI specified very clearly that no peer-to-peer lending companies can take deposits. They can only act like a platform. They have to be very transparent They can charge fees for providing all the services to the borrowers and to the lenders, but they cannot keep a spread like an NBFC or a bank does. So there was a clear prohibition of selling like a fixed deposit. But you would remember COVID came early 2020 and it lasted for 2 years. So it was a very fledgling industry at 2020 when COVID came. And surely the pressures of COVID, a startup world which needs to grow fast, created an environment where few players felt that they can create a product which mimics like a fixed deposit that gives a return which is fixed, like 8-10%, depending on the tenure you give them the money, 3, 6, 9 months. 2, they mimic like a liquid product, like liquid mutual fund. So you can give the money on Monday, take it out on Wednesday, and you can earn interest for 2 days at 8%, which was much better than a liquid fund also. Number 3, they mimic like a mutual fund, where the lenders did not have a say in what loans their money was being assigned. So this continued through the COVID period, and till August 2024, RBI reiterated these are wrong practices. It fined a lot of players also, and it added one more regulation, which was the fund which is kept in the escrow account cannot be reinvested even if the lender wants to do so. So the money has to move from the escrow account to the lender's bank account. So to explain, let's assume a platform collects 20 repayments from borrowers today, and Mr. A is the lender. That money has to be sent out to Mr. A's bank account, say HDFC or ICICI or Axis, within 24 hours of money hitting the escrow account. Now, this puts a very onerous task on the platform. It increases the cost of operation for the platform. It creates uncertainties for the platform whether Mr. A, who's the lender, will send the money back so that they can originate more borrowers. And finally, for the lender, it becomes a very onerous task to track his funds. And he gets the funds in like 5 rupees, 2 rupees, 10 rupees, 25 rupees, which breaks his capital. So it becomes a very unviable product for a lender too, or investor.
Yeah, okay, so you summed it up. And so as a result, Mukesh, can you give me a sense of how large the industry was before these regulations came into force, and where it stands right now, and what the current picture is for the industry?
Sure. So give or take, RBI has issued about 28 to 30 odd licenses till date from 2017 when it came out with the guideline. Operational before COVID must be around 10 to 12. During COVID period itself, 2 to 3 platforms closed down. And after August 2024, where this guideline to remit the money back from the escrow account to the lender account on T+1 has come through, and all the fines have been levied to most of the platforms, most players have paused the business except 1 or 2. The reason they have paused the business is what I explained in the previous question. They don't believe it's worth the time. Number 2 is they have a prior challenge which they need to deal with, where RBI has remandated that, with example I'll explain. In mutual fund, your portfolio and my portfolio, if we both invest 1 lakh rupees on the same day, it depends on the mutual fund investment committee or the fund manager, what does he buy? And we own the same proportion of shares which has been bought in that fund. But RBI said in P2P lending, which was said as original regulation also, that Alex's portfolio will be different, Mukesh's portfolio could be different, and that means their losses will be different and returns will be different. So RBI has mandated that that should have been done by November 2024 and reported back to the regulator. Those platforms are struggling with some of these issues today, and most of us, including us, we have paused the business because it does not make commercial sense to continue.
Okay, so any words of advice to those that are still invested in these platforms and are waiting for their money back? There is no question about them getting their money back, right, Mukesh?
Not necessarily. So all the platforms are collecting money from the borrowers. And today, as per RBI regulation, they are supposed to remit that money on T+1 basis. Now, I am not sure who's compliant, who's not compliant. That's a role which RBI has to perform. But for our platform, we make sure whatever money we get from the borrowers, it is settled to the lender's account on T+1 day from the day the regulation came, which is August 2024. So almost 10 months we've been doing so.
Got it. Mukesh, thanks so much for joining me today and for giving us the context that you did.
Most welcome, Alex. It's been always a pleasure to be on your show.
All right, so that's the perspective that you need, and this is going to form somewhat of a base for the next part of this conversation. And joining me now is Nisreen Mamaji, who is the founder of MoneyWorks. Nisreen, thanks so much for taking the time. And I don't know if you heard parts of that conversation. I was basically talking to a peer-to-peer player, which is essentially a platform that facilitates peer-to-peer. And we were discussing the fact that regulations have changed, and as a result of which not a lot of people are now venturing out and lending through peer-to-peer. But the reason I wanted to talk about this is that people are venturing out to seek alternatives to fixed deposits because interest rates have fallen. What are the alternatives apart from peer-to-peer is the first question that I have for you.
Sure. So, basically investors can look at, a lot of debt mutual funds, investors who are risk averse also have an appetite, for some amount of volatility. They can look for, hybrid funds, which have maybe 15% or 20% towards equity allocation. So let's, answer the query about the fixed deposit investors. So today, the fixed deposit investors are getting, say, about 6.5% in a fixed deposit. In a debt fund, maybe they will get between 6 to 8%. So, post-tax, that doesn't look like a very, very attractive return. We can also, I'll just list out a few options that they would be having. So one is a target maturity fund that you can be looking at. And in the target maturity fund, there is an investment in government securities, in SDLs and PSU bonds. So they're, and they're locked in for a specific time frame. So you can select the tenure of your choice. So for example, a 1-year target maturity fund would be yielding, say, around at this time about 10.4%, which is a Bharat bond FOF. And that, target maturity will end in April 2030. So this is just as an example. And if you're going for a 3-year fund, it would be about 8.8%. So, these are the kind of funds which have possibly a lower expense and, investors can be looking at it. Kotak and Axis also have some of these target maturity funds right now, which range about 9.2 to 9.3%. That would be the 1-year, coupon rates. So just giving you an idea, 3 years could go up to about 8%. Another alternative for a risk-averse investor would be, say, a dynamic bond fund, where the flexibility is with the fund manager to increase and decrease the duration. So, for example, right now in the falling interest rate scenario, a dynamic bond fund such as the ICICI Prudential All Seasons Bond Fund or the Kotak Dynamic Bond Fund also would make sense. But just to put it in perspective, the returns on this kind of a fund, like the yield to maturity on the All Seasons Bond Fund of ICICI is about 7.3%, and the modified duration is about 2.66 years. So that means, if the interest rates go down by 1%, it would add about 2.5% to your, yield. So this is also an option, which is about currently YTM at around 7%. Then you can also be looking at, say, a medium duration fund or a short duration fund. So some of these examples are, SBI Magnum Medium Duration Fund or the HDFC Medium Term Fund. Now, these have a tenure of about 3 to 5 years, and they would also benefit from the falling interest rate scenario and keep the volatility low. So that's another option. And also you can be looking at, say, banking and PSU funds. So we have Axis Banking and PSU Debt Fund and the ICICI Prudential Banking and PSU Debt Fund. Here again, the yield to maturity is about 6.8%. And the modified duration is 2.6 years. So, you will be yielding about 8.5–9% if the interest rates fall at the end of a year. So these are some of the options that risk-averse investor who is investing in fixed deposit but wants a little bit of diversification or to benefit from the falling interest rate scenario, he or she can invest in any of these options.
Nisreen, so you've stressed that point, and I think you've laid out the options and a whole host of options for those that are risk averse. But the point that I want to make here is that a lot of people tend to gravitate towards products that advocate or that promise amazing returns, or so not necessarily things that are illegal, but I'm saying something like a single A bond. Okay, so something that you can buy on a bond platform where you have a small corporate, a small company that is issuing debt, and you buy that bond and think that, oh, you know what, it's offering me 12% or a BBB plus. And here, in case you're not familiar with these terminologies that I'm using, I'm effectively talking about the credit rating of a company, which you can look at as the equivalent of your credit score. So for example, if your credit score is less than 600, chances are that the bank is not going to give you the best possible rate. And if the going rate for a home loan is 7.5% with a 600 score, if you go to a bank, they'll probably give you something at 8.5, maybe over that. So the point is that if you go to a company with a lower rating, then you're going to get interest of 11%. Nisreen, the question is, what are the riskier options first?
So, there are lower rated corporate bonds, as you rightly said, Alex, which could be, say, BBB or below, or, AA or A and below. AA is okay, but like A, BBB, those would be, offering higher yield, obviously, because of the higher credit risk. Okay. So investors must understand that they are being paid for this, taking this higher risk. And safety depends on, obviously the fundamentals, the credit history, and the sector. So just by chasing higher yields without a proper, credit assessment can lead obviously to a capital loss. Now, for example, right now, we do have, say, SCB Saigyo India Private Limited, 2028, which is a BBB stable rating by CARE. The YTM on that is 14%, and the minimum investment is about 1 crore. Or we have 12.75% Satin Credit Care Network Limited. The tenure is till 2029. It is listed A by ICRA, and the YTM will be 11.25%, and the investable amount is in a multiple of 10 lakhs. So the higher you go on your risk-taking ability, obviously, you will be offered a higher yield. But basically, what should we be doing? Because some of these companies that you might invest in might, you might run a risk of default. That means they may not even be able to pay you back your capital. Forget about the interest. So you have to be very careful when you select a product like this, or you're just chasing the returns, because you may not even be confident of getting your money back, and you may not even be confident of getting your interest back. So be very careful when you select a fund or a corporate bond which is giving you a very high return, because obviously you're then in this case you're chasing the higher risk. Also, you'll have to look at the post-tax return. So if you're looking at, the options of a corporate bond will be, you can either go for it directly, like in some of the bonds that I mentioned earlier, or you can take the mutual fund route. So if you take the mutual fund route, and if you take, a fund with a very, very high credit, then you would be slightly safer rather than going for a fund with, a lower credit rating. And you obviously have to ask
about that though, Nisreen. I want to ask about that. mutual fund space. First of all, let's cover the tax treatment of bonds and the interest that you earn through a coupon. They can be either semi-annual or annual. Usually they're annual. So what is the kind of interest, or not interest, but what is the kind of tax that you pay on that interest?
So if you're going in directly, then it would be added to your income, and it would be taxed under income from other sources. So you would be paying your marginal tax rate,
which is your slab rate.
Which is your slab rate, exactly.
Yeah. Now let's talk about credit risk funds, because a lot of investors came into the fold, Nisreen, post 2021, and ILFS happened before that. The crisis basically hit these funds, which are funds that are meant to take credit risk. There are requirements that they have a certain number of their holdings below the highest rated paper. But because of that incident, it's like you touch a hot stove and you don't want to touch it again. So as a result of which, a lot of fund managers are risk averse. And a lot of these credit risk funds, I have found, don't venture as far as BBB. So are they really getting that kind of risk reward if they go to credit risk?
So, the question is, basically now here you have a filter. When you're going through the debt mutual fund, then there's obviously the filter of the fund manager and the analyst who will select, certain bonds based on their credit rating. Now, if you go directly, then you don't have that filter, and you will just get very attracted to the higher return, and maybe, burn your fingers later, because as you rightly said, it's, it's very attractive, the higher interest rates. And if you are in the lower income tax brackets, for example, if you're a 10% income tax payer, then, it's going to be very attractive for you, because you're not going to be paying that much of tax. But what you have to be ensuring is that, you have to make sure that the default risk or the interest rate risk doesn't apply to you, because if you're chasing the return, then you may not, even your capital is at risk. Now, when the debt mutual fund is concerned, as I said, there is a filter. The fund manager will be, especially after the ILFS incident, be very careful in investing, also with the SEBI mandates and the regulation. You won't get, as per the ratings, you won't be investing in very, very poor quality bonds. So thereby you are protected. And as an investor, also you should be checking the credit, ratings of these credit risk funds before you invest. So I think it's really not meant for a retail investor, but maybe a very sophisticated and mature investor could be looking at credit risk funds as a small portion of the entire portfolio. So when you're making your debt portfolio, ensure that you don't go beyond 5 to 10%, in order to protect the downside.
Okay. So if I had a question about that.
You're not overexposed. Yeah.
I had a question about that, because, and the reason why I'm keeping this to the end, because now, assuming that you've, and I'm speaking to you, viewer, if you've stayed to this point, then you want a conclusion. And so, Nisreen, what I'm asking for is a conclusion. We've spoken about risk-averse investors, and we've spoken about a few risky options available that perhaps give you a better return. But the question is, in a fixed income strategy or a debt strategy, which you should have in your portfolio, should you be opting for a loss of capital, or should return maximization even come into the picture, or should you be more focused on conservation of capital?
So very, very rightly said, a risk, an investor who's investing in debt basically is looking at stability. You're also looking at possibly some amount of income generation. So you're not an investor in the first place who's chasing the returns, okay? You're not a greedy investor. You're possibly looking for FD or a little bit of FD plus returns. Because here you're basically looking at stability, low volatility, you might be even a retiree. So what you're looking at it as, income generation, and you don't want to push the envelope as far as the returns go. So if you are an investor investing in debt, then that is what, that is the kind of investor you are, okay? Most important is that you're looking at, keeping your capital safe. You're looking at liquidity, you're looking at stability, and you certainly might be looking at income generation. So in this case, especially when the equity markets are being very volatile, the fixed income instruments like, say, government bonds are obviously considered safer than stock. And also it will create a predictable income stream for you. So you can be looking at, coupon payments, which are giving you regular income. And you shouldn't be taking any kind of, because if you are going to take a risk, then I would suggest that you take an equity risk. Why are you taking a risk in debt in the first place? So don't go in for credit risk funds possibly. Also, don't go in for direct, investing in bonds, which are giving you a very high return, because you will be at risk for default of the principal amount itself.
Yeah.
And also keep a very balanced portfolio. So, as I said earlier, don't go beyond 5% in a credit risk fund in order to chase the returns. But your entire portfolio could be looking more like a corporate bond and a medium-term investment. All seasons bond fund, say a dynamic fund, a dynamic investment if you're a debt investor. So make sure that you're 20 to 25% in these categories, and maybe 5% towards a credit risk portfolio.
Yeah, if at all you want to take that exposure, you could of course look at hybrid funds which have that fixed income exposure as well. But Nisreen, thanks so much for joining me today. Important conversation to have.
Thank you. Thank you for having me, Alex.
All right, that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in. This is NDTV Profit.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down. Cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered. The big question.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
The markets move fast.
And so should your portfolio. Expert insights,
Real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live.
This, as you know, a collaborative human space mission run by Axiom, NASA and our very own ISRO. In fact, Shubhanshu Shukla is representing ISRO on that mission. There are 4 crew members on board. The commander is Peggy Whitson. She's the director of human spaceflight for Axiom with 675 days of space experience. The pilot, as you know, is our very own Shubhanshu Shukla. He's an Indian Air Force pilot, an astronaut with ISRO, and he's going to be fundamental in India's journey to space, India's own journey to space through the Gaganyaan mission and everything else that ISRO is working on. There are 2 mission specialists on board. One of them is Slavoj Wisniewski, and he's of Poland, and you've also got Tibor Kapu of Hungary. What a progress that rocket is taking. It's the Dragon, of course, and it's on its way to the International Space Station. Now, once they reach space, as I point out, they will make it to ISS, which is the International Space Station, and they will spend as many as 14 days there conducting research on behalf of several members of the scientific community. There will be 60 research projects that are conducted. Remember, this is a rocket flight that is taken off after multiple delays. Everything had to be absolutely right, and this is the difference between the launch of a commercial satellite or anything else that is not crewed by humans into space and a mission that is run by humans. When there are humans on board, everything needs to be absolutely perfect. You need to have every element, and this is complicated technology. That is complicated technology involved, of course, and there will be, as you know, if you watch some of these films in the past, detachment of the rocket, of certain portions of the rocket. There you can see that detachment of certain portions of the rocket as it makes its way into space. And ultimately, once it does make its way into the rarer parts of the atmosphere, remember, this is going to be a low orbit mission. And so it will at some point move beyond the gravitational pull of the Earth, and it will start orbiting in a low orbit in India. And by the way, we're going to be speaking to several people over the course of this next half an hour, just to give you a sense of why this is so important. We're going to be speaking to Dr. Amitabh Ghosh, who is NASA Mars scientist, and also he's a planetary scientist. We've got Dr. Pavan Goenka, who's the chairman of InSpace, which is India's very own space program. And we've also got Pavan Kumar Chandana, who's the co-founder and chief executive officer of Skyroot Aerospace. Those live visuals tell you a story, don't they? You may not understand everything that is going on, but they are momentous, to say the very least. The entire globe looking upwards and looking at these visuals, and of course this is part of the process that will take Axiom 4 to the International Space Station. Those are the parents of Shubhanshu Shukla, who are watching this live, and everybody's got their fingers crossed. Oh, so you have visuals from inside the rocket as well, and everybody's watching with fingers crossed at this juncture. Those are live visuals, of course, coming through from the rocket, the 4 astronauts that are making their way all the way up to beyond, in fact, the gravitational pull of the Earth, and they will eventually make their way to the International Space Station. It's not a journey that's going to be completed very quickly. Of course, it's going to take several hours. 28 hours is what is expected to be taken for the crew of Axiom 4 to make their way to the International Space Station. And of course, once they make their way to the ISS, there will be multiple research projects that they will undertake on behalf of several countries from around the world, not least of which from India. There will be at least 60 research projects that they will take up, and there's an interesting one that even studies diabetes, believe it or not, but the rest of the projects are going to be talking about or going to be studying space related research. Some of those projects are ISRO's very own projects, and the learnings from this mission are going to be absolutely crucial in the Gaganyaan project, which aims to take our own astronauts into space. But joining me now is Dr. Amitabh Ghosh, who, as I pointed out to you earlier, is the NASA Mars scientist. Thank you so much, Dr. Ghosh, for taking the time. The question that I'm asking is, why is Axiom 4 such a big deal, and why is there so much focus on it right now?
Well, there's three interesting things. There are 3 countries which are sending the second astronaut to space. So, and India is one of them. And I think it's even more exciting for India is because our astronaut will have their own ride, which is Gaganyaan, a year or two back. So, it's like, it's different if you're driving a friend's car, but it's different if you're driving a friend's car and you're buying your own car the next year. So there's so many learnings that our astronaut could, Shubhranshu Shukla could do in that quest, which will affect his own journey a couple of years in India's own spacecraft.
Yeah, I mean, it's taken a lot of time for the second Indian to make that journey to space, and so therefore it's very important. And you pointed out Gaganyaan, Dr. Ghosh. Let's talk about why this is so important in the context of India's own dreams of having astronauts in space and for its own mission to space. What will be done on this mission that will be a precursor to that one?
So I think, just think maybe 500 years back when the continents were being discovered. And so there were a few countries which did this, which went forward and discovered these continents, and the world became a bigger place. So now we are again at that corner where human spaceflight will make our world a bigger place. Very soon, maybe in 20 years, certainly in your lifetime and my lifetime, people will be landing on the moon. And maybe in our children's lifetime, they will start having bases on the moon. So our world is going to increase. And so there are few countries which are going to partake in this journey, the countries that have that capability. And India is going to be one of them, which is huge. And so we don't really think of it in this terms. Most countries in the world, and there are maybe 200 plus countries, right? They don't have the capability of spaceflight, robotic spaceflight, leave alone human spaceflight. So it's a huge deal. So 50 years from now, when there will be a base on the moon, or there'll be journeys maybe 100 years from now to Mars, there will be a few countries who will be part of that club. And so India will be one of them. So that's what is so very exciting and significant.
So Dr. Ghosh, to that end, let me ask you this. Why is it that there are so many satellites, so many so many flights into space by rockets that are not crewed by humans, so non-human missions, if you can call it that, and there are so few human missions? Is it a very different technology? Is it the cost involved? And so from that perspective, with these missions that are so close to each other, do we see more missions go up?
No. Okay, so you have asked a very good question. So imagine you were going to space compared to, say, a rover going to space to Mars, right? So if you go to space, then we have to be thinking of the pressure of the vehicle, the temperature of the vehicle, whether you have water, whether you have other facilities, you have meals. So you have to have a foolproof system, subsystem, engineering system, the power subsystem, the whatever is keeping the oxygen levels up. And then you have to think of redundancies. What if the power system fails? What is your plan then? So these things make the human missions much more engineering-wise rigorous, and sometimes maybe 4 to 10 times more expensive. So you cannot take a risk if the human is flying. You can perhaps take a risk if there's only a robot, if there's only a rover going to Mars or the moon. So that is the reason. And why do we have more non-human missions? Because most of the missions are like to put a communication satellite in orbit, to put Starlink satellites in orbit. So the motive here is to really has a different goal. It's not for humans to go and do experiments in space. So there are more demand for that, and there's less demand for humans going to space station, right?
Dr. Ghosh, finally, you spoke about those experiments, and there are several, and you pointed out at the start of this conversation, there's going to be a collaborative mission, and each individual and each part of that crew is going to carry out experiments once they get to the International Space Station. Can you talk about why that is important? What kind of experiments are these?
Okay, I will answer a different question. Since you're a business channel, I will answer a different question. So we are at the cusp of space tourism happening. Okay, so we are at this, if you think of commercial space flight, this happened in the early 1900s, right? Very few people were in the business. The Tatas were in the business, Henry Ford was in the business, and he went bankrupt. People did not want to fly. People didn't think this was feasible. People thought, who would want to go to another continent? So now we are in this stage where Elon Musk's company has reduced the cost of spaceflight by 95%. So suddenly a cost to go to Mars is no longer astronomical. It's probably the cost of maybe $100,000 to $200,000, which you can afford in a lifetime. So we are sitting in this sector, which can be $1 trillion business in 10 to 20 years. And I think we are at this crossroads now. So people are questioning, people are saying that, well, why do this? Then if you notice, ISRO, NASA, all these are taxpayer funded entities. So they cannot do this forever. So at some point, the private sector has to come in, and they are coming in. And so you have businessmen like Jeff Bezos trying to set up a base on the moon, businessmen like Elon Musk trying to lower the cost of space travel. So if you think of in a business perspective, nobody would have said, for example, SpaceX, the valuation is now $100 billion. If you look at 20 years back, SpaceX was just starting out. It was out of a garage for almost, right. And no profits. And look what has happened. And this is just the tip of the iceberg. So we are looking at a very different journey, and maybe even a sector opening up, which would be space tourism.
Okay, so and on that point, then I wanted to ask you about that. But the missions that have gone, not missions, I shouldn't call them that, but the flights that have gone, almost flights of fantasy. You have suborbital flights that have taken place. What we're talking about, Axiom 4, is a low orbit mission. So do you think that private sector, SpaceX, etc., will soon have low orbit missions?
No. See, I think this is my personal opinion. I think low orbit missions will die out. Low orbit missions are 15 minutes or 10 minutes into space, and they cost like, I don't know, $200,000 or something like that. It's not interesting enough. I don't think, if you go to a ride in Disney World, it's 20 minutes, it's okay. But this is too much hassle just to go 40 miles into space and then come down. See, what's happening to Axiom 4 is what it is, how it should be. You go to space for a few days, You stay there, you do some things in space, and then you come back. Or you go to the moon and you stay a few days and you come back. So I think that is the sector which would probably in the long haul survive.
Okay, last question. Do you think that there could be an Indian company, Dr. Ghosh, that stands up to the likes of SpaceX, that is an equivalent of SpaceX, a private company at that?
Yes. So now you're talking business. So you have to think, if there are adequate number of Indians who will buy their services, then there will be an Indian company. So people go crazy that why is an Indian company doing products? Why is it not a Silicon Valley company? The markets sit in the West. If India had the market, then of course an Indian company would be able to do this. But if the markets lie in the West, if that's where people are buying, then I think it's harder. And then of course you cannot make in India. It's more complicated because of ITAR. It's the arms. This is the US technology control laws, right? So I think there are things that can happen, but one basic thing is, why do all these product companies, why do Apple launch in the US? Because the market is there. If Apple was to just service the Indian market, or an Indian company like Apple was to evolve, the question is whether the R&D cost would be offset by the revenue that is generated out of India. I think that's the bottom line.
Okay, Dr. Ghosh, thanks so much for joining us today, and pleasure having you on the program. You know, as those visuals were playing out on the screen, one of the things that struck me was the stark difference. When you look at those touchscreen panels and you look at those astronauts sitting in that rocket heading into space, the stark difference from what Rakesh Sharma would have felt as many as 41 years back. Space technology has changed so dramatically in that time frame. And really, so much of this is related to the success of that technology, of what even Indian companies are doing. So let's give you some perspective on what Indian manufacturers take from this event. Joining me now is Pawan Kumar Chandana, who's the co-founder and chief executive officer of Skyroot Aerospace. Pawan, thanks so much as always for taking the time. And let me ask you, as an Indian manufacturer, what do you take from this?
The most inspiring event of the year, I would say. In fact, we were very proud that when India landed on the moon, south side of the moon, I think this is as historic as it, considering that after 41 years, an Indian is going to space, and for the first time ever, somebody is going to the space station. And an Indian, our own Indian astronaut is going to the International Space Station. So I think this is a historic moment, and it's going to inspire generations ahead. And to me personally, it's like a very inspiring moment, and it also shows the leap India is taking in the space sector. From starting from the early days where rockets were transported on cycles to now we have landed on the moon, and now we are sending our own astronauts to space.
And your own journey has been pretty much like what we're talking about, the frenetic pace of increase. It's been a takeoff. You're involved with projects with ISRO, you're working on Gaganyaan as well, and all of this, I spoke to other people in the run-up to this, and they've all said that this is a precursor to Gaganyaan. So it's exciting times for you as a company as well. Talk to me about that ecosystem and where you stand. What are you doing, and why is this exciting?
Yeah, so as Skyroot, we are a leading space startup in India, and we have launched India's first private rocket to space. That was in 2022, and we are just a few months away from our launching of commercial satellites to orbit. So very few companies in the world are launching commercial satellites to orbit, and Skyroot will be one of them. And that shows the ecosystem which we are part of. Like, for example, India has been a spacefaring nation since the 1960s. We have the ecosystem, we have the launch pads, we have the talent, we have the manufacturers. We have a great ecosystem around us in which we are leveraging all that and going very quick and building rockets from India for the world for the commercial launch of satellites. So that's what we are doing. And in fact, for example,